Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. There are the futures, pretty quiet. This morning, NASDAQ up a little. The World Economic Forum, just out with its Global Risks Report for 2024, says election disruption from artificial intelligence poses the biggest global risk. It cites a busy year of global elections, including this weekend's vote in Taiwan and upcoming elections in the U.S., India, Russia, South Africa, and Mexico. And global leaders are set to meet next week in Davos, Switzerland. Literally global leaders and Squawk Box leaders or will be there too. We will bring you full coverage of the summit starting Tuesday at 6 a.m. Eastern.
Okay, meantime, Republican lead negotiators on the supplemental funding deal, Senator James Lankford, is not as optimistic as he was earlier in the week. Not sure he should have been optimistic earlier in the week, but the senator now says he does not expect to have a deal announcement soon. Joining us right now to talk about it, Heidi Heitkamp, former U.S. Senator and director of the University of Chicago's Institute of Politics. Do you agree with my side? I didn't even understand why he was optimistic beforehand.
What would it look like if you were doing negotiations and said, none of this is going to happen, we're just fooling around here? You know,
that's what they were doing. They were fooling around, isn't that what?
Well, I don't think they were fooling around. I think that this is all about the leverage of what's going to happen with the supplemental for Israel, for Iraq, and then border security.
Okay, so handicap it. I mean, I assume you're not optimistic either.
Oh, I'm not optimistic. I think every time you dip your toe into immigration or border politics, you end up getting burned. And the question is, now that they've been linked to, I think, two very significant, not that border security isn't significant, but linked to two very important issues, which is Ukraine and Israel. I think that leverage was a reason for being optimistic.
Walk through the fault line as you see it inside the Democratic Party over immigration and border control. Meaning, what is it that you think Democrats would be willing to actually agree with and do beyond what they've said they do already?
I think if you went back and looked at the massive immigration reform package that we passed, actually, in the late 2000, I guess it was 2016, that we passed immigration reform before the election. I mean, that was almost 70 votes, Andrew. And it was a lot of compromise, and there were a lot of people on both sides unhappy with that package. And it passed, but then we couldn't get any action in the House. And so this is not new issues, whether it's what people call chain
Didn't you have the House then, didn't you?
Huh?
Didn't you have the House then? Or?
No, Paul Ryan controlled the House.
I thought Obama was not going to sign that either at some point. I mean, both parties have dropped the ball on this, wouldn't you say?
We've got how many millions of people in this country, and we need workers. We've got millions of people in this country.
But not this one. We've got 85% release rates on the millions of people that are coming across right now.
Yeah, but you know, when you look at the statistics, the vast majority of people in this country who are here illegally now, not counting what's happening at the border, overstay their visas. They're not coming across the border. They're coming on an airplane with a visa, and they're saying they're staying.
This has exploded, though, this whole issue, and Democrats have noticed.
The bigger issues. I mean, I think there's probably an issue about the people who are overstaying their welcome on the visa front. That's one issue, but that's a much smaller issue than what's actually happening at the border.
This is the reality, that the Democratic Party should be looking at what is the mood of the people in this country as it relates to what's going on in the border, and say, look, we have to be realistic about securing the border.
What does that mean?
Well, number one, you know, I opposed the wall because I thought that was a colossal waste of money. There's tons of things that we can do electronically. There's tons of strategies that Border Patrol would tell you can work in terms of apprehension. We have to have a better system of controlling applications for asylum, and that's the big problem.
The bigger issue is what is the policy coming from the White House, because that, in a large way, dictates the number of people that are trying to cross the borders at this point. If you feel like if you get here, you get asylum, you get sent to one of the cities in the Northeast or any major city, and if you feel like eventually you're going to be forgiven, that changes things. Right now, people are not going through the legal process. People coming from Venezuela and
Well,
other places,
but
because the people who are on those waiting
Yeah.
lists have been waiting for forever, and we're not taking them because we're instead taking people who are not doing it the right way.
But Becky, they are in some ways going through a legal process because we have
I
the
know people who are on
application
the
for
waiting list.
asylum,
I know,
right?
I know the people on the waiting list. The waiting list has
Right.
gotten way, way
Oh,
longer.
right.
Because we're not policing the border properly, and we're not setting up policies that say, if you come here the right way, it's going to be expedited. If you don't, we're going to send you back.
Well, the big thing that needs to happen if we're going to stop what's happening right now is we need to change the asylum laws that we have, whether there is an application for asylum,
Right.
because, and you know,
But
whether-
do you see any appetite among your party to do that? To change the asylum laws? Really?
I think there's going to be a realistic discussion. There's a reason why you have people like John Fetterman saying this needs to get fixed. People like John Tester saying this needs to get fixed. And it's not just because of politics. It's because what we're doing right now is not working. We have to have a secure
It's
border.
amazing those are the only two you could come up with.
That's not true. That's not true. I mean, you've got you know,
And
what,
Fetterman
no longer-
suddenly is a, you know, people that used to roll their eyes think this guy is a substantive person that, you know, as opposed to the rest of his party, is like living in the real world.
I mean, I think that's a big generalization.
I don't know. You came up with
You know,
Tester,
I never thought
Tester
it
and
was
Fetterman.
anything
Where's
but-
Warner? Where's Durbin? I mean, where's the entire? Where's Biden? Where's his people in his administration? This is turning into the Democrats' abortion issue. If they don't figure this out, they're going to start losing elections just based on border policy.
Yeah, I mean, this has been a big problem for Democrats for a long time. And I think there has always been this sense that if we're going to do immigration reform and border security, that they have to hold hands, and we have to do them at the same time.
Democratic mayors are like, help us. Help us. We don't have enough hotels to displace people.
I do say this. I think it's so interesting, all the mayors complaining about the influx of migrants or
In the sanctuary cities?
Well, no, and they expect Texas to take it all.
Right. No.
Yeah, so it's like, oh, well, we can't handle 20,000.
Right, the battle about saying keep them there, don't send them here.
But that's why it needs to get fixed.
This is.
Well, I
Give-
agree with you.
Maybe you give, I mean, it's fun, I can't even believe I'm saying this because I think it's sort of abhorrent to send people on buses in all sorts of crazy ways around the country and use them as pawns, but it's working. It is working.
It's working to draw attention to the
It's working
problem.
to draw attention to the issue.
Well, and okay, Joe, I mean, here's where our political argument is. We spent 4 years arguing about building a wall, which was not what needed to be talked about. We needed to talk about what kind of workers we need in this country. You know, if you
We may
look
go
at
back to
that-
building a wall, Heidi.
You think a
push
wall's
comes to
gonna
shove.
work, John?
I don't. You're building an electronic wall. Build some kind of wall.
No,
you're
I
just
agree.
dealing in semantics.
I'm saying,
there.
no.
News.
Time now for the Executive Edge. BlackRock is laying off about 600 employees, or roughly 3% of its workforce. In a memo to staff, CEO Larry Fink and President Rob Capito said that the company, is it Capito? It's Shelley Moore Capito. In this case, it's Capito. Rob Capito, company is reallocating resources amid rapid changes in asset management. Among those changes, they say ETFs are the preferred vehicle for both index and active investment strategies. They also cited growth overseas, particularly in Europe and Asia, and they said new technologies are poised to transform the industry. BlackRock is set to report quarterly results on Friday. And furthermore, Amazon's live streaming site Twitch is planning to cut 35% of its staff. That's about 500 workers. This is a Bloomberg report that said the cuts could be announced as soon as today. The report says that Twitch remains unprofitable despite a recent focus on bringing in ad revenue. Twitch already cut more than 400 positions in the last year.
Coming up, Houthi militants launching their biggest attack to date on merchant vessels in the Red Sea. We will speak with retired Admiral James Stavridis. That's next. Welcome back, everybody. The U.S. Navy telling CNBC that Houthi militants have launched their biggest attack yet on merchant vessels in the Red Sea. For more on this, we want to bring in retired U.S. Navy Admiral James Stavridis, former NATO Supreme Allied Commander, who is now Carlyle Group's Global Affairs Vice Chair, and an NBC News Chief International Analyst. And Admiral, thank you for being with us this morning. This does sound like things have stepped up pretty significantly. You're talking about more than 20 missiles and drones that were launched and taken out by the U.S. Navy. How would you characterize what's happened here?
Oh, this is a complex attack. It is indeed a step up, Becky, over what you and I talked about a couple of weeks ago. It was an attack on not only the U.S. Navy, but also our coalition partners. A British destroyer was operating with us, Her Majesty's ship Diamond. And above all, and you're showing it right now, it's an attack on commercial shipping. I mean, there were dozens of commercial ships in the vicinity of this complex attack. And I really underline that word complex. Look at the video you're showing. These are very capable warfighters. This is a takedown of a ship called the Galaxy, which is being held hostage today in a Red Sea port, Hodeidah. This is very sophisticated activity. It's going to require, frankly, more than just defensive responses going forward.
And Admiral, we've talked about this in the past. You were there for the pirates that were coming from Somalia and were able to shut that down. But this is different. These are more weaponized, these are more trained, and you believe very clearly backed by Iran, these attacks that are coming. You think a much bigger step is going to have to take place, and that includes attacks on land.
Unfortunately so. I think some folks will remember the movie with Tom Hanks, Captain Phillips. You know, those were Somali pirates, basically in flip-flops with rusty AK-47s, some speedboats. This is not your daddy's pirates. These are state-sponsored by Iran, so they have access to all the equipment, the training, the organization. They've been at war with the Kingdom of Saudi Arabia and the UAE for over 10 years. They control half of Yemen, particularly that Red Sea coastline. So simply putting a few destroyers out there and fighter jets, which are all good and capable, and we should be doing that, I just don't think, at least thus far, the Houthi pirates and their masters in Tehran are getting the message. So this is going to be a week of decision, I think, for the White House as to whether to go ashore. Ultimately, Becky, to close, we had to go ashore to go after the pirate camps. I think we're going to have to do something along those lines now.
We're almost out of time, Admiral, but the risk of the war in the Middle East expanding if we do that.
Yeah, it brings us to not just Houthis, but Hamas and Hezbollah. What those three terrorist organizations have in common, besides beginning with the letter H, is they're all funded, sponsored, and directed by Iran. So yes, this also increases the potential for a wider war up to the 25% range, I would say. That's dangerous.
Wow. Admiral, thank you very much for your time this morning. Squawk Box will be right back.
CNBC.
Good morning. Bitcoin skyrocketing after a hacked SEC social media account falsely posted that Bitcoin ETFs had been approved. We'll hear from a former SEC attorney. Boeing CEO telling workers every detail matters in response to the incident last week that grounded the company's 737 MAX 9 planes. The latest on the investigation is coming up. And dealing with anti-Semitism on campus, pollster Frank Luntz posed the question to students at some of America's most prestigious schools. He joins us with their responses. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Becky Quick and Joe Kernan. Got a lot to talk about this morning, including Bitcoin, and maybe one day we'll be talking about Bitcoin futures and everything else. But right now, Dow off about 56 points, NASDAQ up about 20, the S&P 500 off about 2. Let's show you Treasuries right about now. You look at the 10-year notes sitting just at about 4, actually flat. 2-year note at 4.38, 4348, and then oil. Think about WTI crude. Take a look at, if you want to buy it by the barrel, 72.48 this morning. Let's talk Bitcoin.
All right, this may sound very familiar to viewers if you were watching earlier. We're watching the price of Bitcoin after the SEC said that a post on X that said Bitcoin's ETF had been approved was the result of a hacked account. SEC Chair Gary Gensler posted an update saying the SEC Twitter account was in fact compromised, and an unauthorized tweet was posted. The SEC has not approved the listing and trading of spot Bitcoin exchange traded products. The official @safety account from X later posted that it completed a preliminary investigation, and it found that the compromise was not due to a breach of X's systems. It says the unauthorized user gained access by obtaining control over a phone number associated with the SEC's account. It also said the account did not have two-factor authentication enabled. The market expects the regulator at some point to greenlight spot Bitcoin ETFs as possibly as soon as today. We're going to speak to a former SEC enforcement attorney about the situation in just a bit.
And consumer spending finished 2023 on a positive note. Total card spending per household increased by 0.2% year over year in December. The survey also shows that high-income household wages growth dipped and lower income saw some growth, according to Bank of America's Consumer Checkpoint report. The winter spending survey suggests that consumers will likely start pulling back their spending on meals and other experiences this year. For more on this, we want to bring in Liz Everett-Chrisberg, who is the head of the Bank of America Institute. And Liz, 2023 was the year that outdid all the expectations when it came to the consumer's strength. What do you think 2024 is shaping up to look like?
Well, I think before we get to 2024, in December they announced that the word of the year for 2023 was Riz, and we think they got the first syllable right, but it really was resilience. And I think that the data in December, as you just walked through, really underscored that. But there are things that, that we're looking at that give us some pause. And one of them is what you were talking about as it relates to wages. In order to understand spending, you have to understand what's going on the income side. And while income growth is still growing overall, and still growing in particular for lower and middle income households, higher income households saw their income growth dip just a little bit, 0.1%, but there is some caution. And when you ask the consumer, as we did in the Bank of America Winter Spending Survey, almost 60%, 59% of people are saying they're going to need to cut back on their spending in order to achieve their goals. Now, before the alarms go off, recognize that last year, 54% of people...
I was going to say, isn't this the hangover effect that everybody feels after they just spent a whole lot of money on the holidays and...
I don't
feeling
know.
like,
It's not
New
the
Year's resolution is I'm not going to spend this.
Well, it's not necessarily they spent a whole lot of money in the holidays, because the survey was actually right before that. But interestingly, in the holidays, we started the season really early and really strong. In November, we were up 0.9 when overall spending was only up half a percent. but it's like when you run a marathon and you start out really strong and then you don't finish, right? So in December, holiday spending was down 1.5%.
I was going to ask you actually, though, about credit. I was looking at Sheila Bair, who was on X just in the last day. She had consumer credit exploding to over $5 trillion in November, while revolving credit, mostly cards, near $1.3 trillion. We obsess over GDP, unemployment, labor participation as predictors of recession, but rising consumer debt levels have also portended economic downturns.
I think, we didn't look at that. I've got to go back and look at the numbers for the end of the year. But I think, again, overall, the consumer is seeing the numbers are ticking up, but not at the level that we're quite concerned about yet. And again, I think the key thing we ought to be focusing on is the wages. And that's where I have a little bit of a concern with the higher income households, but just a little bit.
Higher income households aren't spending all of their money anyway. I mean, it's probably better news for the economy if lower and middle income people are still seeing wage increases that are coming through.
Absolutely, and they are. And in fact, the lower income households' wage growth actually ticked up just a little bit, but that is a concern. One of the pushbacks that we also get is that higher income households have consume more, right? So the top 2 quintiles consume 60% of consumer spending, but the reality is everybody needs to be spending, right? Yeah. And we are continuing to see growth. So we are still seeing spending growth. It is moderating, but so I don't know that we're going to have the same exhilaration that we had in 2023, but I don't think that we're turning back yet. People are still spending. One other thing I would caution on is if you look at what people are spending on, it continues to be a services story. So services spending growth up 2.5%, goods down 1.6%. Some of that was gas. But when you think about that, some of that's because of inflation, right? And inflation is important. And even though people are saying they're going to cut back on dining out, on travel and whatnot, on events, you may still see services spending increase because of the non-discretionary services. So think about utilities, think about insurance, think about childcare. So you've got to look underneath the numbers as opposed to just that headline within services.
The story for at least 2.5 years now has been that the consumer is going to run out of excess cash. And I think last year at this time, I remember talking to bankers who said, well, it'll definitely happen over the summer of 2023. Still hasn't happened, really.
Still hasn't happened.
Is this the new paradigm, the new normal?
It still hasn't happened. And, I think the other thing you have to think about is when people are looking at that excess cash, sometimes they may just be looking at deposit balances. Mm-hmm. But the reality is you've got to look at all of what a consumer has. And when you look at this,
credit card debt, as Andrew mentioned.
Well, but you also have to look at their investments.
Okay.
Right? And where's the market, right? Relative to a year ago, people who are invested have that cushion.
You still sound pretty optimistic, though, about the consumer and the health of the economy.
I'm more cautious than I was, right? The growth rate has moderated, but it's moderated. And it's staying relatively stable at this point. We're not seeing, over the last 3 months, those levels as it relates to spending, as it relates to even wage growth or wage decline, as it relates to the high income. They're relatively stable. So I'm not throwing a New Year's Eve party, but I'm certainly...
Were you guys doing this before the great financial crisis? I feel like the Institute is more recent than that.
We launched in April of 22, so no, we weren't looking at it before the financial crisis.
Do you have data that you go back and look at from that?
We can't go back quite that far. We obviously go back before the pandemic and look at that. We need to get all of that data lined up, and then we can potentially go back and look at that and see how that would relate.
The other day, the story that many retirees are totally dependent on Social Security. That's all they have. That's all they have.
Yeah.
Inflation goes up, and that means when they go to the grocery store, they have to put this back or that back, or in terms of rent, or in terms of, I mean, that is a, I don't know what we do about this. What can we do about this?
You raise a really interesting point, and if we look at spending patterns throughout last year, we saw older consumers have much more higher spending growth than younger consumers. And I think a lot of that had to do with last year's, the 2023 COLA increase, the Social Security increase of 8.7%, which was well above what inflation was. The issue now for 2024 is that COLA increase is much lower, much closer to what inflation actually is, 3.2%, I think. But remember that it's still an increase. So you are still seeing older generations, boomers, their income, which would include Social Security, right? It's still going up, but it's not going up the way that it was last year. So if we think about that older generations driving the spending growth, that will probably not
I think
continue.
it was 1 out of 5, but that's still, that's a sad way to
20%
live out your last
Yeah,
years.
certainly, certainly.
Liz, thank you for the insights.
Thanks.
We appreciate these updates.
Always great to be here.
Coming up, the NTSB is focusing on Boeing and Spirit Aerosystems assembly work after last week's in-flight incident. We're going to hear from a former NTSB investigator, and then later the SEC acknowledging that its X account had been compromised after a post that announced Bitcoin ETFs were approved for trading. Reaction from a former SEC attorney. We're coming right back.
Asset.com.
Now for the latest on the investigation into Alaska Airlines, it was flight 1282, put that in your brain, and the subsequent grounding of some Boeing 737 MAX 9 planes. Let's bring in former NTSB investigator Greg Feith. And thank God, Greg, it's not going to be a number that's etched into our brains like there are some from the past that we do remember. We do remember those numbers, and it could have been. And I don't understand why we get to the point where we change protocol on something that seems like it was kind of obvious. Maybe it's just hindsight in 2020, but it seems like you could have checked this stuff out better.
Joe, that's one of the big issues with Boeing recently, with all of their quality control issues. Here is another black eye against the 737 MAX aircraft. And given the fact that the lessons that we learned from the MCAS events, of course, the scrutiny that the 737 has been under, the spotlight that Boeing has been under, you would think that this would be an airplane that has 0 issues. And unfortunately, they keep coming back with the rudder event a couple of months ago, some elevator rivet issues, and engine cowling issues. You would think that the quality control, they would have reset, Boeing would have reset, you know, their safety protocols, if you will, and really enhanced their quality control checks.
I wonder how many different parts of the plane that you could group into things that needed to be checked. And then the MCAS, I characterize that as like almost a software or a procedural a checklist that you do. How many of things like this are we talking about? I mean, you talk about the fuselage and the integrity of that. You mentioned the rudders. So there's bolts on the elevators. Are there still cables? Remember when we had a problem with a piece went into the cable? They don't have those anymore, do they?
Well, some of the older, even though this is a variant, there are cables still in the airplane. Some are totally electronic. But the fact is that with all of the moving parts on an aircraft, yes, they're magnificent machines, and the workmanship and the craftsmanship and engineering that goes into them are fantastic. These are the little things. These are the human things where you have humans interacting with a machine, and of course, any kind of human interaction, you always are setting yourself up for these types of things. That is, these quality control issues. Somebody has to turn that bolt, torque that bolt, make sure that there's a cotter pin behind that nut or in that nut. So when you look at all of these things, yeah, these small things can cause catastrophic events. And in this case, we're fortunate that this airplane was only at 16,000 feet, because we would have had a different scenario had this airplane been at 35,000 feet.
And when the worst case scenario does play out, a lot of times we look back and we find similar things. So in this case, it didn't, but there will be a next time, and we know that. I'm wondering, if you were running Boeing, if you were Dave Calhoun, how do you go down the line of command to make sure that people are doing things like that? And I guess there'd be man hours spent, or worker hours spent. Geez, I mean, I'm so PC now, I can't say man hours, but there would be worker hours spent, and that hurts margins. The more inspecting and safety, the more time you spend on that, and you have your employees spending on that, the less money you make. So the whole profit incentive comes into play.
Yeah, well, you can pay me now or pay me later, because I'd rather spend the money now on safety than have to pay for an accident. And unfortunately, Boeing has learned some very hard lessons with Lion Air and Ethiopia. So the fact is, if I was running the company, I would put together a team, an advisory team, consisting of ex-Boeing employees, people that have been down on the floor, whether they're supervisors or actually technicians who build the aircraft. You need to have people on the ground who are listening to try and understand what are the issues, what are the problems that are going on the manufacturing floor. That information has to filter up to the C-suite, and they have to act on it. Given the fact that now the headquarters is well displaced from where they actually manufacture the aircraft, who knows where the breaks in command are and that chain of communication? That's the huge issue. And they've lost a lot of talent from Boeing, whether it's downsizing or programs have terminated. Look, the 747 program is over. So where is all that talent, all that experience? Did they reassign those folks, or do those people get riffed out? That is a reduction in workforce. But I would put an advisory team together to have communication, direct line communication, all the way to the top. Look, this is a problem that's been ongoing. This is not a one-off, and they should have learned lessons by now. And then, of course, where are the shareholders? Why are they not really pushing top management to really understand what's going on?
Or yelling at the board for being, sort of, I don't know, we hear about boards all the time, that sometimes they just, whatever the CEO says, they just nod, and I don't know. He was on the board before that.
Yes,
I'm trying to figure out what you need to do to inspect every bolt on a, and then I'm thinking, you'd like to do it on 30-year-old. You'd like to focus on the planes that have been in service for a long. If you got to inspect every bolt on a 3-month-old plane, I mean, how long does that take? And then you know what you do? You inspect the bolts on the most recent thing that happened. You're okay. Let's look at these bolts on the plug for the fuselage, and the next thing's going to be somewhere else. So you got to do the whole plane.
Well, I mean, that is part of the build process. They have come up with a process for manufacturing that aircraft, and yes, every bolt is inspected. Now, some are what's called RII, which is a required inspection item. That requires additional inspections. Others, once they're in place, once they're installed, it's really install and forget. And that, unfortunately, is what has happened with this door plug because of the construction and, of course, the assembly procedure for these bolts. If they are installed correctly, you won't have this issue. And that's why I think through the inspection, once the bolts are inspected, it's going to be, yes, the FAA is probably going to require a repetitive inspection just to confirm everything's been done. But the entire airplane is inspected, Joe.
Yeah, you needed to do this. That's why the quality control is so paramount on the construction, the initial construction of the plane, which is what's so troubling because those 3 months, it's only been in service for 3 months. So,
but again, you got a new airplane just like a new car. Once it gets into service, things are going to happen during in-service
Craig, you don't want a lemon. You ever had a lemon? I've had a lemon, and it's amazing. Yeah, it's like you have a lemon that like you can't even believe it, and then you get a different one, and I don't know.
That's the question. Was
the assembly line had a bad day or something?
That's the question. Was this a lemon? Was this a one?
It's the 737 a lemon after the MCAS, the rudders, this. You mentioned about 6 different things, and it's not a lemon. It's the greatest plane in the air, isn't it?
It is, and of course, you know, other manufacturers do have their own inherent issues as well. Right. So, but again, this has been unfortunately back-to-back issues with now this door plug, of course, the engine cowling issue and the rudder. They're too close together, and the question is, with the scrutiny that Boeing is under because of this particular airplane, why are they still having these quality control issues? Right. And a lot of it, if you remember back years ago when Boeing went on strike and they had management building airplanes, we had a lot of problems with their airplanes. So again, it has to be a shutdown to an extent of regrouping, but they need to have a very good line of communication of what's going on the floor and the talent that's there.
And we shouldn't forget 50,000 takeoffs and landings a day. Just in this country, it's unbelievably great how everything works across the board.
I have no problem getting on an airplane tomorrow. So.
Right. Okay, great. Thank you. Programming note, our Phil LeBeau will have an exclusive interview with Boeing CEO Dave Calhoun at 1 p.m. Eastern Time.
Coming up, we're going to get a read on the mortgage market, and then the SEC's Bitcoin debacle, a false tweet on the agency's X account sending Bitcoin skyrocketing only to be brought down to earth. We'll find out whether it's going to skyrocket again if and when the SEC does announce an approval. We're coming right back after this.
Time now for today's Aflac trivia question. On this day in 2000, what mega merger was completed in a deal worth $182 billion in stock and debt? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. On this day in 2000, what mega merger was completed in a deal worth $182 billion in stock and debt? The answer? AOL Time Warner.
All right, welcome back, everybody. Mortgage applications released earlier this hour. Diana Olick joins us right now with more. Good morning, Diana.
Good morning, Becky. Yeah, mortgage demand came roaring back last week with total application volume up nearly 10% from the previous week. And that is seasonally adjusted with an additional adjustment by the Mortgage Bankers Association for the New Year's holiday. Now, this happened even as the average rate on the 30-year fixed for conforming loans increased to 6.81% from 6.76% for loans with a 20% down payment. That rate peaked at around 8% in October and was in the 7% range for much of last year. Applications to refinance a home loan jumped 19% from the previous week and were 30% higher than the same week 1 year ago. The rate is still 39 basis points higher than it was a year ago, but it's 26 basis points lower than it was 4 weeks ago. While there aren't a lot of borrowers who can still benefit from a refinance, given how low rates were just 2 years ago, those who can are clearly getting back into the market. Now, applications for a mortgage to buy a home rose 6% for the week, but we're still 16% lower than the same week 1 year ago. I have been hearing from agents, heard from one last weekend, that they saw much more traffic at open houses last weekend. Of course, there is still very low supply, but agents also say they expect to see more coming on the market in the next few weeks with lower rates. Now, we could see an early start to the spring season. Buyers may try to get in before the competition gets even worse and take advantage of these low rates. Back to you.
Diana, I can't say I'm surprised by most of that news because, look, you would expect with prices coming down, people are on the lookout, especially you get through the holidays and it's time to really start looking. I think what surprises me most is the idea that mortgage refinance applications jump so much because I just didn't think there were that many people who needed to. Are these people who maybe in the last 6 months signed up and couldn't get a better rate and so you refinance as soon as they come down? Or you would think they would hold on for something even a little lower?
Yeah, I think, unfortunately, I'm going to be boring and say it's a little bit about math. You know, we say that there are these big jumps in refinance applications, but we're coming off this incredibly small number. So there are still very, very, very few people who can benefit, but because there are some, they're getting in. And these are people who may have refinanced, who may have bought their homes in the last year or in the last 2 years when rates were in the 7% range. Generally, you want to get 50 basis points lower to make a refinance worth it. So there are some people out there. Maybe there are some people who didn't qualify earlier for a refinance and now they're in a better economic situation. But again, it's this very, very low number. So any bump up is going to seem like a big bump up.
That makes sense. Diana, thank you.
Coming up, a former SEC attorney on the SEC's ex-Bitcoin debacle. And then pollster and political strategist Frank Luntz is going to join us to share his perspective on how to address anti-Semitism on college campuses. Squawk Box will be right back.
50% off.
BlackRock lowering the fee on its proposed spot Bitcoin exchange traded fund to 0.25% from 0.3%. It also lowered its introductory offer on the fund, so investors will pay a fee of 0.12% for the first 12 months or the first $5 billion in assets. Kathy Wood's ARK Investment also cutting its fee to 0.21%, which is lower than the original proposed fee of 0.8%. The SEC, meantime, says that an announcement about Bitcoin exchange-traded funds yesterday afternoon on its X file, on its X account, was false. In a statement to CNBC, the agency says it's determined that there was unauthorized access to and activity on the @SECGovX.com account by an unknown party for a brief period of time. Joining us right now for more on this is Rebecca Fike. She's a former SEC enforcement attorney, now a partner at Vinson and Elkins. And Rebecca, this is embarrassing to say the very least.
I think that's exactly right. Thank you so much for having me this morning, Becky.
So what happens if another company did this? The SEC, I think, would be all over it, investigating, trying to find out what happens. Who investigates the SEC?
That's a great question. You're exactly right that if this was any public company, the SEC would be immediately opening an investigation. They'd be calling the company's general counsel. They'd be letting them know to retain documents and evidence and asking a lot of questions about how this could happen. With the SEC, I think you're looking at Congress, I imagine, will have questions. The DOJ, I imagine, will be involved, although likely looking more at the potential hacker as opposed to, looking at the SEC itself. And since Bitcoin is a commodity, the CFTC could also be involved.
I mean, what's so concerning about this is the agency that's responsible for policing the markets, making sure that there's not this way to manipulate and make or lose money, make other people lose money on this. With the turn of events, somebody pointed out, and this is very clear, this announcement came out, this fake announcement. It wiped out people who used options to short Bitcoin. The SEC immediately retracts it and said that this was a false tweet that had gone out. And then everybody who had used options to go long on Bitcoin loses money too. What happens?
I mean, it was a market-moving event. I mean, it really underscores how important cybersecurity is, which is one of the things the SEC and Chair Gensler have been speaking about so much. But it also underscores how complicated cybersecurity is and how hard it is to react in a crisis, and how even, I think it was 15 minutes that they believe the hacker had access to the account. In those 15 minutes, approximately $90 million of long and short positions were liquidated on Bitcoin. It's an incredibly important area, and the SEC, I think, got a direct lesson in how challenging an area it is.
In this case, it does not sound like it was X's fault in any way, shape, or form. They said that it was, in their investigation, it wasn't anybody at X or anyone who had access to X's accounts, and that the SEC hadn't even bothered to use the dual-factor authentication in this. But I do have questions about how you can manipulate markets on any social media. You think about it, and there's fake accounts. I mean, we have fake accounts for all of us that circulate around. If something were posted on that and the market moved on some of that news, who'd be responsible?
It would depend, the classic lawyer's answer. Generally, as far as the SEC goes, when a company has an official company feed on any social media channel, that is the one they're going to be held responsible for.
No, but I'm saying if there's somebody who's posing as one of these official accounts or someone else, if it's a troll, let's say, on X or on another social media, who's responsible for that?
I would say the troll is probably responsible for that, but the SEC could ask questions of them if because market manipulation is its own.
Is it never going to be the social media? I mean, I just wonder about these things. If we post something wrong on CNBC, I would assume it's CNBC's. Is a social media company ever responsible for any of that stuff, or is it too impossible to police? And you go back to the CompuServe thing where they're just message boards.
I think it would depend on, there's always that reasonableness factor. So, I mean, X does offer two-factor authentication. That certainly seems reasonable. I'm not sure why the government account doesn't have it. I know the gray check marks operate a little differently, but it would look at, who is the most to blame. If there's a social media account that has lax security, then I think the SEC and other potential agencies could hold the social media account.
Let's go back to the SEC issue at hand. What happens if the SEC approves this Bitcoin ETF today or tomorrow? I mean, that just seems like such a crazy timeline to have all of this play out.
It is, and I think, that's exactly why the market was so primed to react to the false announcement yesterday, because it's expected that approval might come through today. And I don't know that a hacker getting access to the account means that timeline should change, given what an enormous part of the financial markets they are, but it certainly complicates things.
It does. Rebecca, thanks for walking this through with us today.
Thank you for having me.
Okay. Coming up, a check on the pre-market morning movers, and then we're going to talk to pollster and strategist Frank Luntz, who's going to join us to share his perspective on how to address anti-Semitism on college campuses. He has some provocative ideas. And could an Ethereum ETF follow a Bitcoin ETF if approved? We're going to hear from the co-founder of Ethereum and co-founder of Consensus, a global blockchain company. All that and more after this.
Crash courses.
Let's get to Dom Chu with a look at this morning's pre-market movers. I don't know where you've been, Dom. Hopefully you can explain, we were trying to figure out Tiger. You can explain that at the end if you can, exactly what went on. Maybe Nike's just not a golf company anymore.
Nike could still be a golf company, just maybe without Tiger. I mean, we'll talk about it at the end. Anyway,
Okay.
Joe, I'll get through the morning movers first. You guys just did that whole segment about cryptocurrencies, the SEC hack. Bitcoin prices. Remember, they're settling right around 45,000 or so. They got as high as almost 48,000 in the last 24 hours due to that hack of the SEC social media account on X about the possible approvals of an SEC-backed, or at least SEC-approved Bitcoin ETF. Not going to happen, at least not yet. Those Bitcoin prices fell back down, and we're watching the ecosystem right now for some of these stocks, right? We're talking a miner like Marathon Digital, the Grayscale Bitcoin Trust, MicroStrategy, one of the software services companies that owns Bitcoin on the balance sheet, and then Coinbase Global, the exchange operator. Most of them are down in trading so far today in the pre-market, so we'll keep an eye on some of those stocks tied to the ecosystem there. On the analyst front, check out shares of Toast. They're up nearly 3.5%, roughly 40,000 shares of volume, now about almost 5% at this point. They're getting some help from Goldman Sachs, which is upgrading the fintech company, which provides software and services for the restaurant and bar industry. It goes up to a buy rating. It was a neutral before. The target price goes up to 24 bucks. It was 16. They like, amongst other things, better profitability trends in the coming year alongside gains in market share and a discount valuation compared to other software-oriented peer companies. So Toast shares up nearly 5%. And we'll top it off with the M&A deal that's now on the record. Business computing data center technology company Hewlett-Packard Enterprise will buy computer networking equipment maker Juniper Networks in an all-cash deal with roughly just about $14 billion at play. That's 40 bucks for every share of Juniper. The deal basically further bolsters HPE's networking business, and it comes a day after the Wall Street Journal reported that the companies were in later stage deal talks. So, Joe, those shares for Juniper is up marginally, but we saw the big move yesterday. We'll see what happens. But to your Nike point, it's an interesting development there. Maybe not one that was all unexpected, given the fact that Tiger's been in FootJoy shoes pretty much since the auto accident derailed his kind of professional tour side of things. So, you know, if Nike stays in it, that's great. If they don't, it provides an interesting, at least, window for certain other smaller apparel and footwear companies, niche providers, to independent companies to kind of maybe fill the void.
Well, where's Tiger going?
So Tiger, there's a lot of speculation about that. I've heard folks in the industry speculate about whether it's TaylorMade because he already has, you know, an equipment deal with TaylorMade. But, you know, TaylorMade is in clothing. They're not full bore into clothing in the U.S. market like they are in certain other parts of the world, especially in Asia. Supply chains are different for an apparel company that also does equipment, so we'll see what happens there. There's a lot of speculation about other brands, right? I mean, he's already a TaylorMade staffer. It doesn't seem like he's leaving that anytime soon. So would you go to Travis Matthew? You probably wouldn't because they're owned by Topgolf, Callaway brands. I don't know. I mean, I also heard some industry folks talk about this idea that maybe he could sign on with a smaller, more independent label and take an equity stake in that kind of a brand as well. So, you know, it remains to be seen. But obviously the one that people talk about a lot more these days is Titleist, Acushnet, which is the parent company of Titleist and FootJoy, only because he's been seen in that
Wearing
footwear.
the FootJoys,
yeah,
right.
exactly. So.
It's just
We
that.
talked about TaylorMade as well.
Yeah.
Well, I mean, here's the thing. There's only 3 companies really massively in this game right now, right? It's Acushnet, which owns Titleist and FootJoy. It's Topgolf Callaway, which is the namesake Callaway stuff, and then private equity-owned TaylorMade. And
Right.
those are the big 3 that are kind of out there floating around right now.
Here's a question. Would his involvement in one of those brands fundamentally change the business? Meaning, one of the reasons Nike was willing to pay him ultimately what they did, especially towards the end, was they were trying to build their own golf business for the first time. So you'd almost argue you would be willing to overpay to try to build a business. If you already have a business and there are only 3 players in this business, does it fundamentally change the dynamic if Tiger is your endorsee in this case?
I'm not sure how much it fundamentally changes the dynamic for, say, a TaylorMade, because he's already there. He's already been so closely associated with TaylorMade gear. They basically almost custom make equipment for his specs. And so the golf world, the people who buy equipment, they all know that the TaylorMade relationship is there. Where it becomes a little bit more interesting is what it adds to, say, Acushnet, Titleist, and FootJoy, if he was to kind of gravitate a little bit more towards that side on the apparel and footwear side of things. Again, Andrew, to this point, it becomes a category game changer, possibly, if it goes to one of these smaller, more independent labels that specializes in golf. That's not Nike, that's not TaylorMade, and that's where it becomes perhaps a bit more of a
Think about
economic impact.
that red shirt with the Nike logo. I mean, some of the greatest moments in golf are preserved with that look right there.
John, I mean, remember, you're on a golf course for like 5 hours.
Swoosh, yeah.
If you're wearing a Nike swoosh for 5 hours in televised golf, that's a lot of brand exposure out there. Versus, say, a basketball game.
It was worth every penny.
Yeah.
Worth every penny. Okay. In case anyone's interested, I have a Callaway driver. You know, I don't know whether probably no one's buying a Callaway driver based on that, are they?
So I'm not paid to endorse any of these products, but I also have a Callaway driver in my bag.
Okay. Thanks, Tom.
When we come back, how to address anti-Semitism on college campuses. Pollster Frank Luntz will join us next with thoughts from students. The futures this morning, at least at this point, relatively flat. Dow futures are off by about 37. S&P futures down by 2.5. The NASDAQ indicated up by 11. Squawk Box will be right back.
Who says that anti-Semitism is real on college campuses? Raise your hands.
On Columbia's campus, we've had probably every other day, it seems, the pro-Palestinian groups are meeting inside of our campus and having events. And I think as a whole, too, it's just the climate is very antagonistic. No one wants to actually debate or actually discuss the issues. It's just beating the other side into submission. And I think a couple of weeks ago, we had an incident that turned violent too. A Jewish student was attacked outside of our library.
That was a moment and a remarkable one from a focus group of more than a dozen college students, both current and alumni from universities, including Harvard, Penn, Columbia, and USC. It was conducted last month. And joining us right now is pollster and political strategist Frank Luntz, who brought us that conversation. Frank, tell us about what you learned during that conversation and perhaps ways that universities and maybe others, because we don't want to talk about it just strictly in the context of universities, but also big institutions, businesses are dealing with this issue.
Well, I should focus on the solution first, and that is that there's zero tolerance. No excuses, no exceptions. that we need to treat anti-Semitism as hate, just as we treat racism and sexism and any other discriminatory practices. Second, it doesn't depend on context. It should be definite. If someone expresses something that is hostile to the Jewish community, they have every right for their safe existence, and nothing should challenge that. Third, there should be freedom from fear. Just as we say and we teach, believe the victim, believe the woman, when we have these conversations about rape and about sexual assault. It's the same thing with racism and the same thing with anti-Jewish hate, which is really what it is. Fourth, people who are watching this program right now have considerable financial means. And one of the greatest problems is that they continue to donate to these very same institutions or participate in these very same businesses that are exhibiting anti-Semitic behavior. And that has to stop.
Okay, Frank, I want to stop you because I want to ask two delicate and complicated questions. You know, when you listen to that first video, which we brought in ahead of you speaking just now, there is this question mark, and I know there are viewers who are watching this, saying there's a distinction between being supportive of a potential Palestinian state and hate speech against Jews, and that there should be a distinction about that. Sometimes when people talk about context, and when you just said there should be no context, they are referring to that. And by the way, I am not in favor of that, as you know, but I'm just, how do you think about that, and what did you learn when you spoke to students about it?
I'm going to give you a very specific phrase that we heard and saw in some of these rallies. It's not just from the river to the sea, which means no Israel. It's by any means necessary. And that means whatever you do is acceptable in bringing about a Palestinian state. The butchering of children, the raping of women, the hostility towards the Jewish community right here in America. That we have to stop turning a blind eye to it, Andrew, and accepting it for what it is. And it is hate. You're correct. How we define it, how we listen to it is important. But the fact is, these universities aren't laboratories of open discussion.
Right. Let me ask you about the other piece of this, though. One thing that you're doing, I think, is advocating for donors to pull money and the like from universities that you don't think are behaving the way you want them to. And I've advanced ideas like that in many ways over the years as it relates to a whole bunch of issues. Having said that, one of the criticisms that I have gotten as it relates to this specific issue goes to this sort of oppressor framework, which is to say that people look and say that those who have money are then using their influence, and some people are arguing they're misusing their influence. What do you think about that?
I understand that point, and it's because they're trying to silence their opponents. That in the end, we should not even be having this discussion. This segment should not be necessary. You can tell by my tone how frightened I am about the conditions right now at universities as they go back to school after the Christmas break. And I'm afraid that more Jewish students are going to be attacked because those who hate them feel they can get away with it. You would never say this to a black student, and you shouldn't. You would never say this to a Latino, and you shouldn't. You cannot frighten or condemn a transgender student, but for some reason, if they're Jewish, you call them oppressors, and that justifies whatever attack you make.
Let's broaden this conversation out to the business community, because one of the other things that's come up recently is the focus on DEI universities is also attached to the focus on DEI in businesses, which attaches to this idea of ESG, a phenomenon that we've talked about practically almost every day on this broadcast and on this network for the last 5 years, if not more.
And the key component there isn't diversity, equity, and inclusion, it's mutual respect. And that is what the public, what black employees, what Latino employees, what transgender employees aren't looking for diversity, equity, inclusion. They want to know that there is respect for every employee in every community or from every community in every corner of the country. And that these businesses that are putting DEI into an ideological framework, thinking that they have to be progressive. All you have to do is look at the landscape. Consumers are turning against them because they don't want these businesses playing politics. They do want every individual respected. They do want people treated with decency and civility and equality. But that's different from bringing it into a political, partisan, or ideological context. Andrew, we are at a tipping point right now where the public is prepared to get deeply involved and aggressively involved in corporations that they feel do not respect them and do not appreciate their points of view. Don't bring politics into it as you are seeking to broaden the employee pool and have everybody.
It's a longer conversation, but we appreciate it. We look forward to talking to you about it and other things, politics, very, very soon too. Thanks.
Thank you.
Still to come, the co-founder of Ethereum joins us to talk about yesterday's wild Bitcoin debacle by the SEC, the possibility of an Ethereum ETF, and digital currencies overall. And later, the battle over border funding. Senator John Cornyn will be joining us. We'll be right back.
NBC.
Good morning. Chaos in crypto world. The SEC appears to approve spot Bitcoin ETFs for trading, then admits its X account was hacked and nothing's final. Well, Boeing CEO admitting a mistake following that blown-out door plug on an Alaska Airlines flight. The jet remains grounded for U.S. airlines as the investigation heats up. And time now running short for the government to fund itself. This even after last weekend's top-line spending deal. We are going to speak with GOP Senator John Cornyn about the funding, U.S. border linkage, and so much more. The final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC Live from the NASDAQ market site in Times Square, where anything can happen on any given day. I'm Joe Kernan along with Becky Quick and Andrew Ross Sorkin. Come on down here and stand around the window and, I don't know, do handstands, crazy hand movements. Oh, he's gone. What the hell happened? Oh, I missed that. People were watching earlier. We have, yeah, that's good.
Hey, we're in Times Square.
Yeah.
I leave out this exit over here. I definitely don't go out that one, just in case anyone wondering. Right.
U.S. first.
I do many times. U.S. equity futures at this hour, not a lot to talk about. You can see the Dow, though, now down about 39 points. Seems like we're in a little bit of a consolidation phase after that blockbuster ending to last year. We do the NASDAQ in positive territory, the S&P down just marginally. The 10-year, wow, it's around 4%. I mean, exactly.
This morning.
Yeah, it had another 3 handle. It's exactly 4% this morning. And we're also watching Bitcoin prices jumped up to around 48,000, then fell yesterday after the SEC put out a tweet saying it had been hacked. The tweet was that it approved spot Bitcoin ETF for trading, and then SEC Chair Gary Gensler quickly posted his own tweet saying nothing had been approved and the SEC's account had been compromised. X's safety account confirmed that. It said a preliminary investigation indicated someone gained control over a phone number associated with the SEC's account through a third party. We're going to talk more about this story in just a little bit with the co-founder of the Ethereum project. All this could have been avoided if it just had not taken like so long to finally get to this point, but it's just painstakingly grinding towards the possibility of a spot ETF. Only if it probably finally happens. I have no idea. It makes you wonder about the wheels of government and how they turn.
Yeah.
Also, Boeing, another big focus this morning. The CEO, Dave Calhoun, addressing employees over the door plug blowout on an Alaska Airlines flight last week. According to remarks shared by the company, Calhoun acknowledged Boeing made a mistake and said that it will work with regulators in their investigation of what happened to the 737 MAX 9 jet. The FAA says Boeing must provide operators instructions for inspections and maintenance beyond an initial version that was offered on Monday. Calhoun will join the exchange this afternoon at 1 p.m. Eastern Time for an exclusive interview with Phil LeBeau. Don't miss that.
Meantime, let's get back to the broader markets and begin with our own Mike Santoli. Mike, down at the New York Stock Exchange, what are you watching this morning?
Andrew, yeah, just kind of monitoring this prolonged pause we've had in the broad market. Joe said consolidating. We did have that strong fourth quarter rally since the final couple of days of 2023. No net progress, had about a 2% decline. A little bit of the hottest areas like small caps of the fourth quarter rally have come off a little bit more. It's unclear if there's, much to this aside from just digesting that big rally. We are hovering just below the all-time highs. Intraday, 48.18. The closing highs more like 47.96. So it's pretty much right there. I would say, again, everyone kind of looking around this little below that, about 4,600 is where we launched in December, kind of broke out to that new high. That if we pull back to that, it's still kind of no big deal. 45.50 is like the December low. There's an old trader's rule of thumb. You don't want to see the December low breached in the first part of a new year. So far, we're still pretty well clear of that. I do find it interesting, though, if we go back 4 years to right before the COVID crash, and you see what we have a new obsession of the trading community in terms of the big disruptive company, NASDAQ versus Tesla. The Tesla move in 2020, 2021 was so monstrous. So even the 100% gain in Tesla last year didn't really recover most of it. And you see now NVIDIA is now outperforming on that basis, and it's really consuming all the oxygen in semis, as we know. NVIDIA up like 230% in the last 12 months. The average semiconductor stock has actually underperformed the market over that period. So kind of remarkable. $1.3 trillion market cap for NVIDIA, now $750 for Tesla, and it has the same kind of intensity of option speculation and constant huge dollar turnover in the stock that Tesla had a couple of years ago. We'll see, how this goes. And, of course, this move in Tesla anticipated when production got to scale, started to really produce cash flow. So obviously the market moves ahead of the fundamentals. We'll see if that also applies to NVIDIA. Within financials, find an interesting move in the investment banking boutique stocks. These are the M&A and deal advisory companies have really moved ahead. That's Evercore, that's PJT Partners, and IAI is the overall broker-dealer index. So you see basically the market is saying we probably have the makings of some increased M&A and other deal activity in the works. We'll see if that pans out. We've had some false starts there in the past, but merger volume relative to the total market cap, Andrew, is really depressed and has been for about a year.
Okay. Mike, thank you. We will keep our eyes on all of it. Appreciate it.
All right, joining us now for more on the markets, John Mackay. He heads in it related to bones? Yeah. No, okay.
Not related, but you pronounced it correctly.
Oh, that's
Thank you,
good,
John.
because it looks like, well, it doesn't look like it. Well, it looks like what it is. It's Mackay. He heads an investment strategy team at Schroders, where he serves as the head of platforms for the U.S. client group. I think you're not ready to, I guess you're not ready to jump up and down with excitement, but you don't think we're necessarily set up for a big decline, although 5 or 6 Fed cuts, the market might have gotten a little too optimistic on that.
Yeah, I think that's right. I think the market, well, let me back up a little bit. The market's been more right than the Fed, right? The Fed was late to hike rates. We think the Fed will be late to cut rates. And I think that's where the mismatch is in the market right now. Optimism around 5 to 6 cuts this year. We think maybe they get 3. And if you get more than that, something's gone wrong. You have stress in the markets, something comes out of left field that could cause increased slowing in the economy, and the Fed would cut more in that scenario. And I just can't see stocks rallying in that environment. So I know we're all poised waiting for the CPI data tomorrow. I don't think it's going to be that exciting. Right? Maybe in line with expectations, maybe slightly better in terms of the downside, but the pace of decline in inflation is going to slow dramatically this year relative to what we saw last year. And I don't think that's a good thing for markets.
With the political backdrop, will there really be anything other than that that is as exciting as what we've seen in recent years? Jay Powell, I mean, everybody, if his eyebrow twitched, we thought it meant something. 4%, no, it's 5%, no, it's going to be below. All those things could become more stable, and we might just be agonizing over what happens in this election.
I hope we're not agonizing over it. We will eventually, but probably too much to hope for. I think that will really start to take hold in the second half of this year as we get closer to election day, and there's more certainty. We're never 100% certain, but we have some idea of who the leading candidate is and what might be the result of that election. But I do think the first half of this year is going to be epitomized by a lot of continued uncertainty around when do they cut, when's the first cut, is it March, is it June, is it July, how quickly do they cut from there?
You said nothing about hike. You said first cut.
I would be shocked if they hike this year.
How about a recession? You don't think a recession, which is first time in history they've successfully done this, isn't it?
Look, we all talk about a soft landing right before we go into a recession, right? And I think the difference this time around is if we go into a recession, it might be a shoulder shrug, right? Relative to what we experienced, obviously the pandemic was an anomaly, but what we experienced in 2008, 2009, and what we experienced in 2001, a slowdown down to 1% puts you awfully close to tripping into a recession. But I don't think there's much difference there. Negative 1%, positive 1%. Yes, it means something to GDP growth and consumers, but it's not going to sort of send the markets into a tailspin.
All right. So is 20 times earnings
too much?
And that's where we are.
Yeah. But it's skewed by the Magnificent Seven. And so I think what we'll see this year is a broadening out of participation in the market. The equal weighted index doesn't trade at 20 times. It trades at sort of 16 times, right? So that's the rest of the stocks. That's 500 stocks equally weighted versus, skewed by 30 to 40% of the S&P 500 and 7 stocks.
Earnings have to grow this year to support where valuations are right now?
I think so.
How much will they grow?
So the expectations are for 11%. I think that's way too optimistic. Coming into fourth quarter earnings this year, you saw analysts cut expectations quite a bit, I think around 6 or 7%. So the bar has been set really, really low. We're really interested to see what companies say about their expectations for growth this year. I expect a lot of caution. It's not going away given the amount of uncertainty we have in the market. But I'd be very surprised if we got 11% growth
Does
this year.
that slow it down though? If you have earnings season and companies are cautious and it doesn't match up with that, is that kind of where there's the rubber meets the road and markets reassess?
No, because I think companies will beat the estimates, right? The bar is so low, it's almost on the floor that it won't be hard for them to surprise to the upside. But I think what will happen is analysts will start cutting their out quarters estimates, and you'll get that 11%, moving down into the mid-single digits. I don't think that's a one-day catalyst. All right, we've got the information we needed, now we can sell stocks. I think it's probably, at least for the time being, more related to what the Fed does and what information can we glean from economic data to make a decision on whether we should buy more or start taking risk off the table.
What city did you grow up in?
Sydney, Australia.
What is the most annoying cliche about that? Let me ask you. Have you ever thrown a shrimp on the Barbie?
I have.
Have you
I've
had
never eaten a bloomin' onion.
You've never eaten a blue
I know.
onion?
It's a little intimidating.
Have you had a Foster's?
Yes, disappointing.
Are you a men at work guy or an
Vegemite sandwiches?
Delightful.
Yeah?
Oh yeah, with a beer.
with a Foster?
Not a Foster.
Not a Foster.
Not a Foster.
Foster
Not a
was the
Foster's
word
guy.
for beer down there. See what I mean? I was going to take this to a level that's so annoying, you might not come back. No, it's good. I've never been. Have you?
Yeah, absolutely.
You know. No.
No.
Oh, you're missing out.
You're missing
Except
it.
for the flight.
It's beautiful.
That's
Yeah,
not
that's
I got another
that's the
one.
only thing stopping.
I got another one. That's not a knife. This is a knife.
That was really good.
Remember that?
Maybe in the sequel. They could do a remake.
Crocodile Dundee.
Paul Logan right there.
John, thanks. And I get to do that because I got your name right.
You do. You're the only one. Sorry, Becky and Andrew.
Thank you, John.
Thanks.
Appreciate it.
Thank you all.
When we come back, we've got much more on the SEC weighing approvals for the spot Bitcoin ETFs. Up next, we'll be speaking with Ethereum co-founder Joseph Lubin. Squawk Box will be right back.
Welcome back to Squawk Box. We got a lot of confusion going on in the crypto world. This after a tweet from the SEC's X account saying the first spot Bitcoin ETFs had been approved. Well, that is not true. Chair Gary Gensler quickly posting that the agency's account had been compromised. We're still waiting for an official yes/no call from the SEC. And it very well may be that while it wasn't true yesterday and the tweet wasn't real, then it may be true today. So we'll see. Joining us right now is one of the architects of today's crypto ecosystem, Joseph Levin. He's the co-creator of the blockchain of Ethereum. He's also co-founder and CEO of Web3 and software company Consensus. Good morning to you. What did you think when you first saw the tweet yesterday?
So I wasn't watching the market directly at that point. I heard about it from colleagues, and essentially it's an unfortunate unforced error, symptomatic of unforced errors that politicians and regulators have been committing in America. Around the world, politicians and regulators have recognized that blockchain and crypto are powerful disruptive technologies, and they're taking a considered, mature approach to understanding how the technology will benefit society and how it should be regulated. And there's just been so much pent-up demand in our ecosystem that I think it caused somebody to play a prank or to take advantage of the SEC's resources to effectively manipulate markets and harm
I want to talk about the prospect of what may come after, frankly, the approval of a Bitcoin ETF, which may very well be an Ethereum one, and we should talk about that in a moment. But I'm more curious about why you think it's taken. Let's just assume that they're going to say yes, and maybe that's a good or bad assumption. But assuming that's the case, do you think they should have done this 2 and 3 years earlier? Do you think there's been shifts and changes in the evolution of that ecosystem that needed regulation and other things that are now in a better place that would explain why today is different than it would have been 3 years ago?
Yeah, so I think one argument is that there were immature markets that could be used to manipulate the price of the digital assets. But the fact is people had exposure either directly or through other financial instruments like GBTC, and retail traders, other investors were harmed by excessive premiums, and ETFs are just much more efficient instruments, and they should have been made available a long time ago.
Can you make a distinction, though, between Bitcoin and Ethereum in the following way? People talk about Bitcoin as digital gold. There was a point at which people thought it would be a true currency of sorts rather than sort of a store of value. Ethereum is very different. And so the question is, does Ethereum need an ETF in the same way?
Yeah, so Bitcoin can be a store of value or a collateral currency. There are transactional currencies called stablecoins. Many of those are resident on Ethereum. Ethereum is a commodity. We call it a crypto fuel because it powers transactions and storage on the network. And so Ethereum is a platform for building decentralized applications, and decentralized applications represent a new kind of technology, and for a new kind of industry, we need deep, liquid, and broadly accessible financial instruments to enable the industry to operate more effectively, just as agriculture and manufacturing have had for decades.
And is your sense that more people are going to ultimately get access or buy or invest in Bitcoin through ETFs and the like, or by actually buying the underlying asset?
Yeah, so in 1997, an executive might ask their secretary to type up an email for them and send that email. And that's simply because the technology was difficult for that executive to directly operate at that point. But the message got through, and the executive and the technology both got more capable. There is so much money on the sidelines managed by registered investment advisors in different kinds of funds like retirement funds and companies that want to access the technology, that want to gain exposure to these uncorrelated assets or digital asset class. And so there was a bit of run up by speculators in our own industry in the price of Bitcoin, anticipating these ETFs and soon, hopefully, an Ethereum ETF. But the point is, there's a giant amount of money, hundreds of billions of dollars on the sidelines that's waiting to get in and get exposure to this.
What is your sense in terms of conversations you've had about the prospect of Ethereum or a Solana ETF or other kinds of currencies being allowed to go down this path if in fact we get to an approval on Bitcoin?
So Ethereum is arguably the most mature ecosystem, the deepest ecosystem. There's just, as a platform for decentralized applications, there's just so much infrastructure and activity around the world. Bitcoin is a narrower technology, but it's a reasonably mature technology. So they're both prime candidates.
Joseph, though,
Solana's a great technology, but it's not a mature ecosystem yet.
Okay, but let's take that out of the equation then for a second. Let's talk about Ethereum. Have you spoken to the SEC recently and gotten any indication that you are next on the docket?
Nope.
No.
They don't tell us their intentions.
Well, the reason I ask is because I think over the last several months there's been clear indications or signaling or something going on where people seem to know or think they know about what's happening as it relates to Bitcoin and ETF.
Yeah, so we're like maybe like the secretary in 1997 or the builders of the email systems in 1993. We have direct hands-on to making the technology and making the technology usable. We are much less focused at consensus on sort of more traditional financial instruments enabling the mainstream to get access to that technology.
Joseph, we always appreciate your perspective, and we appreciate you joining us, especially as we may or may not see an approval of it, of Bitcoin, that is, and we'll see.
But let's hope today is the inflection point for the decentralized protocol revolution. Thanks, Sam.
All right, coming up, AI's place in our day-to-day lives. That's a big focus at this year's Consumer Electronics Show in Las Vegas. We're going to take you live out there to Sin City when Squawk Box returns.
is.
Where's the beef? It's apparently with Mark Zuckerberg in Hawaii. The Facebook founder posting on Instagram that he has now started raising cattle at his ranch on Kauai with the goal of creating some of the highest quality meat in the world. He said the cows will be fed macadamia meal and drink beer, or foster, or beer. Also produced at the ranch, all of his projects. Zuckerberg called this one the most delicious. I immediately think about the farts. And a guy like him would be a very, anti...
You're talking about the cow farts, not the people farts who eat it.
No, I was talking about the no. Yeah, exactly. Talking about the cow farts, and that he's so woke that I'm surprised Mark is not spending more money with that delicious chemically made beef that no one eats anymore. Do they?
I don't know.
Well, was going in every fast food place. They were signing deals. Everything, the sausage, we're going to be the fake sausage on the... Is anyone touch that stuff? And only Bill Gates. He kind of looks like he eats that stuff.
The Impossible Burgers, Beyond.
Yeah.
Beyond. What was the other one? Beyond.
Oh, they said Julia next.
Okay, we're moving on. The Consumer Electronics Show is back in Las Vegas. 130,000 attendees checking out the latest from 4,000 companies. Our Julia Borston joins us right now with a look at the big trends taking over the convention. Hi, Julia.
Good morning to you, Becky. That's right. I'm here in Las Vegas at the Consumer Electronics Show, and this year it's all about artificial intelligence with generative AI assistants and tools incorporated into every sort of gadget. Samsung showcasing an AI companion robot called Bali. It interacts with other smart devices in the house. It can project pictures and videos on your walls, or it can check on your pets by sending pictures of them to you when you're out of the house. Samsung's new AI refrigerator tells you what's inside, the expiration dates, and then suggests recipes based on the ingredients you already have, and it lets you order ingredients that you don't have in the fridge.
For the refrigerator, it's definitely about convenience in the kitchen, right? Automating all those different tasks that you don't want to do because they're household chores, and then making it more exciting so you have more time to spend with your family.
This year, there are more AI-enabled cars and tractors than ever before at CES, with Intel just last night announcing a new AI chip customized for vehicles as the company battles with NVIDIA and AMD to power the Internet of Things. Mercedes is here with an AI in-car operating system that's designed, they say, to be empathetic and to respond to the mood of the driver with the likes of directions and restaurant recommendations. Meanwhile, L'Oreal became the first company to have a beauty CEO keynote here at CES, demonstrating its AI-powered beauty advisor, as well as a virtual makeup try-on. Now, not all the AI here was entirely ready for prime time. Meta was here showcasing its Ray-Ban glasses, but the new AI tools that Zuckerberg announced for those glasses were not quite ready to demo just yet. Guys, back over to you.
Those glasses look a heck of a lot better than the other glasses that I've seen tried on before, generally huge box ones. Those looked really stylish. Julie, the thing I think I thought the most as I was listening to everything you were talking about, all the cool stuff out there, is how many things are broken in my house right now that require multiple visits from people to come fix them. I mean, the AI stuff is great, the electronic stuff is great, but just make it work.
Well, that's the question, though, is that if your refrigerator is connected to the internet and has software, then maybe you could update the software remotely.
Or maybe I need
and
an
you
IT
need someone
department
to come and fix it.
Yeah, I know, but it's not just the things to make the parts work to make it cold. It's like now I got to have the IT guy to make sure that the internet stuff works.
Yeah, because ultimately everything in your house is going to be a computer. Samsung also had a washing machine that is AI powered to use less power to dry and wash your clothes. All of this seemed very cool, and I did kind of enjoy the refrigerator demo. I was like, that would be useful.
Sort of. Julia, thank you. We look forward to lots more fun stuff from out there. When we come back, former Commerce Secretary Carlos Gutierrez will join us on the state of labor in the United States, and we'll get his take on all those recent revisions to the monthly job numbers. Stay tuned. You're watching Squawk Box, and this is CNBC.
humanly possible.
Yeah. Welcome back to Squawk Box. We got a new read on consumer strength. Steve Leisman joins us this morning with the numbers there. Steve.
Hey, good morning, Andrew. Yeah, interesting story here. The CNBC NRF Retail Monitor for December, which uses actual credit card data from Affinity Solutions, shows retailers chalking up decent gains in the final month of the holiday season, but the true state of spending may now be clouded by a new factor: deflation. Retail sales ex auto and gas, according to the CNBC National Retail Federation Monitor, up 0.4%. That's just a bit below the average for the series and down from the strong number of 0.8 in the prior month. Year over year slips to 3.1 from 4.2. Take out core retail sales, which removes restaurants. It struggled a bit, up just 0.2% compared to 0.7 in the prior month. Year over year, 2.4 versus 4.2 in the last reading. Now, some give back from the strong November numbers was inevitable. Economists expect the economy to cool overall in the fourth quarter after those outsized growth numbers we got in the third. Simply too soon to say if this is the beginning of a broader consumer slowdown. Worth watching, however. What we know is that retail's been hampered by a slowdown in the housing industry. All three of the biggest negative numbers we have in our categories are housing related. Electronics and appliances down 3.2, building and garden supplies down 1.5, furniture and home furnishings also down as well. But general merchandise stores did okay. People were out in restaurants and bars up 1.5%, and non-store retailers, that's your internet retailer, up 2.6%. Deflation, another factor. Goods prices, take out food and energy, have fallen for 6 straight months. They're down 3.7% at an annualized rate from June through November. Some of the categories with the big spending declines also had sharp price declines if you use the November inflation numbers. So with that in mind, here are the results from the 2023 holiday season, up 3.7% on the top line there. Takeout restaurants up 3.3%, a pretty good Christmas. So after months of subtracting inflation, guys, to get the true state of the consumer, well, now we have to add back deflation in some sectors. The question is how retailers are managing margins, whether they can be as profitable with prices on the way up as they are now with prices on the way down. Andrew?
Steve, it's a fascinating one, and we're going to continue this conversation. I don't know if Steve's going to stick around for this conversation.
I think he's going to be listening.
He's going to be listening. Steve, we want to thank you for joining us, giving us a lot to think about.
In fact, joining us right now to talk more about the consumer, workers, and what he's watching in 2024 is Carlos Gutierrez. He is former U.S. Secretary of Commerce, the former chairman and CEO of the Kellogg Company, and a CNBC contributor. And Carlos, welcome.
Thank you, Becky.
Let's talk a little bit about what Steve was just mentioning, this inflation picture, the now deflationary picture in some places. I've used this on air a few times recently. I keep trying to get a feeling from people because there was a moment during the pandemic, the things that you said when you came on with this that have stuck with me ever since. You talked about how you had managed inflation in the past. You managed it at Kellogg in South America. I think it was in Mexico, maybe,
yes.
When you were running
in Latin America.
Very high levels of inflation. And you gave a warning to CEOs at that point that if they didn't get with it and realize that inflation was coming and raise prices as a result, that they would never be able to catch up and their profits would suffer greatly. We're seeing a little bit of a reversal of that at this point, and maybe it plays out with Carrefour and PepsiCo, the battle that they're undergoing right now, where they're each saying that they're no longer working with each other because of price hikes that Pepsi had been putting through. Where do things stand right now? What would be your message on the inflation deflation picture, and what would you tell CEOs right now?
Well, I think and the Carrefour example is a good one because it's late in the game. And that's why I was saying, take it now, take prices early. You may regret it for a couple of months, but there's going to come a point where companies can't take pricing anymore. And I think we're getting there. And by the way, going to Carrefour, you can't, what do? You go back to the others and say, well, I gave them a special deal. So it's really, that's why companies here go to Walmart first. Then they can say, hey, Walmart's taking the price increase. But
because Walmart's going to be the toughest one to deal with.
Yeah, the toughest one. So if you got Walmart, most other people take it. I don't know where Carrefour stands, but they're not the largest in Europe. So I think that there's a lot of discounting going on. Consumers aren't really seeing the regular pricing, especially in grocery stores. They are in restaurants and others.
Meaning the list price
yes.
at a grocery store is no longer the list price, just like on pharmaceuticals at this point.
Yeah, it's like everything I look at, and I still visit grocery stores, it's kind of a habit, you know, it's on sale. There's a deal. There's a buy one, get one free. So increase prices 10 and give back 4 or 5 until consumers, you know, get used to it. Now, pricing at restaurants, that's regular pricing. That's where the price increase comes through for the company. But, you know, there are very few companies who are feeling 3% inflation. I think, you know, 3% is maybe at a consumer level, but you talk about services, maintenance, parts, equipment, the kinds of things that go beyond salaries, there's more than 3% inflation out there. So I think there's still inflation in the supply chain that hasn't come out. I still see shortages, and there are shortages out there that are still being held up. So 3%, I think 3% is probably a pretty good number, kind of plateaus. But I wouldn't be surprised if we had a couple of months with higher inflation in 24.
I mean, you can see pressure points building, like with the Red Sea and shipments having to go around the Cape of Good Hope, how that is going to add time and money to cost to companies at this point, too.
It's interesting that that hasn't been fully seen in oil prices. Not yet. But I was reading this morning, it's getting worse, so, you know, that's the kind of thing. There's so many unknowns next year. There's just so many things that the status quo, the most likely picture almost seems unlikely. You know, Biden versus Trump, really? You know, everything gets sorted out in the Middle East. Well, it doesn't. Russia, and it just keeps coming and coming. So
you've made an interesting point that companies, if they're facing all these cost pressures, and you said take the hikes now that you can. If Joe Biden heard you say, President Biden heard you say that, I mean, he points fingers at companies as gougers for causing the inflation. They don't fundamentally understand what companies need to do they? And you know, shareholder profits are everything, but that is why people risk their money to you know, to participate in the American economic system. So but when you said that, did you say, what am I saying? This is not going to go over well, that I'm saying companies should take price increases now while they can? You're not helping.
Well, I think I am, in the sense that...
You know what I mean, though.
You know, but you're right. You're absolutely right. And it sounds awful. And if you don't, you know a bit of the substance, it's hard to understand. But if you don't take it, your margins decline. If your margins decline, you have to lay off people.
That's right.
You know, it's just, it's a vicious cycle.
So when do you think this moment happens where you can't take it up?
I think it's beginning.
And there are probably some industries you can't take it up now.
I think it's beginning to happen. And companies didn't go up, say, 5%. A lot of like 10%, 12%, which becomes pretty easy when you're dealing with small numbers. But I think we're getting to that stage pretty much now. I think there are companies who can take pricing, and I'm surprised it's happening to Pepsi because they've got brands that you have to have.
Yeah.
But
it's
a bit late. It's a bit late. That's why it was important to do it now when you see it coming. In the kind of inflation we had, it was probably good to look at not cost in your system now, but next cost. So it's next cost in. What's my cost in 5 months? And that's what I have to price to, because when I start collecting the money, that's what I'm going to be dealing with. So,
Carlos Gutierrez, we are really thrilled to have you as a CNBC contributor. And
real pleasure. Thank you. Great to be here.
Appreciate that we're going to be able to talk to you a lot more about how
Thank you.
stand.
Real privilege. Thank you.
Thank you.
Still buy all this suit. Is that color?
Yeah.
Lucky Charm?
North America. That's Chili Mills.
Okay. I like them all. Coming up, time is growing short for Congress to get a final deal on funding the government. After a break, we're going to hear from Texas Republican Senator John Cornyn. Squawk Box coming right back. little more than a week now remaining before funding expires for about 20% of the federal government. Congressional leaders announced a roughly $1.6 trillion spending deal last weekend, but it's unclear still whether that can pass in time to avoid a partial shutdown. Join us now, Republican Senator John Cornyn, great state of Texas. Good to see you, Senator.
Good to see you.
I had to rent a car in Georgia with Texas plates, and I don't know, I felt good. I'm not really sure why. I like Texas. I really like Texas, and I was proudly driving that thing around. People stayed out of my way, damn it. So is this going to happen? Do you think? Where do we stand right now?
Well, Speaker Johnson has a 2-vote margin in the House. His hope is to get moved forward separate appropriation bills out of the 12 we're supposed to pass each year. But I'm afraid that the time is so late, and the time is so short, I should say, between now and January the 19th, that in all likelihood we'll have to pass another short-term continuing resolution in order to try to get the appropriations process in place. But this could have been avoided if we had simply just started earlier. The Senate had passed, the Appropriations Committee, 12 of these bipartisan appropriations bills that were ready for action on the floor of the Senate last summer. But now time is so compressed and the deadline is so short that I'm afraid we're looking at another short-term continuing resolution.
I mean, normal Americans, Senator, just, you know, that's an overused phrase about making sausage, but a lot of them really don't care about the minutia of trying to do all these things to keep the government open. What they do care about is that government starts addressing some of these really big problems that we have, and one is immigration. We've been talking about all day long, and every day it seems like it's more people are just cannot believe the situation we find ourselves in. And it does play into the funding that we're trying to do, and funding Ukraine, funding Israel, and everything else. What is can you give me an outline of the big picture on what we need to do and what politicians should be doing for the people?
Well, there's no state more negatively impacted than my state of Texas. We have 1,200 miles of common border with Mexico. Finally, national leaders like the mayor of New York and Washington, D.C. are finally taking notice because it's impacting them. But it's been impacting me and my constituents for the last 3 years, where we've seen unprecedented levels of people showing up at the border and doing one of two things: either claiming asylum and being released into the interior of the United States, or simply were being released with not even claiming asylum. And then, of course, then there are the 1.7 million so-called gotaways that were evading law enforcement. This is a man-made disaster, and the man who made it was Joe Biden because of his open border policies and the welcome mat that he has put out to people coming from around the world, literally hundreds of different countries, and because they know they can make it. In the meantime, the people that continue to get richer are the criminal organizations that smuggle people from around the world, as well as the drug cartels that smuggled the drugs into the United States that killed 108,000 Americans last year alone. So this was a man-made disaster, and the man who made it is Joe Biden.
Well, and then you talk, I see that press secretary, every time someone fields a question, she has a pat answer for that. Did Republicans refuse to fund any money for closing the border? She's got some arcane bill that didn't pass because that was included in it. So that's the throwaway answer she's able to give someone fed to her, and that's what you hear every time. So everybody's just like this. We're just pointing blame at each other while terrorists could be entering the country, and little babies are crawling on a rug that had fentanyl in it and they're dying. I mean, it's embarrassing as a country for the United States to be in this position.
Well, you mentioned the emergency supplemental that the president's requested for Ukraine, for Israel, for the Indo-Pacific, and yes, the border too. Senator James Lankford, our colleague from Oklahoma, has been in negotiations to try to use this unique point of leverage. And I think this is sort of an inflection point for the country. I've been in the Senate a long time now, And you're right, all we've been able to do is talk about it, and nothing seems to happen. But I think this is a unique opportunity for us to actually do things that will make a difference in terms of the flow of people across the border. The problem is Congress can pass a law, but it's up to the executive branch, the president, to actually enforce the law. And so far, President Biden's been unwilling to use the laws already on the books to do just that. But we're going to not only provide more tools to control the border, but also for the next president to use as well, somebody who's more willing to enforce the law and to control the influx of humanity across the border.
I think there's the primary season is coming up, Senator, like Tuesday, right?
Right.
What can you, I mean, I follow you on Twitter. I think you follow me. You're such a, straight-laced guy. Have you endorsed Donald Trump at this point for president?
I'm going to wait and let the primary voters make that selection. If the vote was today, it looks like President Trump would be the nominee, and I'll certainly support the nominee in my party over Joe Biden. But I think there's still a story to be told here in Iowa and New Hampshire and South Carolina. And my experience in politics has been that sometimes it surprises you. So I'm going to wait to see how this unfolds.
Well, we've had a lot of things happen recently where if you live long enough, both of us know, if you live long enough, just nothing shocks us anymore, does it? It's just where we're living in. I say this, it seems like I say it every day, that we just shake our heads at the times we're living in. Senator, thank you, and good luck, and hope to see you again soon.
Great to be with you. Thank you.
Okay.
Coming up, we are going to talk markets and get you ready for the opening bell on Wall Street. As we head to a break, you might see that we have some special guests behind us. We want to say hi to a very special group of young men. This is the Rutgers lacrosse team. This team actually has been ranked in the preseason as number 15 coming into this. They were the 6th seed in the tournament that they played at the end of last year. They are back at school already because they've got their home opener coming up on February 3rd. They've been busy.
Good day, look.
Well, they are Wall Street bound. They're going to be learning a lot about Wall Street today.
They can't wear a tie on Friday, but these guys can all look at those guys.
These guys can. And we are appreciating that they are here today. They're visiting with us. They're going to head to Bank of America. They've got big plans today. And we're glad that they're here. We'll be right back.
Welcome back to Squawk Box. Joining us right now, talk about the markets. Mona Mahajan, Senior Investment Strategist at Edward Jones. I don't know if you've been listening to parts of the broadcast, but from some senses, inflation may not be going away. We've got some other worries about where the consumer really is and how much money they're really making. What are you thinking about right now?
Yeah, thanks, Andrew. And look, I think we're headed towards what we're calling the last mile on a lot of these fundamental issues. So inflation is certainly one of them. Getting from 3% to 2% may be bumpy along the path, but we do think we're heading in the right direction of travel. We think especially given what we're seeing in real time in terms of shelter and rent pricing and potentially a softer wage gain profile, that'll help us get core inflation down to a more meaningfully closer 2% level. And then, of course, the other parts of the last mile are the Fed. Fed is actually going to go from probably a pause to a pivot in sometime in 2024. Maybe not as soon as the March meeting, as a lot of market participants are hoping for, but we do think they're headed towards rate cuts. And the third part of the last mile is in the economy. So we'll finally get an answer on whether we're getting a soft landing, a hardish landing. But in our view, if the economy holds up, which is our base case, we may slow to below potential growth, but we're not heading into any sort of recessionary environment. That is a good backdrop for markets broadly. So if you have a Fed that's cutting rates and an economy that is slowing but not recessionary, markets can look through that and perform. And so we see opportunities.
It sounds like you're bullish after what was a pretty bullish year. Would you buy the markets broadly, or is there something specific you do?
Yeah, look, I think after a 24% year, we can't expect a repeat of that indefinitely. 24% in the S&P 500, that is. But of course, there are opportunities. And I know a lot of the guests you've had on have talked about this as well. But when you think about what drove markets in 2023, it was really this barbell between the Magnificent Seven and then cash, CDs, cash-like instruments, where really investors piled into. Now, when we look at the opportunity set for 2024, we are seeing a broadening in that. If the theme of 23 was narrow leadership, we think 24 will be broader leadership. So you want to make sure in your portfolios that you have not only some of that Mag 7 and artificial intelligence exposure, but also you have some of that equal-weighted S&P, the S&P 493, parts of value and cyclical, even mid and small cap, which of course are starting to play catch up, but we think have more scope to run. And finally, your bond portfolio becomes more meaningful this year, especially if you're taking some of that cash-like instruments and slowly complementing it with investment-grade type bonds, which we think
Mona,
lock in.
we got to go. 10 seconds. Would you buy the Bitcoin ETF? Yes or no?
Hello?
You still there?
Yeah.
We lost. Oh,
I think we lost her.
Did we? Hello?
I don't know.
buy or short the ETF?
Would you buy the ETF, the Bitcoin ETF, assuming it's approved?
Me?
Yes, you. Yes, you.
I wasn't sure if I was back. I think the Bitcoin ETF is a great part of your speculative basket. Everyone has that 5% that's lottery ticket money, but that's a great place to put it.
We'll see whether that lottery ticket gets approved today. Make sure you join us tomorrow. Thank you, Mona. Squawk on the Street begins right now.
Lottery.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Sarah Eisen at Post 9 of the New York Stock Exchange. Favors at HQ. Kramer's on assignment. Futures a bit soggy here as investors await CPI tomorrow and a 10-year note auction this afternoon. Oil's a bit elevated on a new round of Houthi attacks in the Red Sea. 10 years below 4. Our roadmap begins with watching tech. RBC downgrading the sector. And one Apple analyst sees, quote, little room for upside. Also, NVIDIA notching its best two-day gain since last March.
Plus, approved or not approved, the SEC is investigating a fake post on its X account as investors await the fate of Bitcoin ETFs.
And HPE acquiring Juniper Networks for $14 billion. CEO Antonio Neri joins us later this hour.
Let's begin with the markets this morning. We're sort of in a bit of a lull where the elements from conference season are beginning to fade. JP Morgan Healthcare, of course, CES, ICR, awaiting CPI tomorrow and the banks on Friday. This chatter, Sarah, is largely about whether or not CPI nudges up a bit, takes us back to 3.3 year-on-year as far as consensus sees it.
We know it's very important when you get the scenario analysis from the trading notes on Wall Street, and that's out right now. As long as CPI stays in line, which is 0.2 to 0.3%, say, on the headline of an increase, and I think that the details matter here as well, because we know the Fed is watching core CPI, and that strips out food and energy, which is more volatile. And we want to see that year-over-year number below 4%, right? 4% is this sort of sticky double the Fed's inflation target, 2%, David. Look, there are some reasons to be optimistic. Used vehicles continue to decline. Hotel and airfare, some of those services sector components, communication services should continue to decline. But there are also parts of it that are sticky, like shelter and rent, which have been slower to moderate in terms of prices. We've also seen medical care costs, insurance costs continue to rise, and that affects the core of the CPI as well. So that's the big market mover. Comes out on Thursday. Otherwise, we'll hear this afternoon, 3:15, from New York Fed President Williams, and there'll be a lot of positioning ahead of this inflation report.
Yeah, you know, and listening to Double Line Capital's Jeffrey Gundlach, I felt like he was channeling you, Sarah. I mean, yesterday you were talking about that, you know, the curve de-inverting, highly suggestive of a recession. He even wanted to talk about the dollar. I don't know if we have it, but or with a quote from him, but we can take a listen as he sort of, again, he's always worth a listen. Doesn't mean he's always right, but it was, you know, him saying basically it's highly suggestive of a recession. I think dollar's going to have big problems in the next recession as a consequence of the policies that we run to try to deal with what could be very, again, painful. There's that word again, Sarah, recession.
Mm-hmm. So the question is he late? Because he's been calling for a recession since early last year. Or is he wrong? Because the consensus now does not expect a recession, expects the economy to get away with a soft landing. But you're right, he's looking at the signals that the recession camp is looking at. The inversion of the yield curve, which has been inverted now for a really long time and has been steepening, which could signal recession. The leading economic indicators, which, you know, at these levels predict recession, the lags in monetary policy. There's still a case for that. And I think that when you're focused on the bond market, look, he manages $100 billion in assets and is a fixed income investor. You've got to pay attention to things like that. It would be a correction for the equity markets, which have been resilient mostly on this idea, Carl, that the economy is looking good. Even fourth quarter GDP, Atlanta Fed, I mean, they took it down a little bit, but it's still printing above 2% growth at this level.
Indeed. Tying in with CPI, of course, is some geopolitics, and this latest attack from the Houthis, from Houthi-controlled Yemen into the southern part of the Red Sea. CENTCOM with an interesting tweet last night. This is the 26th attack now since November 19th, and JP Morgan took a crack at this yesterday, Sarah, sort of arguing that the additional time it takes to go around Africa, another 10 days, and the way in which Suez traffic is down 30% since mid-December, sort of reinforces their view that global core CPI easing is going to stall out.
Because of shipping costs. Yeah, I mean, look, shipping rates are elevated. They've jumped as a result of these attacks. They're nowhere near levels that we saw during COVID. And I think the prevailing view is that they won't be sustained and that the Fed can't do anything about this. You know, the government is going to do it. And the U.S. and the U.K. responded yesterday to these attacks. It's certainly a factor we're watching, along with, David, other geopolitical issues. You know, I keep repeating this stat. Countries with 60% of the world's population are going to be voting this year. We're going to get a Taiwan election in a few days. Obviously, we have the U.S. election coming this year. I mean, investors are paying attention. It's never easy to game out how it's going to necessarily impact the markets, but we are watching it, and I think there's some heightened alert about volatility.
It seems a little early, though, doesn't it, Sarah, in some ways?
For the U.S.?
Yeah, certainly for the U.S. I know we got India, we got a few others, right? Whose note was that pointed that out as a key thing in this coming year? I forget.
I don't know, a bunch of them.
Yeah,
I've read it in a few notes. We're going to talk to Ann Bremmer in Money Movers about some of the risks, including Taiwan, which is coming up.
Yeah, elections on Sunday. China stocks, by the way, hovering just about near a 5-year low this morning. Let's talk about this wild ride surrounding Bitcoin last night. The SEC, as you may know, denying it has approved spot Bitcoin ETF, saying yesterday afternoon's post on X stated otherwise was false and that its account on the site had been compromised. Eamon Javers was all over this last night, and we'll watch it today as well. Morning, Eamon.
Yeah, good morning, guys. We got a little new information about the hack of the SEC's Twitter, now X account, last night from a posting by X's security team. Now remember that, as you say, Carl, in the 4 p.m. hour yesterday, the SEC's official account published a statement suggesting that a Bitcoin ETF had been approved. That triggered Bitcoin prices, but within moments, the SEC said it was not true and their account had been compromised. Overnight, X posted a statement saying The compromise was not due to any breach of X's systems, but rather due to an unidentified individual obtaining control over a phone number associated with the @SEC.gov account through a third party. X also said that the SEC account did not have two-factor authentication enabled at the time of the hack. Now that's a standard extra layer of protection, and it's going to raise questions about why the SEC did not take that obvious security step on such a high-profile account. I reached out to the SEC this morning for their side of all this. Have not heard back from them yet. We'll update you as soon as we do. And of course, there is some rich subtext to all of this, guys. As you know, X is owned by Elon Musk, who has been a bitter critic of the SEC for years. So the blame game here could be particularly pointed, and we'll follow it throughout the day as we try to figure out exactly what happened and who made and lost money, and of course, the manhunt now for whoever did this, guys. Back over to you.
Eamon, it's David. I just find it shocking that they could not have that they did not have two-factor authentication on that account. I mean, it should be standard for every single person who's watching us, for any of their financial accounts, or frankly for virtually anything at this point. I don't even know how they explain it. I mean, you know, you can do it from home. I know they still may be working from home, many of them, but you can even do two-factor authentication from home. You don't have to be in the office.
Yeah. One of the things, so a lot to unpack there, right? One of the questions is going to be, the X statement said they did not have two-factor authentication enabled at the time of the hack. So one question that raises in my mind is, did the SEC ever in the past have two-factor authentication, and perhaps it somehow was undone in some way? And remember, X has had a big push on to get people to pay for two-factor authentication, removing it in some cases from non-premium account holders, people who don't pay for the X account. So I've got some questions around, when did the SEC have two-factor authentication in the past, if they did, and under what circumstances was that removed, if it was? So we're going to have to really dig in here and get some answers from both X and SEC on this, because there's some possibilities here that are really intriguing, and as we say, there's a blame game going on now between X and SEC. Neither one wants to be holding the blame for this.
Well, it's particularly rich when you go back to Cyber Awareness Month, hashtag Cyber Awareness Month, which was back in October. There's a Gary Gensler tweet that literally says, there's a reminder to secure your financial accounts as well as protect against identity theft and fraud. Remember to set up multi-factor authentication and use strong passwords or phrases. Also, you know, Eamon and David, the SEC has been really on top of this issue of cyber security.
Yeah.
They put in place new rules, I think, that just went into effect, that force, you know, public companies to disclose more when they are attacked. I know the SEC is not a public company, but they're going to have to disclose a lot of information here. It raises a lot of questions.
Those rules just went into effect in December, Sarah. You're exactly right. And a lot of public companies are now feeling under the gun to disclose a whole lot more than they did in the past as a result of the SEC pushing them on cyber disclosures. We're going to have to see now whether the SEC follows its own rules here. They don't necessarily apply to the SEC, but in good faith, will they follow their own rules and disclose exactly what they're, as much as they can, about what they know about what happened here? You know, how did this exactly happen? Was it social engineering? Was somebody bribed inside the SEC? Was somebody hacked? Most likely, you know, it's simply a phishing attack that tricked somebody into clicking and filling out their credential information, and some bad actor somewhere in the world got that information. Then the big question is, who done it? Someone made a lot of money here, I would guess, right? Because you saw the price of Bitcoin spike there. You see it on the screen right now, just before 5 p.m., about 4:11 p.m. last afternoon, when the prices really spiked. Knowing that in advance that spike was coming was worth a lot of money to somebody. Will that person get caught? Will they be punished? That's a whole other set of questions.
Yeah, well, Eamon, thank you. And of course, speaking of Bitcoin, you can see it is going to be down, although we're still waiting for the actual approval of that Bitcoin ETF. More on that a bit later. Let's move on now to the grounding of 171 Boeing 737 MAX 9 aircraft. The company's CEO, David Calhoun, saying the jet maker needs to acknowledge its mistake in relation to the Alaska Air blowout incident. Phil LeBeau's on the phone. He has the latest for us. Phil.
David, we are in the 737 MAX plant in Renton, Washington, where we'll be talking with Boeing CEO Dave Calhoun later today. You mentioned that safety town hall meeting yesterday. If you listen to the audio, or if you watch some of the clips that Boeing put out, it is clear what a change in tone there is from Dave Calhoun compared to previous CEO Dennis Muhlenberg during the MAX crashes and the groundings that happened in 2018. During the town hall, Calhoun was very frank in saying, look, we need to acknowledge our mistake. Every detail matters. And there wasn't any talking. This was an audience of workers who clearly are impacted by what they saw on the Alaska Airlines airplane on Friday night. Let me bring you up to speed in terms of the MAX 9 investigation and where things stand. The NTSB is analyzing data. We will not hear from the NTSB probably for many weeks, if not months. This is going to be meticulous work in order to analyze not only the door plug, but also any spare parts that are ultimately found. They're still looking for the quote-unquote bolts that were part of holding that door in place. The FAA inspection rules for the grounded MAX 9, they have not been finalized yet, and so the length of the grounding is unclear. There was some thought that maybe by the end of this week we might see some of those feather back into service. Unclear at this point when that will happen. Boeing, by the way, has a safety team. This is basically an ad hoc committee, if you will, a group that they were put in place after the MAX crashes. They're going to be focused on what happened on Friday night with the door plug on that Alaska Airlines plane. Don't forget, we're going to be talking with Boeing CEO Dave Calhoun coming up this afternoon on The Exchange. This is a CNBC exclusive. You do not want to miss what Dave has to say, not only about where they are in terms of trying to figure out what happened on Friday night, but more importantly, addressing questions about the culture and quality control here at Boeing. Guys, back to you.
Yeah, I mean, that's where I was going to go, Phil. I'm really looking forward to your conversation, and I do wonder, I'm sure the details matter on this incident, of course, but because it's been a string of problems in recent years, how Boeing and how he specifically combats this idea that they put profits before safety.
That's in a nutshell. Now, Dave Calhoun will tell you we are not putting profits before safety. Having said that, Sarah, you cannot deny that there have been a string of incidents over the last several months, some of them involving their primary supplier, Spirit Aerosystems. Some of them are self-inflicted wounds. And so the question becomes, you are the preeminent manufacturer, one of the preeminent manufacturers in the United States with a long and very detailed history in terms of tackling huge challenges. You've got to figure out how to make an airplane where there's no issues. And that's front and center for Dave Calhoun and his team right now.
Very complex, Phil. Look forward to that interview this afternoon. That's Phil will go on the Boeing story today. When we come back, former SEC Chair Jay Clayton here at Post 9 as we await some official decision from the regulator on spot Bitcoin ETFs. Take a look at the pre-market. As Sarah said, we'll get Williams this afternoon. 10-year note auctions on deck. NASDAQ futures going positive. Got some calls on Home Depot, Toast, the third Apple downgrade of the year so far. When we come back.
Oh my. Okay. Well, we're definitely at support on SPY. I'm going to clean this up. But is that trend line right there? Funny how things change on the 1 minute. So we're going to squeeze it to 200 on the SPY. Are they pumping the market this morning? So his whole attitude, that guy's attitude has totally changed about Boeing now. Oh, it's going to be fine. We're going to know exactly what we need to know in 2 hours. No. Jimmy said no. Tesla's got the Model 3 in Europe. No price cuts. And then LEN had an upgrade on their dividend and their share buyback. That's for, when you hear news like that, that's for your swing traders. It doesn't mean a damn thing to me unless I was swinging it. So I'd set an alert off the 200, whatever the 200 is on the 1 hour. That's maybe when I'd think about taking the trade. Or the 51, but definitely the 200. One thing that I've learned this year that I really have never put into perspective is to find which moving average does it respect the most, and then use that one for like on a 20-day 1 hour, or if I was using a 30-minute, or it's definitely the 9 on the 30-minute.
Welcome back to Squawk on the Street as we
And
await an official decision from the SEC on a potential approval of a Bitcoin ETF. Our next guest says it's, quote, inevitable, and the time is here. Jay Clayton joins us, former SEC chair, CNBC contributors here at Post 9. Jay, it's great to see you. Thanks for coming in.
Nice to see you.
So, yesterday's news is what everybody's chatting about. I don't even know if it's fair to ask you what you think happened.
Well, look, there was a compromise.
It's not the first time there'll be a
The question when
compromise
something
either.
like this happens, and this isn't the only place or the only time it's happened. Like immediate, what happened? You deal with it. You get operationally back where you were. It's clear the SEC is operationally back on board, right? And let me just address your question. I don't think that this should in any way affect whatever their time frame was for dealing with these ETF applications. Right?
Okay. Well, there is some concern that it would push back any approval, if in fact approval was in the office.
No, I mean, I got Sarah on here already. Snooty. There's too many fat cats that are putting these out now, so they're going to pass it. I'm pretty sure they're going to pass it. It's just no way around it. You got BlackRock involved, you got Kathy Wood involved, you got 19 or 20 applicants, I don't know how many applications. They can't accept them all, but they'll accept the ones from the biggest fat cats of them all, and BlackRock runs the show. And I heard they just laid off a bunch of people due to AI. That's what it's going to come down to. You'll see a lot of these layoffs coming this year. 500 people, can you imagine that? And Boeing's problem is employment. It's the biggest problem. Turning woke. They've had issues for a long time with hiring people, getting good people on the job, and they're hiring just what they can. So they're going to be pumping. They want to keep Boeing up, that's for sure. So my advice on Mara, I have 2431 as a support to hold, and I think I might have one that's a little bit lower for a strong buy. That's 2277. So if we pull back to that 2277 and you're in the stock, I'm not going to recommend this until after. I'm going to trade it after the fact, because I don't know if it's going to be buy into the news or sell into the news, but it's got a lot of people's attention. Not Mara, but I mean Bitcoin itself. I traded Bitcoin 8 years ago with John McAfee to get a job with him. Then I found out he was kind of a little bit crazy, and I didn't want to take that risk. I'd end up dead like him probably, if he's dead. I think he paid somebody. He was very boisterous on the internet, kind of like not as bad as Elon, but worse. Hanging around with AK-47s and strippers hanging around him, talking smack. Then I said, I don't want nothing to do with this guy. And he actually emailed me, said, what are you applying for? And I said, well, I want to be your chartist. Let me be your chartist. Give me $500,000 and I'll take care of your property and be your chartist. In Belize. Then he got into making some kind of freaking drug. I said, God, this guy's an idiot. So I think earnings is going to be the catalyst to break the all-time high. They're definitely bullish. You can't fight the bulls in this case. And I think the only thing that's going to fix that is going to get, I think we were shot at again over there. Sooner or later, we're going to have to fight back. I don't know where all my charts go that I... There we go. Sarah.
Okay, good to see you. James Lamb. Let's walk on the streets back after this.
Remember.
Still to come on the show, the deal of the day. Hewlett-Packard Enterprise Antonio Neri on his company's $14 billion deal today to acquire Juniper Networks. and where AI fits into the strategy for growth. More Squawk on the Street when we come right back.
We got one more minute. Just got to clean this up so I can read better. Just rechart it. Sometimes you got to clear them up. Watch mirror right out of the gate. We have had a pull back to a support level. It's a descending flag, but it might squeeze to the upside. Find some resistance at 26.15. So it's really not much of a bounce on Mara. And here we go. The market's very bullish. We got three white crows, soldiers coming out of the gate. SPX opened up, so it's going to pull back to the 200 or the 9, and we'll test that support level. We got an ascending triangle on SPY.
Bell here in the CNBC real-time exchange of the big board.
With an inverse head and shoulders. 474.69.
S&P going to work to hold 47.60 here or so. As we've had a pretty, obviously a lot of things have not gone right year to date. The January first 5 days was red. LPL yesterday with a nice note saying we still have the full year January barometer with some 15 or so sessions left in the month. Russell with quite a nice gain over 50 days as well.
Getting these in the AM.
Best 50-day rally in the RUT since 2020.
There have been some bullish calls on the Russell 2000 index of small caps lately. Goldman says good setup for Russell 2000 outperformance because you have better than expected growth and really cheap valuations, and that combination should be powerful.
They were pumping the Russell yesterday. We got Mr.
The S&P,
down $2 and something
so far this year. The other group I was just looking at the open, there's a lot of anticipation for CPI tomorrow, but we're also getting bank earnings.
We just broke out on the SPX.
The quarterly earnings period, and banks have been more in favor ahead of this earnings release. In fact, some of the JP Morgan looked at the positioning data on the banks, and it's much more bullish heading into
I already said that,
report.
lady.
Banks have had some nice outperformance, and that goes along with the fact that small caps have done well and cyclically sensitive stocks have done well. David, as far as the banks, we're going to be looking for loan loss provisions. Those provisions for credit losses should continue to normalize. That would be a good sign. Maybe resumption in loan activity because it's been a weak spot for all of 2023. That would be a signal that the economy looks better. Always important to monitor the comments from the CEOs as far as the consumer and the economy, consumer balance sheets, consumer checking accounts, and whether those continue to remain strong. But with the stabilization of interest rates.
Yeah, watch it. We got a snake on Mister, and we pulled right back to my 552.41. This should bounce.
Trading day
So I'm going to look at the option call.
Performer. I remember that upgrade from Mike Mayo, right? That was sort of day one of the new year in terms of trading, saying he's a believer in terms of some of the changes Jane Fraser trying to make at Citi actually coming through.
Now I heard that yesterday they were having a hard time on YouTube listening to my voice.
Well, it's up 25% over the last 2 months. Guys, I did notice, and we're, as I said, this is what, our 7th trading day of the year, I believe. But we've already got some distinctive moves in terms of groups. Pharma by far the outperformer. I mean, the likes of Merck is up over 8% so far this year. You've got J&J up over 3%, Gilead 9%.
They were pumping Pfizer also.
Some significant moves there. Of course, Pfizer sort of trails as it often does, and Bristol Myers is actually not positive for the year, but generally
trails. How dare you?
There. Did note Lori Calvasina in her most recent note where she downgraded tech to a market perform. Points out her overweights are financials, which we just discussed.
We got a 1, 2, 3 on Pfizer.
Also energy
on a pennant flag.
Interesting move there. And man, Nvidia, you can't stop it.
I haven't talked much about pennant flags. I think I'll.
A $1.33 trillion market value. Not that far away from challenging Amazon's $1.57 trillion value, but it has outperformed the Mag 7 for sure. And chips overall, many of the stocks.
We got 3 white soldiers leading out of the gate.
So far this year.
Yeah, nice little.
On the SPY.
The incredible chart from last year, David. Look at a 1 year, you can see an even stronger tick at the very far right side of that chart, up almost 2% today.
You showing a chart?
Best 2 days now for Nvidia since that earnings blowout last May. And a bunch of other chip news today to watch. Intel talking about automotive. Qualcomm, I think, is presenting this evening. TSM came in with earnings as well.
Right now, nothing.
Halted a sales decline in the fourth quarter, and just good news overall that we learned that global chip sales rose for the first time in more than a year as demand started to rebound, and it's fueled by AI. Revenue hitting $4 billion in November, which was a 5.3% increase from a year earlier. There was also an interesting FT article, did you see, about NVIDIA in particular, and Chinese companies repurposing some of the gaming chips as they're trying to work around the export controls. This has been kind of a swing factor for sentiment around NVIDIA, certainly coming out of last quarter, which is NVIDIA, we know, has been building new chips, I think 3 of them, to try to circumvent the export controls, and there have been mixed reports about China's demand for those chips. This would suggest, the FT article, that, and I think there was a quote in there from an analyst, that China was a little more desperate for them, which is why they're repurposing these gaming chips. Just a factor to watch as we head into earnings, which are not until February for NVIDIA, with the stock marching higher.
I do report a little bit late. David, a ton of media news, which I think would be fun to bundle. I mean, a lot of it's
1, 2, 3 on Pfizer.
Warner with this new production deal with Tom Cruise, the Disney ESPN drama, along
We
with
double topped on NVIDIA.
Feature directed by Jon Favreau. AMC close to all-time lows. Comcast Sunday Night Football averaged 21.4 million viewers this regular season, up 8% year on year. There's a lot today.
Way to go, Comcast.
Yeah.
And we got the big playoff game on Peacock, don't forget. I don't know what they're charging for Peacock these days, but it's a bargain at any price.
Yeah. And even IMAX, global box office last year, almost 1.1 billion. That's close to a record.
Yeah.
Now AMC, we're below that $5, and that's very important. And I've been kind of monitoring this kid about pumping this stock, so I finally made a statement to him this morning. I said, "What the heck, man? Don't be pumping this stock if you got all your eggs in one basket." And it's got a lot of attention right now. So we failed my support level, and I'm not going to trade it yet. I've got it on watch. PLTR had that downgrade, but I don't think it mined too much because we hit a solid support. And Kathy Wood's about to dip on my I told her to. And we got Mara, discretionary Walmart, Riot, PG. NVIDIA pulled. Now, what is this? Did I say double top on NVIDIA a second ago? I think I did. Walmart's breaking out. Very strong support off the old resistance, strong buy off the 200 SMA. And that's what we did. We came back and hit that 200 SMA. And we're about ready to hit a resistance here. And we broke the resistance. Watch Mister. This will be a big bounce on this one. We're going to come back and retest the 200, maybe not. We're trading a pennant, another flag. And watch the SPY. Almost out of the beach trade. I got 582 resistance. Just looking at that chart, I'm looking for a pivot point in yesterday's flag. But I'll verify it here with something else. We got a yin yang. We got to break the 21 on the 1 hour time frame. Okay, get ready. We got the VWAP. I'm going to set another alert right off the VWAP here on the SPY. God, these things are expensive. Next week's Mister. Oh my God. I ain't paying that kind of price for these. Oh my, man. It's way out of my league right now. So what do I do in this kind of situation? I go far out of the money. Yeah, it's just too much. People ain't gonna pay this price for this. It's crazy. Well, take that off the table. Damn. Oh, look at that. What happened here? Get some bad news. The crypto-related stocks trading lower after SEC's X compromised. I mean, let me see if these prices drop. I could go 600, but the spread is too wide. Got a $200 spread. Never mind. Let's look at something else. Tesla. So, Tesla launches new version of Model 3 in North America. Them don't look like bullish candles to me. Spiding out 110. We get out of the gate and you see these soldiers like this, that's very bullish. Coin. We've got a double bottom on coin out of snake. There's Apple hat. Apple had the snake break out, pull back. Come on now. I don't understand what's going on with this thing here anymore. Where's Tesla? NVIDIA is the only thing that brought the market up yesterday. Oh yeah, we got the 30-year and the 10-year auction coming up on the bonds. JP Morgan's double topping. Home Depot was being pumped yesterday and today. Boeing. AQST. Watching it. We run on the same trend line yesterday. Baba. I ain't finding anything yet. Okay, we got our pullback and SPY here. I'm going to do the SPY. It's January 11th. I gotta have a different chart. I got the VWAP on that one. Where's my other? We're at the 50 on the 1 hour, and that's been very respectful. 50, 50, 50, 50, 50, 50. Well, 50, 50, 50, 50. I had the 200 as support. I think I'm going to just hold off here a second. We got a 1, 2, 3, 4. I got a 1, 2, 3, or 1, 2 on the 1 hour. So let's look at the 5 minute. Yeah, let's wait for the 200. And we're on the 9, so if we stay above the 9, we're bullish. we got a spinning top. We got a gravestone. Here we go. Right now, I'm going to start my first position here off the 50. This is on the 1 minute. I'm in small. They can easily come back and hit the 200. December inflation review. Bitcoin document. Walmart. Let me look. Theta decay, okay. Google's pulled back to the 200. So this is kind of a bear flag right now on Walmart. We got an expansion pattern. Jimmy would wait. Jimmy would wait for the 50 SMA on the 1 minute. Yep, I'd sure wait for that. Wait for the pullback. Walmart soars high to the Dallas-Fort Worth, Texas, launches massive drone delivery expansion covering up to 75% of the DF. Wow, that ain't true. Can you imagine drones delivering you food? I can see some redneck out there shooting them out of the sky here in Missouri. So Jimmy's in the SPY right now. He's going to get his beach trade out of the way. We're at the VWAP. I've only got 5 contracts, so it ain't much. Should have got 10. But I figured we might have pulled back a little more. So if I get this to 90 cents, I'll take my 50 bucks.
Nunari, CEO of HPE.
ETF S&P briefly went positive for the year a moment ago. We're back in a minute.
If we break the VWAP, I might just hold it a little longer. Walmart, I'm going to move my alert up to the 51 on the 1 minute. That'll be a double bottom on the flag. See if I can get this up to the Head and Shoulders. At 475. Got a black dot on the video. You people hear me okay on YouTube? Yep. You.
The NBC.
Good Wednesday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla, live from Post 9 of the New York Stock Exchange. David Faber live with us from CNBC HQ this hour. Take a look at stocks. Up a little bit this morning, being powered by Microsoft, Meta, and NVIDIA. Those are three heavyweights, of course, helping the communication services sector rise to the top of the market. We're adding to gains on the week, up more than almost 1.5% on the S&P at this point, higher than that for the NASDAQ, which is little changed right now. Dow rebounding as well. It's up about 60 points. It's lagged this week.
Got my 200 that I called. I should just been a little bit more
Let's
patient.
get some wholesale trade data with Rick Santelli. Morning, Rick.
Good morning, Carl. Yes, wholesale inventories and sales. These are for November. It's a November final on inventories. They remain down 0.2%. And what is very notable here, Carl, is we have not had a positive number on wholesale inventories month over month since November of 2022. We've had a few unchanged, but nothing positive. On the trade side, the sales, well, this is November, not a final. This is a new November, and it is unchanged. We're expecting up 0.4, so it's a disappointment. And last month's minus 1.3 gets downgraded even worse to minus 1.5, the second worst number in wholesale trade sales of all of 2023. Do remember that we have an auction of 10-year notes today. It's going to be important at 1 Eastern, and we are now looking at all maturities of treasuries have traded under yesterday's lows, although they have reversed a bit higher in the last few minutes. And German IP, month over month and year over year, the 6th consecutive negative read in a row. The juggernaut of manufacturing in Europe doesn't seem to be a juggernaut anymore. David, Sarah, Carl, back to you.
Yeah, more recessionary type readings out of Germany.
SPX.
Europe. Thank you, Rick Santelli. As far as other data that we got today, kind of a light day ahead of CPI tomorrow. But I did want to mention the mortgage data because look at the S&P. Home building and home improvement stocks are at the top of the market right now. And what we got not surprisingly, was a rebound, especially in refinancing. So applications to refinance a home loan jumping 19% from the previous week. They were 30% higher from the same week a year ago. Obviously, new applications still much lower than where we were last year, but they did rise 6% for the week, down 16% from where we were. We watch it because mortgage rates have fallen from their highs as Treasury yields have fallen. You know, they're still in the high sixes right now for a 30-year fix, so that's still going to be substantially higher than where most people have their mortgage.
Better stop out.
But
just give it another
guess
shot.
it's an opportunity to refinance from where we were, say, a few months ago when we were around 8% on that mortgage rate. Look, I'm watching housing, guys, because housing prices have been stubbornly high, and that's been a problem for the Fed. We're going to get CPI tomorrow, and within that services number incorporates the high rent prices, for instance, that we've been seeing. There's a great chart today out of Bloomberg that shows shelter has been more stubborn to come down in terms of prices than the rest of CPI.
I don't think they're going to come down that
goods
much.
And for other components
Not if they keep
in the index. If you look at
pumping
shelter
this
versus
pay
all of the
increase
other
in these
items
wages.
on prices, excluding
Inflation's
food,
a strange
and
thing
shelter,
sometimes.
you can see shelter
Whatever
in the
their
blip,
inflation they're
stubbornly
talking
high.
about is
That's
nothing
a
to what
problem.
I
We
look
expect it
at.
to be elevated and rising again tomorrow.
Because I don't think it's affected
the
anything that
rises in prices, Carl, have been moderating,
I've
and
looked
that's
at or
certainly
I've-
key for the trend of where it's going.
Yeah.
Used cars,
asking
houses,
rents,
they're
down
not
5
dropping
months in
in
a row. If
price.
you watch apartment list, Redfin said the other day
Food.
that monthly payments for home owners has fallen
EV
year on year.
bikes.
We're just waiting for it to catch
Thought
up
about
to some of
getting
the
one of
macro
them.
prints.
Yeah, because a lot of people, it's a lagging indicator, right? And so,
I just
so a lot
don't
of people
see
think it's
prices
headed
coming
in the
down
right
very much.
direction for that.
Not
As far
with
as
this
what else we'll be watching
administration.
within that CPI report,
'Cause they're not
obviously the
focused
super
on
core
that.
is important because it's services ex shelter. We've seen moderating growth as well in services thanks to
They're only focused
things
on the
like
1%.
hotel prices coming down and communication services prices coming down. So we'll see if that trend continues, but it's psychologically important because it's, you know, we'll get PCE next
Walmart
week,
did
which is
not
that's
come
the
back
Fed's
to my
preferred
support
gauge of
yet.
inflation. And then
New
we've got a
high.
Fed meeting at the end of January 31st, and the expectation is obviously for another hold, but how will they frame the number of cuts? The Fed officials we've heard from, and we'll hear from Williams today of the New York Fed, who always gets a vote,
Go make
is
some
that they haven't
coffee
really
real
pushed
fast.
back on cuts. What
And I
the
gotta go
more
do a
hawkish
couple
spin
things
on it
today.
has been that they are saying we're not ready yet. We're not talking about it yet. Maybe second half of the year. So pushing the cuts. We're at what, David, a 60% or so chance that the Fed cuts according to the markets in March. So after tomorrow's number, that's going to be the part of the market that you want to watch because it's come down as we've had strong data, including jobs and other pieces of data.
Yeah, March will be here soon. I always like to just, remind people of the calendar. What about the key things you like to watch, Sarah, in terms of, and or what the Fed really watches most closely in terms of where their head is at?
Well, I think they're paying pretty close attention to inflation and jobs, which is that's simple. That's their dual mandate, of course. And on jobs, well, we did get a really strong headline number, and I know, Carl, you've been
If
all
I
over
get
the fact
80
that some of the
cents on this
internals were a
thing,
little bit
I'll
weaker.
be up
And yes, we
200.
saw high wage growth, but we saw shortened work week. There was
No, it
another
won't be up
chart
that
that
much.
I
It'll be up
that I
$100
pulled
bucks.
out. Just because I thought it was interesting from David Rosenberg, who we know has been bearish and doesn't always look on the bright side of these economic reports, but has some good data on how many people have multiple jobs. So multiple job holders in the U.S. And what you can see at the end of the chart is that it's climbed, and there are things like that happening. And he says that level where we are right now, which is what 1 in 20 workers basically hold multiple jobs. 5% of employed workers are holding multiple jobs. That's a sign of stress in the system. So again, headline numbers are okay
SPX
in the
came to
labor
the
market,
200.
but we're looking for those little signs of stress. And you put that with yesterday. I was talking about the more than $20 billion in debt that consumers took on in November. That was 3 times the estimate. And there are clearly signs that things are cooling down. I'm moderating this panel later, guys, on Brookings. It's virtual, so feel free to tune in. And the topic is, David, it's one that's really hot right now, which is why is all this economic dissatisfaction? Why do we feel so gloomy about the economy when jobs have been strong and the
So far, we're
economy has
having a
been
stubborn
strong? And
day.
it's something obviously the White House is trying to figure out and will have political ramifications. And you look at some of these indicators, the multiple job holders, the temporary jobs increase, the consumer debt, that they're taking on a lot of debt. Perhaps there's some clues in some of these indicators.
Perhaps. I mean, a lot of people just simply come back to overall inflation, even though, of course, as we have pointed out numerous times, it has slowed considerably, and we continue to focus on it for obvious reasons, Sarah. When people look back at their grocery bill from 2 or 3 years ago to what they're spending now,
Exactly, he's saying
I guess
it.
it just gets them depressed.
Yeah, because it's still higher, even though we've seen the pace moderate.
It has not
importantly,
moderated.
Still
Chick.
higher than we were, and in many places, still seeing small increases, which is going to be a big theme for tomorrow.
My hamburger, the steaks up here
credit
are,
quality,
I can't
deposit
tell you.
flows, betas, and all
My
that. Gonna be
steaks.
important for banks on Friday.
If I want a
Investors
good
are gearing
steak,
up
I
for
gotta pay
earnings season. As we
25 to
said, big
30
banks,
bucks.
Kick off the day after tomorrow. Our next guest does remain bullish on earnings for this year and next. Ed Yardeni joins us today, Yardeni Research President. Ed, great to have you back. Good morning.
Thank you.
There we go.
You've been so constructive on
Now I'm
sort of
gonna
the
take my
long-term
profit here.
picture, on earnings, even the indices, on productivity.
Right, hit the VWAP.
And it did sound
Let's
at the
make this
beginning of the
clear.
year like you were a little more cautious about the first half. Can
So
you
I had
go
to
into
get
that
out
a
of
bit?
this trade.
Well, we
I got
had
stuck
such
in
an
this trade.
amazing rally. It was really
Thought I
almost
had
a
something
melt-up
going here when she
at
popped
the end
up,
of
but
last
she
year,
didn't. She
and the
went
Santa
ahead and
Claus
knifed
rally
on me.
started
And
way
I
ahead
had
of
10
schedule.
more
It started on
contracts right
October
here
27th.
at 5.
And as a
So
result
once you
of
hit
that,
the VWAP, you already
valuations
know
got
it
a bit
tested it
stretched,
once.
and I think there's a
when you're
sentiment that is
scalping,
extremely bullish.
You want to get in
So
and
I
out of
think
that
we're
trade as
due
fast
for a
as
little
you
bit
can.
of, not a correction, but kind of a sideways action for a while. But then again, I look at the
Now I
way the
gotta wait
market's
for it to
trading,
kinda
and
tell
there's
me
still a
what it's gonna
tremendous
do
excitement
next.
about technology. And every now and then I get a little deja vu all over again about the late 1990s when we also had irrational exuberance about technology. And NVIDIA is a great company, but it's reminding me a little bit of Cisco.
Although you did point out earlier in the week that how the forward PE has fallen from the 80s to the 20s.
For NVIDIA, it really has. I think not only are we seeing exuberance by investors, but certainly we're seeing exuberance by analysts. I mean, they dramatically
So I'll take
increased their
120
earnings
bucks for my beach
expectations
trade today.
for NVIDIA. But look, it's a hot stock, and it's probably going to remain a hot stock as long as AI delivers. And I think it's going to take somewhat longer for AI to deliver
Yeah, I heard
as much as the
Amazon
market
laying off
seems
too.
to expect. The other thing, Carl, is I think the market has expected too many
The more
rate
they get
cuts
into
this year. I'm
AI,
in
the
camp
more
that we're not
layoffs are gonna come.
Going into recession.
The
Third
human
year in a
factor
row I'm saying
anymore,
that. And I'm in the camp that
I think
believes
it's a
that we're
silent
going to get 2 to 3
story,
rate
but-
cuts probably in the second half of the year, not 4 to 5, which is what the market's been discounting. So I think the market
It's
needs
almost
to
too much responsibility to
redigest
hire
here
somebody anymore.
the fundamentals.
You know, Ed, you mentioned some of the parallels, or perhaps parallels, with this period versus late 90s. And of course,
Right.
rational exuberance, what Greenspan was
I had a
96,
good
right?
one,
And then we
well,
just went
had a good
parabolic for
VWAP.
3+
Parabolic.
years.
I was manager of an
do
art
you-
gallery
you know,
one
how
time,
much
and this
similarity
girl
do you see with the
pinched
current
me on the
period?
butt.
Obviously, the internet and the
said,
excitement that it
"Girl,
engendered in
Sure.
investors then
I'm
versus
going to sue
AI.
you.
Well, I think there's a lot of
Her jaws
similarities.
dropped.
I think the important thing to
I said,
recognize
"Do it
is the
again."
internet was a legitimate technology, and it's clearly been here to stay. And I think AI is a legitimate technology that's
You
that's
try
here
to
to
do
stay.
that
But
nowadays.
the
you'd-
problem is the market can
you'd be
get
in deep shit.
irrationally exuberant about
That was
just
back
how
in the
much can be
70s,
achieved in a very short period of
90s.
time. And I am concerned about sort of
Even
a
in the
parabolic
90s, it was
melt-up.
hard
I mean,
to
it's
set, hard to do.
nothing to be concerned about as long as I tell everybody to,
I had a
to get out at
female
the top.
teacher one time. She said,
Speaking of other things you've been
she asked the
concerned
room,
about
said,
in
"How do you
history
finish a
that you've warned
contract?"
of
I said,
recently,
"Well,
the
you
bond
sign it and you
vigilantes.
shake
I
your
remember
hand."
talking to you in recent weeks saying that they're
No,
back
you
and
don't
they're
shake people's
concerns.
hands.
And we've so far
That-
this year, it
that-
really hasn't
that's
been a
not-
problem.
you don't
The
do
Fed
that
has been a more
anymore.
powerful force on the bond market. We've had some
Especially
well-received
if it's a
auctions,
woman.
including yesterday's. We'll get a 10-year later this afternoon. Do
So
you
what do
think
you
this
mean?
issue
I'm going
comes
to
to
shake.
the fore again?
If I'm going to
Because
make a
they are
contract, I
gonna
want to
have to
guarantee
fix
the handshake
issuance.
is going to always be a handshake.
Well, we'll see. Clearly, one of
got
the
mad at
concerns
me.
is Washington is so partisan that we just can't get a deal done at all on anything.
I took business.
And
I had an
we'll
associate's
see. We're
degree
getting
in
kind of close
business.
to the edge here of whether a deal is going to be struck or not. But I think that
The video
you know,
pop.
back in the good old days when Janet Yellen was Fed chair, I often observed
I think
that
this is a
whenever
double
she
top.
gave a speech on the economy, stock market went up. She's very astute, and what she's come up
Yippers.
with here for the bond vigilantes is she's cut back on the supply of bonds and notes in the auctions, and that's really what happened on November 1st. That's
Big
what really
volume spike this morning.
The bond market
These are
to
these are
the
what we
to the
call
downside in
these
terms of
is
yields.
goalposts,
And that's what got the
volume
bond
spikes.
vigilantes calmed down. Is there were simply fewer notes and bonds
And if
and
you
more
get another
bills.
one, that heads up there, you
On
could
that
kind of
note,
consider
Goldman's
maybe
out with
we're
a
going
note
to
a
have
couple
a
of moments
breakout.
ago, basically putting into context the
Miss
comments we
Vegas
got
taught me that,
from Dallas
or,
Fed President Logan
Tony.
over the weekend, Ed, and they do think that as a result,
Tony might have taught me
they
that.
expect the FOMC to begin tapering the pace of the runoff beginning in May. Does that make sense?
It does kind of make sense. I think the Fed will end tapering before it starts to lower interest rates. I think that will be obviously greeted as a sign that the next thing they're going to do is lower interest rates, and that could be in the second half of the year. But let's not get too excited here. The Fed definitely does not want to get into a situation where they ease
Back
too,
in the 70s, we all
too rapidly here, and
would have a
suddenly
keg and
inflation makes a comeback. They
everybody at
really
work,
got
and
burned.
I remember one time we had a kissing
at the beginning
contest.
of all this, when inflation came out of the blue, and they were late in responding to it. This time around, they want to be
1979.
slow to
I
respond
don't think
to
you can
disinflation.
get away with that anymore either.
Ed, appreciate it. I wish we could have gotten to housing and some of the rolling recovery you've been talking about, but we'll save it for next time. That's
Next
Ed
time.
Denny.
Thank you.
As we go to break, let's get a roadmap for the rest of the hour. We are bracing for a decision on Bitcoin. What happens next? If the SEC does approve an ETF for the crypto coin, we'll discuss it.
Plus, we'll have the latest numbers in our CNBC NRF retail survey. We've got some interesting results, including why disinflation becoming perhaps a bigger deal for consumers and businesses.
Oh,
And
I
a big
forgot to look at
exclusive
Lily.
ahead on CNBC you do
I was
not
gonna
want to
trade
miss.
Lily
Our
again.
Phil LeBeau is speaking with Boeing CEO Dave Calhoun. We're going to head live to Boeing 737 MAX factory in Renton, Washington, ahead of that interview. Big show still ahead here on Squawk on the Street. Dow up about 20 points. Don't go anywhere.
Let's look at the put. The 330, well, spreads are always wide on these anymore. The 630 put, no, the 6, I don't like trading the 627.50. I'd rather have an even or odd number. 625. Let's see if we got any news today. Oh, the headline just tears me up. Eli Lilly could be the next Apple stock. It still looks cheap. No, not going down that road. Don't look cheap at all. See how fast that pullback was? I didn't even get the trade in. It was at 270. It would have been a $50 scalp in a minute. Mike mentioned the double bottom here on Tesla.
Athletics.com.
Welcome back to Squawk on the Street. We're keeping a close eye on Bitcoin as we wait for a decision from the SEC about a Bitcoin ETF. The SEC says an announcement about Bitcoin ETFs yesterday afternoon was false. In a statement to CNBC, the agency said it has determined there was unauthorized access to and activity on the SEC GovX.com account by an unknown party for a brief period of time. Our Bob Pisani's here at Post 9 with more on what happens after trading if
we get approval, Bob.
Yeah, and there's no reason to think that this is going to be sidetracked
jump on that,
at all
Lily.
at this point. So the crypto investors, everybody's waiting for the SEC to approve a raft of spot Bitcoin applications, likely today.
can't jump on,
Attention
Lily.
is turning to 4 areas: fees and how competitive they might be, and they will be.
I'm going to tell you
how
my
it might
thought
trade
process
relative to
on
Bitcoin,
trading the
Bitcoin
Bitcoin.
futures. How much inflow will these
It's
ETFs
too
attract?
speculative
And will
to me. It's
institutions
too much
start
of a
getting in?
risk.
So we've got roughly a dozen applicants.
So I'm going to wait
Fees
until the
are
news
very,
comes
very
out, and
competitive.
then I'm going to
Several,
go ahead and
including
figure out
Kathy
how I
Wood's
want to
ARK
trade it.
Invest, Bitwise, and Invesco
So that's
Galaxy
basically
charging 0%
the way I look at
for
it.
the first 6 months. BlackRock's 0.2% after the first 12 months.
I'm gonna
And
wait,
others like
kind of a
VanEck
wait
at
and see because it's just
0.25%, Fidelity's 0.39%,
for one reason.
Grayscale at 1.5%. That's reduced from their prior fee of about 2%. One of the main questions is whether a spot
up too
Bitcoin
much.
ETF will track Bitcoin and Bitcoin futures. There are some concerns the spot Bitcoin ETF could trade at a premium to Bitcoin, which would create long-term
From $7
backlash against the product. But
to
Bitcoin futures
31.
ETFs have
So I'm
tracked
gonna
Bitcoin
just keep
fairly
waiting for this
well.
peak.
There's some debate about how mature the spot market
gonna
is
stick
for
with my
Bitcoin
first
right now. Most
instinct
think it still has
and
to
just
mature
wait
a
for
little
the
bit more.
hit that
But the
support
futures
level.
market
Now, you
is
gotta
already
pin it
regulated
flag.
and mature. Another issue is whether the Bitcoin
This is
ETFs
called a
can
pin it
trade
flag.
at a premium or a discount to their net asset
clean it up
value.
here so you can
Most
see
believe
it.
the spreads will be very tight here, and any premiums will be small and get smaller over time. We'll have to watch that, however. How much money will
got the
these
pin it, you got
Bitcoin
the
ETFs
flagpole,
attract? It's not clear. We
and then
do
you
have
got
a
the pin it.
precedent, though. The opening of Bitcoin futures
Or you got an
ETFs in
inverse
October
head and shoulders.
2021 brought in significant assets. The main Bitcoin futures ETFs, BITO, the Pro Shares, now is over $2 billion in it. Reggie Brown over at GTS, he's a bit of a guru in this area, estimates all the funds could have 2 to 3 billion in a month and 10 to 20 billion
And
in
we
a
kind of
year.
broke
That's
out of the
significant,
flag.
but it's still small compared to Bitcoin's
Could bounce off the
roughly $900
21
billion
on the
market
daily.
value. All right, what's next? Where do we go from here? What happens Friday, Monday, etc.? The big issue is whether big Wall Street firms like JP Morgan or UPS and large wealth managers are going to allow their investors to trade Bitcoin on their platforms using Bitcoin ETFs. After that, the next big event, that Bitcoin halving, that'll be in April. A lot of anticipation about that. Followed by any interest rate cuts from the Federal Reserve. Remember, generally higher interest rates are bad for non-yielding assets like Bitcoin or gold. And when you got a 4% yield or a 5% yield, that's not great for the competition that's out there. So it's an exciting moment here, and we'll be here. We'll be people on the floor tomorrow, assuming we get approval today. We'll have people on the floor who are floating these ETFs. We'll be talking to them throughout the day.
I mean, the competition, you mentioned the fees coming down because the competition
Pin it
is going
flag
to
is
be
a short-term continuation pattern.
There's about a
pattern
dozen.
that mark a small
depends. There was
consolidation
12,
before the
11,
previous
12 around
move
there. Not all of them have
resumes.
put their fee structure out there yet. So there's
The
10,
patterns are
11
usually
for sure that are
preceded
going
by
to be
a
out
sharp
there. And that's
advance or
tremendous
decline
news
in a
for-
heavy
for
volume
investors
and mark the
because
midpoint
already you could
for the
see
movement.
competition. Kathy Wood lowered the fees to zero
Every
after,
flag
I think, taking a look
has
at the
a pivot
competition, which
point.
had a different fee structure. So the people are out there looking at saying, how do we get the biggest capture? Because the first in is going to be really big.
That's on the
why
daily,
you
so
saw
pull up the
what was
20-day.
going on, 1.5% over there with some of the other ones that were the grayscale. They were 2%. You think, my gosh, that's a lot, but they're there already. They have a huge base, $26 billion already
20-day looks
in
more like
that
a head and
fund,
shoulders.
So they can afford maybe to stay a little bit higher. But I think this is great news for investors. The ETF structure,
gonna stick with
lower
that support
cost,
level, 23.
competition, keep the fees down.
See if it
let
holds.
investors
Maybe
keep
raise
their
it up
money.
just a little bit.
BlackRock's in there too, right?
Yeah, they have it at the
Like,
iShares one, and they're going to be floating first 12 months. It's going to be 0.2%.
23.36.
That's really quite a good deal, considering there's a lot involved in this. You know, they're moving around Bitcoin. They're
Because that's a
trading
descending
cash.
flag
You know,
with
there's
an inverse
friction
head and
here.
shoulders,
There's
which
market
means that
makers
shoulder
involved in
line
the
can be a
creation
solid
redemption
support.
process, and I'm very excited about this. I've had differences of opinion with people about the use case of Bitcoin, but there's no
So
doubt
in
that
every
owning
flag, there's a
Bitcoin in an
pivot
ETF
point.
structure is far safer than the current system. Those who want to, this is the safe way to own.
Right
Just like
there.
owning a gold ETF in 2004, all of a sudden all these old guys with
You got
gold
that
coins
bottom
in their
there,
basement
you got the
hoarding them.
resistance,
I
you got
lost
the
my
support,
I lost the
you
lock
got
to
the
the key,
resistance.
and people losing their passwords
I'm
to
gonna change that color
Bitcoin.
There's an
there.
ETF?
Now there's an
Red.
ETF, and nobody worries about holding gold in the basement. You can if you want. Go ahead, knock yourself out, but nobody worries about it anymore.
Bob, thank you. We're all on pins and needles, especially after the
We'll be here.
fiasco last night. Bob Pisani. Let's get more from the industry insiders about what this decision could mean for the crypto ecosystem. William Quigley, co-founder of Tether and Worldwide Asset
We've got an
Exchange. Tether is
alert.
one-to-one digital currency tied to real-world currencies on the blockchain. It's a stable coin, basically, William. So how does this decision impact you at all, if at all?
Well, simply
The
opening up
Lilliput's going down
Bitcoin
more.
to a far greater pool of institutional capital, I think that's where all the excitement is coming from. You're talking about
Nvidia
funds
dropped
that
also once it hit
collectively
that double top.
control trillions of dollars. So it only takes a small percentage of
Double
those
tops are-
funds
ooh,
to be
really.
allocated to Bitcoin to cause a huge increase in the price of
Man, that'd be
Bitcoin. And of course,
$100
that's what
scalp.
most people want. They're investing or buying Bitcoin because they want to see it
traded
go
this
up.
yesterday.
And Bitcoin has already increased in value from its lows of call it 16,000 in
So we're at the
November
50 right now?
2022 to 45,000
On the
today.
1 minute?
So it's recovered very well from a tough
Let's wait for the 200.
So
We
I think
do
the
have
ETFs
some
open up
support.
a huge base of potential new institutional capital. Personally, I
Triple
have
bottom.
lots of questions about how this is going to be done, the mechanics. But one thing seems for sure, there are going to be Bitcoin ETFs very soon.
What do you mean? What sort of
627.14.
questions do you have about the mechanics that investors should consider?
So many things, Bitcoin how will the
I personally think they were a
institutions
little bit, well,
think
I
about
don't
the
look at the
suitability of
fundamentals.
this for their clients?
I just look at the
There is a
pump
massive
procedure.
amount of discretionary capital that these institutions control. Will the suitability tests, how will they be conducted?
And we'll
What
watch that
about
red.
margin?
I'm going to watch this
You
here.
can
This is a
get
red dot
60%
Pro 2
margin
here.
on a lot
black
of
dot.
stocks. Is this a
And we'll see when
marginable
that starts to turn
asset?
yellow. Then I'm going to get a call.
Exchanges and places where people currently acquire Bitcoin,
I'm gonna get it
they're
before the
able
black dot
to
shows up.
access loans using the Bitcoin that they own. They can borrow against it. I don't know what
I watched this
a lot
yesterday
of
and
these
missed-
institutions are
I
going to
did
say. Many
3
of
out
them
of
may
4.
just say, we're not going to open this up
Then
to
I got
anybody
stuck
but
in one and got
institutionals,
lucky at the end of the
initially.
day.
But people
Mike
like
traded that with
Schwab,
me.
Robinhood,
The SPX.
those types of self-directed investment platforms, they may say buy and sell as you wish. Then you even have the issue of how are these institutions going to acquire the Bitcoin? Because they do need to hold it one-to-one. There are only 900 Bitcoin made a day, minted a day, 450 a day after April when the Bitcoin halving takes place. There's only about 1.8 million Bitcoin freely available to trade on exchanges. That's about a little less than $100 billion worth
Bitcoin. We're
of
gonna talk about
Bitcoin.
Bitcoin all day today.
Sure, if the price goes up, maybe you'll have more people wanting to sell. But there's a massive amount of Bitcoin that doesn't really move. 80% or so of Bitcoin is held long term. So these are the questions I have about how it's going to behave with ETFs.
Yeah, on MicroStrategy's balance sheet, which is, I think, one of the biggest holders of Bitcoin.
150,000, yeah, of the, call it 20 million Bitcoin are held just by MicroStrategy. That's right.
So, I mean, can't they just say it's a speculative investment, just like buying a Bitcoin futures ETF? It's a speculative investment, and buyer beware.
Exactly.
I assume the risk committees are going to be thinking long and hard about this, though. After the financial crisis, there were institutions that decided
MSTR,
inverse ETFs,
telling you,
3X
that thing will fly.
ETFs just weren't appropriate for their customer base.
Just too damn expensive.
I think it's going to be each institution's going to decide what they want to do.
Anybody hear that fart?
Bitcoin is
very
not like a stock where you can look at the
I gotta smell it.
fundamentals. It moves by people's perception. It's sort of the antithesis of the traditional financial system. It's designed to be an alternative to that. So there aren't exactly standard metrics you can look at, like price per share or the state of the industry in order to figure out where it's going. So those are the questions.
That's always been the knock. I just have a quick question, William, as we listened, and it's important to hear some of these concerns you raised. Are the Bitcoin ETFs a competitor to you as far as inflows for stablecoins like Tether?
I don't think so. I think as more people buy ETFs, it's probably a completely different base of buyers
my
than
problem
exists
with
right
following
now
Sarah
in the traditional cryptocurrency
her
ecosystem. I
face.
think they will, once you get it,
smirk.
there's a greater likelihood you'll start to see benefits for things like stable
I look
coins,
at
which
Becky
of course
Quick or I
trade
look at Kelly,
even more so
and
than
they don't have
Bitcoin
that
itself.
smirk.
Stable coins
Like
will
every
likely be
question's a
the way
negative
most
question.
people interact with
When you had that
crypto
smirk to it,
in the
it doesn't
future,
build much
especially
confidence in
when
what you're
central
looking
bank
at.
digital currencies become available.
And I just
So
can't
I
stand
think ETFs will be a positive
I
for
can't trade
stable
with
coins.
people
They'll
like
be a
that.
positive for crypto in general, but how they behave is not clear because of so many factors that we've just talked about.
Well, this is one that has to be continued, William, because you opened a lot of cans of worms there.
And then eventually, of course, things like Ethereum ETFs and other cryptocurrencies.
Which will be the next step, probably. William Quigley, thank you very much for joining us with your initial take from Tether.
Thank you.
Well, still to come, we have a downgrade of the big banks ahead of earnings, of course, that begin later this week. We're going to tell you what names and why. And as we head to a break, check out shares.
They're not going to let
what
their baby
else?
drop too
NVIDIA.
much here.
It has had a very strong start to the new year. We're back in 2.
Now here's a flag. So we're going to find a support. You've got a pin it flag. So here's your flagpole. And it should stop right there. You got a double confirmation of 2 solid support lines. So this is a pin it flag. It breaks out and it pulls back to that top part of the support. So I'm going to go in here and look at the calls right now and just see if I'm right on this. Lily. And we'll look for the biggest volume at 650. So people got stuck in this on the pullback. I don't like to take it right down there. It's just too close to that line. So I'm going to go up here to the 640 strike. I'm going to buy 5 contracts. I got 2 soldiers or 2 crows. It's on the bottom of that trend line. And I'm bearish on this stock. Don't take me wrong. I think it's way too much. But I'm arguing with everybody out there that I'm the only one that's bearish on this irrational exuberance. So this is the 640 strike at 247. The strike price is 640. If it don't work, I'm going to get right out. January 12th. I have to scalp it. Damn. It's already dropping on me.
Minimums.
Welcome back. I'm Courtney Reagan with your CNBC News Update. Hunter Biden is making a surprise appearance on Capitol Hill this morning. The president's son attended a House Oversight Committee meeting where Republicans are holding a committee vote today to recommend he be held in contempt of Congress for denying a subpoena to appear for closed-door testimony related to an impeachment inquiry into the president. Hunter Biden has said he's willing to testify publicly. U.S. and British naval forces say they shot down 21 drones and missiles fired by Iran-backed Houthi rebels in the Red Sea in what is thought to be the militant's largest attack yet. The UN Security Council is scheduled to vote today on a resolution that would condemn and demand an immediate end to the attacks. Well, the Northeast U.S. was hit by heavy rain and powerful winds overnight, leaving more than 500,000 people without power. New Jersey's governor declared a state of emergency before the storm hit, and he warned this morning flooding is only expected to get worse as rivers crest today. If you're in the Northeast, be careful. Back over to you, Carl.
Court, thanks very much. A little over an hour into trading markets here. S&P just a couple of points shy of break even for the young year so far. Let's get to Dom Chu watching some bank stocks ahead of earnings. Hey, Dom.
All right, so Carl, we are tracking some of the increased analyst commentary around the financials ahead of those bank earnings kicking off on Friday. Citigroup is among the first to report, and BMO Capital is downgrading that stock to a market perform. Analysts there are concerned that the credit cycle may slow Citi's ability to meet some of its return targets. Citi shares down roughly 1%. BMO is also downgrading Goldman Sachs to market perform, citing, amongst other things, the bank's exposure to potentially volatile capital markets revenues. Goldman is set to report next Tuesday. Those shares down about 0.75%. And then turning to the brokerages, Citi is downgrading Charles Schwab to neutral and opening a 90-day negative catalyst watch. They see potential risk from SEC market structure rules and a few other upcoming headwinds. So keep an eye on that financial sector as the busy earnings season kicks off on Friday.
Disgusting.
Now I will send it back downtown to you folks, Sarah, at the stock exchange.
All right, Don, thank you. I want to get to Kate Rooney, though, with a news alert here on Amazon. Kate.
Hi, Sarah. So Amazon is laying off hundreds of workers. This is across Prime Video and its MGM Studios divisions, as well as Twitch. Memos were sent to staffers this morning and obtained by CNBC.com, our Annie Palmer there. An Amazon spokesperson did confirm those layoffs. The head of Prime and Prime Video and MGM saying in that memo that the company is making some of the cuts to prioritize investments for the long term and the success of the business. The memo goes on to say that they are looking to reduce investments in certain areas and then focus on more high-impact areas. Not just Prime Video, though, also 500 Twitch employees. Another memo obtained by CNBC this morning. Executives saying that we have to work to do and right-size our company. They say they regret that they need to share this news. It's a painful step, of course, and they're reducing headcount by just over 500 people across Twitch as well. Guys, this adds to years of layoffs. For Amazon, starting at the end of 2022, Amazon had its biggest round of layoffs, about 27,000 people across almost every part of that business. And that company shares slightly higher this morning. You can see layoffs are often seen as a way to increase some of that operating leverage and efficiency. Guys, back to you.
I wonder if it speaks, Kate, to just how much they expanded, though, during the demand for services like Twitch during COVID.
Yeah, there's a little bit of right sizing with a lot of these tech companies, that it's sort of a mean reversion when it comes to finding the right amount of people. A lot of tech companies overhired in the pandemic, and you're seeing this focus on really high impact areas of the business and a little bit more efficiency here. So that's absolutely a theme, Sarah.
Yeah, Amazon up 1%. Thank you, Kate Rooney. Still to come, the latest around Boeing and that Alaska air panel blowout. We're going to take you live to Boeing 737 MAX factory in Washington ahead of a big exclusive interview with our Phil LeBeau with the Boeing CEO, Dave Calhoun. Back in 2 minutes.
Come on, Lily. Should have took my profit there. First time I buy a call on this sucker. Spy hit the shoulder line. There's your head, left shoulder, right shoulder. That's called a head and shoulders. And we hit it, bam. I better not ask her this. I don't want to insult. I was going to ask Vegas if she looked like Sarah. I think that'd be a big mistake. And if she said yes, I'd have to say later.
We continue to follow the latest developments at Boeing. CEO Dave Calhoun saying the company needs to acknowledge its mistake. This after a part blew off a 737 MAX 9 during.
They're going to interview him today, I
Phil
think.
LeBeau joins us live. He is at Boeing's 737 MAX factory in Washington State. And of course, Phil, you got a big interview later today.
Yeah, it'll be interesting to hear what Dave Calhoun has to say. I think his messaging is going to be similar to what we heard in the employee town hall yesterday. Far different tone we're hearing from Dave Calhoun at this point than what we heard from Boeing executives after the MAX crashes and the grounding initially. At that time, people said, boy, way too slow and at times a little bit too tone deaf. Not the case today for Dave Calhoun. We'll talk about that in just a little bit. Let me bring you up to speed in terms of the grounding of the 737 MAX 9s. 171 of the 218 that have been delivered, 171 are grounded. Those are those that have a door plug on them. And of those, they are in the process of figuring out what the protocol is. The FAA was emphatic yesterday in saying, look, the inspection rules to make sure that those planes are safe to fly again, that has not been finalized. They're in discussions with Boeing. And again, 171 of those planes are impacted. Alaska and United, the two biggest operators of Dash 9s around the world. We mentioned the Dave Calhoun employee town hall meeting yesterday. If you've watched some of the clips that have been put out by the company or you listen to the audio, you can tell that Dave Calhoun and his team realize the significance of this moment in terms of what it means for Boeing and its future. In fact, he said, we want to be as transparent as possible. Every detail matters as they work on trying to figure out exactly what happened on that Alaska Airlines plane and why that door plug flew out. Don't miss our exclusive coming up a little bit later on today on the Exchange Guys, where we're going to be talking with Dave Calhoun, not just about what happened on Friday, but the bigger question of ensuring quality control and safety here at the MAX plant. It has been a theme we have hit with him in the past. He has said it is one of his top priorities.
If they were at a higher attitude,
you have an
the
incident
whole
like last week,
circumstance
which then
would
raises
be
the
if there was
question,
two people
how do
sitting on
you
that
change
door,
something that clearly is not
there'd be a
working
whole different
in terms
story
of,
going on right now.
the manufacturing process or
That little
the
boy's
inspection
shirt was
process,
ripped right off
whatever
his
it might be
back
when they ultimately figure out
during
why
this here
that door plug
incident.
came out of that Alaska
If they were at
Airlines
higher
plane.
level, they would
Guys,
all
back
just
to you.
been
And as you
exploded.
said, Phil, the key question now is around culture, right, of safety
Everybody in that
and
plane,
not
and
making
then
these
been-
kinds of
and then
mistakes. Although,
the pilots
I'm reading
would
a
have
lot of
probably made it
analysts
okay,
about
I'm
this
not
and a lot of
sure.
experts. It does feel like there is a key
Because they got
distinction
that door
between
that
manufacturing
that's
and
sealed
production
off.
flaws and design flaws,
I remember when I
especially as
first
it
got
relates
in
to
flight,
this
they had that
problem
open one
versus
time
the
they were
crashes a
flying.
few
Right.
years ago where many people
now
were
they,
killed. Can you explain that?
They seal it off.
Well, it remains to be seen exactly
So this
what
could have been a
caused
lot worse.
what happened on Friday night
And
on
this
that
the way they're
Alaska
talking,
Airlines
I
plane.
mean, I've got the
Almost
different
everybody
attitude
that I've
about this
talked
whole
with
thing.
who is an aviation
Kinda
safety
like Joe
expert
does on
who has worked for the
CNBC.
NTSB, when we've said, hey, what do you think? Just looking at what evidence we have right now from the public, almost all of them say the same thing. It's not a design flaw. They do not believe that it's
So
a
they're
design
pumping this.
flaw.
What I'm trying
There
to say is
are
they're pumping it up.
hundreds, thousands of planes
They're
around the
trying to
world
make it as-
that are flying with door plugs.
glorious,
And this is the first time
even
that
after
you've seen
5
one
years.
come off like this, which then brings up the question,
We
was it a
shouldn't be in this kind of
manufacturing
situation.
issue? And those door plugs are manufactured at Spirit Aerosystems
Not at
in
all.
Wichita, Kansas, or
And
was it a
I was here,
production issue?
and he's a liar.
That's the issue. And then there's
I
also the
remember
question,
exactly
did
what
anybody
happened
else have
during the
access to
Boeing
that door
plane crashes.
from
They
Alaska
came out,
Airlines?
well, they
All,
were
Carl,
press
what
conference
the
after
NTSB
press
is looking
conference.
into.
A lot of questions
They
for
were
your
doing-
interview this
they were
afternoon.
right
Phil,
on
look
it.
forward to it. As David said, Phil LeBeau covering the Boeing story yet again today.
And I
Coming up
shorted
next, the
stock,
latest
and I'm
results
glad
in our
I did.
CNBC NRF retail index and what it's signaling about deflation in a minute.
So if I get this to $3, I'm going to get out of the trade. I'm going to try to break the 50 on the 1 minute. I could get out right now and be happy, but if we could, the 9, if the 9, see how the 9 crossed down here? That's a bearish. You see how the 9 crossed up here? That was bullish. Now the 9, still not ready to cross yet. It's thinking about it. It's getting ready to squeeze. And I think it's way overpriced. Oh, there we go. Damn it. Now I'm pissed. That'd have been $250 instead of the $120. I take that back. Beautiful call off the 200. Linzoid, did you take your SPX off the 200? Person just needs one trend line. I used to teach this class here.
BC Peacock.
I just need one trend line to take a trade.
The CNBC and the NRF retail monitor.
That's the 200 SMA.
Morning, Steve.
On the
Hey,
1
good morning,
minute.
call. Yeah, the CNBC NRF retail monitor for December using actual credit card data from Affinity Solutions shows retailers chalking up decent gains
5
in the
minute.
final month of the holiday season, but the
It
true
would've
state
never
of
happened.
spending may now be clouded by a new factor, guys, which is deflation. Retail sales
1
taking
minute.
out auto and gas, that's our top
Bingo.
line monitor, up 0.4%, just a bit below the average.
200
for the
SMA,
series.
200
Down from that
SMA,
really strong
200
November,
SMA,
0.8% gain.
200 SMA.
Core retail, where we take out restaurants, struggled a bit more, just up 0.2% compared to 0.7 in November. For the year, the monitor was up 3.1, the core was up 2.4%. Some give back from the strong November was inevitable, and economists have been expecting a cool down after the outsized growth in the third quarter. Just too soon to say if this is the beginning of that broader consumer slowdown people have been looking for. What we know is that retail has been hampered by a slowdown in housing. All three of the biggest negatives in our categories are housing related. Electronics and appliances down 3.2. Building and garden supplies and furniture and home furnishings both down more around 1% or more. But traditional holiday related retail, well, it did better. General merchandise up near 1%. People were out in force at the restaurants and bars, and non-store retailers, that includes your internet, up 2.6%. Deflation is another factor. Goods prices, take out food and energy, they have fallen for 6 straight months. Some of the categories where we saw the biggest spending declines also have had the sharpest price declines. So all that in mind, here's the result from 2023 holiday season, November and December together, up 3.7%. A good, not an outstanding, but a good Christmas. Core retail up 3.3%. So after months of subtracting inflation to get the true state of the consumer, now we got to add back in deflation, at least in some sectors. Question is, how are retailers managing margins, whether they can still be as profitable with prices on the way up as they are with prices on the way down?
Going to be key for earnings season as we get going here. Steve, thank you very
Absolutely.
much. Steve Leisman. Up next,
Sure.
Tesla unveiling its redesigned Model 3 as the EV market grapples with some concerns about waning demand. But are fears about EVs overdone? And next hour on Money Movers, we will talk to the CEO of Williams on that big jump in natural gas to start the year. That's coming up at 11:30 a.m. Eastern. We'll be right back here on Squawk on the Street. Dow's up 66, pushing higher.
So my number on the SPY, if we break 47666, we'll go higher. Now, like I said before, it's all about the earnings coming out. She just said it again. Earnings is going to be the catalyst. It has nothing to do with the Fed. The Fed's over with. You won't hear much talk about it unless he raises rates. Here we got a knife on Lily. Should have got me a put on that one. I'm very bullish on this stock. Did anybody take Lily with me and get out? Great job, Linzoid. You did and sold it within a couple of minutes? Good. Keep in mind, I'm very bearish on this stock. Very bearish. I'm very bearish in any pump. Now, I did predict that we'd break out at the first of the year on the 31st of 2023 on NVIDIA. I even sent Jim Cramer a picture and said, "Get ready, Jimmy." He pumped it for 6 months. And he did not answer me back, so I'm a little pissed off at him right now. This is very bullish. This is the most bullish stock out there right now.
Tesla recently announcing a revamp of its Model Y vehicle with production expected to start in mid-2024. This comes, though, as headlines do signal a slowdown in EV sales and perhaps waning interest from consumers. Our next guest says that's all overblown. GM board member and former Tesla president John McNeil joins us now. John, good to have you.
Tesla hit the 200.
We've all seen the headlines. We've talked about them. It's not that it isn't still growing, but perhaps growth is slowing. Why do you say that's not the case?
Hi, David. It's good to see you. I think the headlines are disconnected from the data. We sold roughly 700,000 EVs in the U.S. in 2022, and that number jumped to 1.4 million in 2023. So the market doubled. And Citi just released a study last week that said
now this is a General Motors board
59%
member.
of consumers who are considering a car purchase are considering an EV. So I think the demand is clearly there, and it shows in the sales numbers.
Yeah, so you don't buy this idea that, you know, the first adapters have already been addressed, that those who look at it now have range anxiety, concern about whether the charging network's up to speed. Used car prices for EVs have declined a lot. Perhaps that aftermarket also worrying people. You're not a buyer of that?
I think there are two things that are true in 2024 that weren't true in 2023. And the first is charging, as you just mentioned. So this year, and in fact this month, Tesla's supercharger network opens up to GM, Ford, and other manufacturers. So that means that there's really charging parity. And you've got ubiquitous charging that's available to EV buyers. So that didn't exist in 23, and I think that adds tailwinds to demand in 24. think the second thing that is unique to 2024 that wasn't true in 2023 is lower priced EVs. You've got now a number of models like the Chevy Equinox coming on. The Equinox is a $35,000 compact SUV with 310 miles of range. Those kinds of cars coming on, I think, are really going to move the market. For people who like the Bolt, they're really going to love the Equinox.
Yeah, and of course you are a board member of GM.
Yeah.
You know, I wonder though on that front, I mean, is it not the case that GM has slowed its transition to EVs? We all know what the goal is and where it stands, but you know, it does appear that things have slowed a bit in terms of ICE to EV.
I think all manufacturers, and GM included, and GM's talked about this, are transitioning through a production challenge, which is battery packs, battery modules, and battery cells. And as they work their way through those challenges, you'll see the production volumes go up. And that's really what's affected volume in 23, and those constraints should be relaxed in 24, and we should see a lot more production volume out of the domestic manufacturers.
John, we just got some numbers of EV sales growth in the United States, at least from Cox. Last Q2 up 15, Q3 goes to 5, Q4 goes to 1. What do you think gets that back into double digits, if anything?
I think what gets that back into double digits is more models at a lower price, for sure. There's a sorting, Carl, that's going to happen in Q1 with the $7,500 federal tax credit. A number of EVs went off that list for Q1, and the manufacturers are really working hard to get them back on the list. And I think that's those two things combined. Lower prices are going to drive more consumer demand for sure.
John, what kind of progress do you think will be made this year in terms of the charging network? You mentioned it earlier, but you know, when you do think about impediments perhaps to people's buying decision, the idea that you might find a charger that doesn't work, or simply the time it takes, certainly could be one reason they don't go EV. What are your expectations for the advancement of that network?
I think it's, first, the Tesla charging network being opened up to other manufacturers is an important step. I think number two is we're adding 900 EV chargers a week now in the U.S. So we're finally starting to get to pace, and the IRA money is being now released to help increase that number even further. So we've got roughly 200,000 chargers in the U.S. We're adding roughly 1,000 a week.
You just lied. How much did you say a little bit ago?
With, I think, answering people's range anxiety issues. But we've got a long ways to go because China's got 1.4 million chargers. So,
China's got a different situation.
Almost 10 times the number of chargers we've got here. So we've got a long ways to go, but we are definitely getting on the right track and picking up our pace.
What China's doing,
and more competitive EVs outside of their domestic market as well. John, always great to get your temperature on these things. Appreciate you. Thank.
China's got these little stations. China's got these little stations where you can do a battery swap. And I just think that's so much cooler if you're going to buy an EV car and your battery goes bad, or you get low, you just go in there and you swap the battery out and you move on like a little gas station. I just think that's real cool, but I mean, how many would you have to have? China. And I think you need a garage if you want to have your Tesla. So AMC, I did a video update on AMC. I did 2 videos. This is something that is a good teaching for anybody that's listening. $5 is a very important number. It's an institutional number. It's where the institutions start getting interested in the stock. So if it drops below 5, they don't want to take this trade. A lot of times when stocks break the 5, they'll jump in, and it's a good company, they'll go ahead and buy their shares. And the same thing with the $10 squat. If you break 10, you get a different strand of institutional traders that want to buy the stock if it holds 10. So five's like pulling back. We consolidated on this stock for a week. So we got a snake, and then we're pulling back here. But I wouldn't be interested in buying shares of this at all right now. Not until it broke that 5 and gained respect. Now there's this little kid pumping this stock. He's getting paid by AMC. I think he's getting paid by AMC to pump his stock, and he's not that bright. So I got on this little thing today, and I said I wouldn't buy AMC if it was only a streetwalker. The only catalyst for this trade. That's Taylor Swift. If that's the only reason you're buying this stock, I wouldn't be interested in it. Because the movies had one of the worst movie seasons ever was in 2023. It's when they decided to turn everything woke. And it just didn't work. So that's just the way I look at this trade. And I know it's a meme stock. And I've traded it before at $32 and run it up. But that was before
Good morning
wokeism.
and welcome to Money Movers. I'm Sarah Eisen with Carl Quintanilla live on the floor of the New York Stock Exchange. Coming up this hour, former Federal Reserve Vice Chair Richard Clarida on why the market, he says, is getting it wrong when it comes to pricing rate cuts.
Eurasia Group President Ian Bremmer's with us. We'll get his top risks for the year and the geopolitical issues that matter most to your money.
Later, the CEO of Williams Natural Gas and the surge we are seeing in prices as winter weather hits the Northeast.
Let's get to the markets this morning. Tech has been leading along with some consumer names in housing today. 47.69 where we are is basically where we began or closed out 2023 a couple of weeks ago. Topping the tape for us this morning, the biggest week's data point, CPI tomorrow. Is the market ready if we do in fact get a hot print? Let's bring in CNBC senior markets commentator Mike Santoli. Certainly the street's sort of bracing for that possibility.
A little bit. I wonder though, we've had about 8 months of almost on target core CPI, and when we've deviated
I think
from
Michelle would be the one that's going to be nominated for
the downside. I think there's a lot of rational confidence
for the Democrats
built in the overall path of inflation at this point, but we're going to micro analyze the CPI report for the parts that really do translate directly into PCE, core services, ex-housing, all that sort of thing. So it feels like, sure, we can get a little bit of a flutter in the bond market if it's a little bit hot, if we have to reprice a March, a notional March rate cut, something like that. But I don't know if it's a make or break in that sense at this point, just because it's going to take a lot to dislodge the idea that inflation is kind of in the we got this column.
Especially, I think, with the inflation expectations really starting to come down. Mike, it's also the start of earnings season, and low expectations, right? We're expecting earnings growth, which is something because we didn't get it for 3 quarters last year. Right. But I think it's come down to like from 8% expectations to 1% over the course of the last quarter.
Since the end of the third quarter, exactly. And this has happened a few times in the last couple of years. In fact, at the bottom of the market in October of 2022, you had a similar path. So it seems like the bar is very low. I think people who kind of try to handicap these things are saying, well, we'll probably beat by 3 or 4 percentage points. That's usually the routine. Now the question is, does the market already expect that the bar is low and we're going to beat by 3%? In other words, you're going to get the price reactions that you would want from those beats. Not the highest stakes
that way
quarter,
they
I don't
keep,
think, because
if they get Michelle in there,
it
they'll
wasn't
still
supposed to be a source of huge, contribution to the 12-month forward. So I think, we might have to trim looking ahead. It's the back half of 2024. That's where you're supposed to be really making the gains. I think we can lean back on, okay, we have an upturn in the overall earnings path. It's not going to make the market any cheaper. I mean, if you're concerned about valuation, it's not going to really help you that much. To me, the most bullish things about the market are the actual technical behavior and how you had this broad rally at the end of the year of 2023, and you haven't done much yet to disturb the idea that that was something real, that it showed real demand. We have this 2-week pause in the market right now. We'll see if that deepens into something else. It'd be hard to believe that's all we need is a 2% setback after going up 17%.
When you look at single stock narratives, is NVIDIA now 4 days, 13%? Do anything to the notion that we were going to broaden this thing out?
It questions it a little bit, and I've been questioning it a little bit. And by broadening out, I think what people want is permission not to own a lot of the big 7. But when they say broaden out, they don't want the benchmark to run away from them. And they don't want the 7 stocks that are 30% of it to sort of dominate the storyline. So I think that you could have one of them, like NVIDIA, going crazy again. It did nothing since August 31st. Nothing. Went sideways for all that time since Labor Day. And then just here with the new chips, it gets recharged to the upside. It's 1.3 trillion market cap. It's not that far below Amazon market cap. So you could argue things are getting a little bit silly again in that one tiny isolated area. But we'll see. I think in terms of the rest of the tape, huge flows into equal-weighted ETFs over the last month or so. Everyone wants this to happen. They want to bet the field against the favorites. I'm just not sure it's going to be that quick or timely.
All right, Mike, thank you. Mike Santoli, as always. When it comes to the outlook for 2024, Wall Street continues to be divided as to when rate cuts will start from the Fed. You've got Goldman Sachs saying March. Bank of America and Barclays see April as the starting point. Morgan Stanley, Citigroup, and Deutsche Bank eyeing June, and then UBS sometime in the second half. Our next guest is predicting 3 rate cuts this year and says markets are currently pricing in too much easing. Joining us now is Richard Clarida, Global Economic Advisor for PIMCO and former Fed Vice Chair. Rich, you're not at the Fed anymore. You don't have to do the Fed expectation. They say 3 cuts.
Well, that's right, and that lines up really with our outlook. The soft landing runway is in sight, but I think in order to get the 6 cuts that the markets have priced in, you either need a pretty deep recession that we don't see, or you need to see inflation falling even faster than we expect. So we do think the Fed thinks they're done. It's appropriate to start to lower rates as inflation moves towards the 2% target, but the baseline for us would not be 6 cuts in 2024.
When do you see it starting, that process?
I think March is potentially in play, but really too soon. So I think if the inflation data continues to improve and the economy evolves as we expect, the conversation could begin to engage, I think, in May or June. Remember, at the March meeting, they won't even have the February data on PCE inflation. So there's not a lot of data to get between now and then.
So what is your concern around inflation? Sounds like you think maybe stickier than the optimism in the markets right now.
Well, I think you have to acknowledge the progress, Sarah. I think the progress on inflation for the last 6 months is definitely there. I do think, to everything you care about in life, there are always good news and bad news, and I think maybe markets are a little bit relaxed about a situation where inflation is sticky and stubborn. But the data is definitely going in the direction that's favorable for the economy and for the Fed, and that's a good place to be, I think, compared to a year or so ago.
Rich, how do you square real income growth right now and the spread between inflation and wage growth? Obviously, some renewed momentum behind capital markets gains and the decline in inflation expectations. Wouldn't you expect a more confident consumer to drive prices?
Well, yeah, there's an old saying, which is don't bet against the American consumer, and we certainly saw that very much in 2023. Income gains, we do think, are going to shift down. The economy grew above trend last year, so that was great. It was unexpected, but slower growth. And there was a big pile of accumulated excess saving from all the checks that got sent out in 2020 and 2021, and most of that has been spent through. But the real wage gains are welcome, certainly, to workers. And, Carl, one thing the Fed's going to have to be considering is, are those wage gains consistent with the 2% inflation objective?
Do you buy the notion that corporates are hoarding labor, or at least are in a better position having their interest expense and their down and their profits up in the course of this tightening cycle, that they can afford to have unemployment rise a little more gradual than in prior cycles?
Nope. You know, I think that is there. We have seen that in the past, that companies do hoard labor, especially when it's scarce and expensive, as it has been. That's why historically, you know, the labor market data tends to be a lagging indicator. And of course, the other thing now is we have a pretty big divergence between the household survey and the payroll survey, and which is again not all that unusual as well. So I think the labor market is slowing. That's certainly positive. Job gains are welcome, but we are getting into the range where we do need to be watching it closely.
So, Rich, are you guys bearish on bonds if you think that the market has overdone it on pricing rate cuts?
No, we're perhaps not surprisingly at PIMCO, we're bullish on bonds. We think valuations are attractive. What we have highlighted is that getting a lot of your bond exposure at the very front end of the yield curve, we think there are better opportunities in credit, opportunities globally, and certainly the returns last year were quite healthy, and we think with more to come. But in terms of valuation, we do think technically the front end of the curve is a little expensive right now.
Right, okay, so there's where you're expressing that.
Yeah.
My other question to you is on recent Fed communication.
Yeah.
A few of them, Lori Logan mentioned this, I think Michelle Bowman mentioned, concerns about financial conditions loosening, which we've certainly seen. Stocks are up, bonds are up, dollars weaker, and whether that risks sparking inflation again. Are those valid concerns?
I would put it this way, Sarah. The Fed in November indicated that tighter financial conditions were doing some of their job for them to slow demand. Since the November Fed meeting, financial conditions have eased. What President Logan said in her speech recently is that they do need to consider that if financial conditions continue to ease, then it is less likely that inflation falls to the zone that they want. So I think we're not at that point yet, but it's certainly, I think, appropriate for the Fed to be following financial conditions as they assess the chances that inflation eventually return to target.
And really quickly,
Sophie's up a little bit. NVIDIA.
Well, I think QT continues
CRM,
for the rest of this calendar year. Again, President Logan indicated that at some point this year they may do a taper
Airbnb,
on QT where they're reducing the pace. But we do expect QT to, in some form, to continue
Google,
throughout the rest of this year.
Lilly.
Okay, so tapering
Aluminum.
is back.
She mentioned that one yesterday. IL.
Yes, and of course they want to avoid another taper tantrum, that's for sure.
Well, it would be the opposite, right? The market wants them to taper.
Yeah, exactly. Yeah.
All right, Rich, thank you. Always
Thank
valuable
you.
to speak with you. Richard Clarida, former Fed Vice Chair.
Let's turn to Boeing this morning. The CEO acknowledging the company's mistakes as
Snake
investigators look
breakout
into the
pullback.
737 MAX issue. Our Phil LeBeau joins us ahead of a very big interview this afternoon. Hi again, Phil.
Hey, Carl, I think when we talk with Dave Calhoun, the message we will hear from him will be similar to what we heard yesterday when he talked with about 8,000 employees here at the Boeing Renton facility. This is where they build the 737 MAX. 3 shifts, about 8,000 employees here. And if you heard any of the audio or any of his comments yesterday, you can tell the level of significance that Calhoun, the management team, and the employees take with what happened on Friday night with Alaska Airlines. Dave Calhoun saying yesterday, we need to acknowledge our mistake. Every detail matters. Looking into the details behind what happened with that door plug that was ripped off the Alaska Airlines plane, that's part of what the internal safety group here at Boeing will be looking into. By the way, that group was put in place after the MAX crashes, so it's been in place. They know what to do in terms of reviewing the work history, and they're going to be working in coordination with the NTSB investigators, as they always do whenever there's any kind of an accident, as well as the FAA, which, by the way, continues to ground all of the 737 MAX 9s that have that door plug, 171 of them. There are not final rules established yet for the MAX 9 inspections. What does that mean? That means that Alaska and United cannot yet start doing the inspections, and any maintenance that may be needed to be done on those door plugs. Once those rules are approved, then they can do that. Then theoretically, those planes can go back into service. Don't miss our exclusive with Dave Calhoun coming up on the Exchange. Lots to discuss with him, not just about this incident, but the broader topic, Carl and Sarah, of what we've talked about for some time, about the culture here at Boeing as it continues to ramp up production of the MAX and at the same time facing questions about quality control.
Is there ever a consumer impact of this, Phil? I mean, do consumers ever get worried about taking Boeing planes or anything like that?
I don't think so. I think, are there people who are not crazy about flying? Absolutely. In general. It doesn't matter if it's a Boeing, Airbus, whatever it might be. Do I think there are people who will say, wait, that flight is a Boeing MAX? I'm not going to take that. Look, that has been disproven time and again over the years. Whenever there's been an accident with a particular aircraft, there may be some immediate, people go, wow, but, you know, nothing where it stops people from flying a particular aircraft.
Yeah, I was just curious. Thanks, Phil. Really appreciate it and looking forward to your interview. Phil LaBelle. United States versus itself, the Middle East on the brink, and a partitioned Ukraine. Those are just some of the major risks that Ian Bremmer sees dominating geopolitics this year. He's going to join us next to discuss.
Natural gas prices are up roughly 20% in a month. CEO of Williams will join us to discuss where demand goes from here as some of these winter storms sweep the country when we come back in a moment.
They got that Meta thing coming out, right? They said it was supposed to be like a game changer. I'm thinking about getting one when I get my new situation done in.
Watching shares of Apple down again this morning. Another downgrade, this time from Redburn Atlantic, taking the stock down to neutral, saying the valuation is played out and there's little upside for the iPhone over the next few years. The firm also warns some underwhelming results could be coming this quarter. Apple's been under pressure lately, especially from the street. This is the third downgrade in just 10 days after shares fell more than 6% the first week of the year. I read the report. I don't know if you did. I thought it was interesting just because they started with their bull thesis, which they put on place in 2020, that services, for instance, demanded a higher valuation, that its products demanded a higher valuation, and basically now it sees Apple as having received that and then some, just fully priced.
Yeah. 3 in 10 days is a bit of a trend, which we've been watching, obviously, since that first
So I've
Barclays
followed
note.
Apple
Meantime,
for
Eurasia
many,
Group's out
many
with their list of
years.
top risks
And Apple was
for
always
2024. The presidential
last
election
one
takes
to
the number
move.
1 spot, followed by the conflicts between
Always
Israel,
the last
Hamas,
one.
Ukraine, and
It
Russia,
never
and of course
had been a
AI, which they
150,
argue can't be
158.
properly
It's
governed
never gonna break
in the near term.
158.
Joining us this morning, Eurasia Group's president and
And we're
founder
only
Ian
up
Bremer is with us. Ian,
20
great to
some
see you. Good
bucks
morning.
from that period. No,
Absolutely, good to see you guys.
158.
The
that was it.
Voldemort
And
of
I've been
years
lectured.
kind of says it all at the top of your
When
report.
I first started trading it,
Talk about,
said,
I guess
"Get
you
ready to
mentioned
break
3
out."
wars,
Oh,
the 2
I
that
get so
we
much
just mentioned, and then you
backlash
sort of frame it as the United States versus
by
itself.
people that probably have traded
I do,
it
because
also.
like Israel,
158,
Hamas, and
150,
like
that's it.
Russia,
You know, that's
Ukraine,
the high as it's
the
gonna go.
adversaries in the United States do not share basic facts. They don't share basic worldview at all, and there's no effort
And now we've
for
got 3 downgrades
diplomatic
after the
compromise.
big, huge
So
pump
in
that
that
these guys
regard,
put
especially
on
given
this
how
Apple
important the
at the
United
end of the
States
year-
is
before
for
the
the
end of
rest
the
of the
year,
world, we're still the most
saying it was
powerful
gonna be
country.
the market
We've got a
leader.
great economy. We spend more on defense than like the next 10 countries combined. But our democracy is
Steve
the most
Jobs
dysfunctional of the G7. All of the other
was a
rich
great
democracies
CEO.
are able to hold a free and fair transition.
He was the
of
first
power.
open
And in
gay
the United
CEO
States,
that I
the
can
view
recall
is that
back
that
in
is
the
getting
day.
delegitimized. So yeah, 2024 is not the year you want to hold this election for the U.S. right now.
Right. Interesting chart in the FT this week about media distrust, and to your point, much more pronounced in the United States than, say, the UK or France. I am curious whether or not you think there's been enough done to put in reinforcements in the case of a
Then it was
contested election.
Bezos came into the scene.
I don't think so. And again, I wish
He
it
was
was
like,
just the
for
media.
many
It's
years,
not.
he wasn't
It's
profitable,
views in
and
the
then all of a
U.S. of
sudden
the
he
church,
became
of the judiciary, of
profitable.
the executive, of Congress. They've all gone
And
down.
this is,
And
I think,
Biden
really
was supposed to be
undervalued.
fixing this, and certainly I think he's trying.
Compared to
But
what
the
you
fact
would-
is that the U.S. perceptions of these institutions
Wasn't
has
this
only
thing
gotten weaker.
$2,000 at one time?
And when I talk to the heads of the U.S. intelligence community, they tell me they're much
Amazon,
more worried
$3,000,
about the
$3,400,
ability to defend
if I remember right,
U.S.
35.
democratic institutions and the election itself for malfeasance internally as well as externally. They're more worried about that than they are about Russia or they are about China. It's the risk at home. I think that speaks volumes.
Then
the
they
fact
listened
that
to Elon,
Trump's
and
own
Elon
former
wanted to
Secretary of
get
Defense
these splits so more
says
people
that this
would buy
man
their
would
shares
be a
'cause they were up so
serious
high,
threat to
and
democracy.
people were
That
so
should be
leery,
the
then
most.
when
I mean, in
he
a
split the
well-functioning
company, people would
democracy,
buy the
that would be
shares
the most important thing you're talking
on
about.
Tesla.
It's not in the
They're
United
saying
States because
500
American
for Tesla,
democracy has been delegitimized
2025.
because a majority of Americans no longer believe in these institutions.
How does that make the world unsafer, right? A strong U.S. is good for the world, right, Ian?
I think that's true not only for America's allies, but even I just got back from Beijing, and even talking to senior Chinese officials, they don't want the Americans in chaos. They want the Americans to be more pliant, but they don't want the U.S. falling apart. So I'll give you a couple of examples. I mean, Trump sees Zelensky as an adversary. So if he comes in and he pulls all the funding, and the Ukrainians are not prepared to accept a Russian-led partition of their country, well, they're going to be desperate. And they're going to be countries like Poland and the Baltic states and the Nordics that will be incredibly threatened by that reality, while other countries like Hungary, very close to Trump, Italy, the prime minister very close to Trump, will be saying, well, come on, we don't want to spend all this money. It's too expensive. Let's normalize. Let's get back to working with the Russians. I don't think Trump will pull the U.S. out of NATO, but I think NATO will face an existential crisis. It will start to fragment. And I can give you examples like that for U.S. decoupling with China, with a U.S. hard line against the Iran.
I don't know if I can take him.
When you talk to American allies around the world, they are all of a piece, deeply, deeply concerned about where U.S. political institutions and democracy is headed.
You mentioned Beijing.
God. Why do I see things so much different than they do?
The willingness of the Chinese to go big in response to all of their structural economic challenges in real estate, bad debt, local governments, corporate debt, lack of animal spirits
China.
and consumer sentiment. Xi Jinping is not having any of that. So it's all very incremental.
This guy makes no
That's
sense.
bad news for the markets. The good news.
When Trump was president, there was no wars. We got rid of ISIS. And then when Biden got elected, we pulled out of Afghanistan. Soldiers died. People were left behind. They gave the green light for Russia to go ahead and invade Ukraine. And then we have the Middle East falling apart. We have one of the biggest genocides Israel's seen since the Holocaust. And we got China thinking about invading Taiwan. And this guy's talking smack. He'd been around the world leaders and he hadn't talked to They're worried. I would be worried now. So I can't listen to him. He's full of shit. Who is this guy? Some Harvard professor? And if Trump was elected, the wars would stop. I'd almost guarantee it. And we wouldn't be paying terrorists money. Boeing looks very bullish today. Zuckerberg says he's now a rancher raising cows on beer and nuts. Some of the best meat. He's in Hawaii, comes from. I've ate some of the best meat in Hawaii. They got the best cows. #1 in the world. You can't import it. Mara. Woo! Job, Mike.
To have its CEO keynote at CES. L'Oreal is an AI-powered beauty advisor and hair coloring tool and virtual makeup try-on. Now, not all the AI here was ready for prime time. Meta showed us its Ray-Ban glasses that can record photos and videos, but the new AI tools that Zuckerberg announced that they'd have are not ready to demo just yet. Guys, back over to you.
Julia, I just got to ask whether or not the use cases that you've been witnessing in person sort of match your expectations. 'Cause we've been talking about this for a while now.
I'll go get my coffee
You
going.
know,
I'll be
I
right
was here
back.
last year. Everyone was talking about AI, but it had just been a couple of months, just really not that much time since ChatGPT had launched. So people were talking about AI, but we didn't see the use cases yet. I think it's interesting just to see how you could really add an AI assistant into anything, whether it's a car or a washing machine or a refrigerator. To me, the little robot was the most fun thing. The idea of it rolling around your house, maybe not being too intrusive, doesn't look like a robot. It's just a little ball. I don't know, that one seemed like a fun one. And interestingly, the Samsung devices, those are going to launch pretty soon. The Mercedes option, that's going to be a little bit further out, more like 2025. So I think, look, it's all about the AI assistants, generative AI, but certainly more in reality than in principle like it was last year.
I mean, it's fun to see you demo some of those, especially like the consumer products that come and announce new innovations. Julia, thank you. Julia Borston. Time now for a news update. Bertha Coombs has that for us. Hi, Bertha.
Hi, Sarah. Hunter Biden departed Capitol Hill this morning after a brief surprise appearance at the House Oversight Committee meeting. His attendance caught committee members off guard as they prepared to take a vote on resolutions that recommend the president's son be held in contempt of Congress. He's accused of defying a subpoena to testify behind closed doors in his father's impeachment inquiry. The younger Biden has offered to testify publicly. The al-Qaeda-linked Islamist insurgent group Al-Shabaab has reportedly seized a United Nations helicopter. According to the Washington Post, the group apparently set the helicopter on fire and captured an unknown number of crew workers after it made an emergency landing today in Somalia. And former President Donald Trump is asking to speak at closing arguments in the $250 million New York civil fraud trial against him and his business. A source tells NBC News the judge in the case has, quote, conceptually approved the request, but Trump's attorneys still need to meet certain conditions before it can happen. The reply to the court is due today. Carl?
Bertha, appreciate that. Bertha Coombs. Still ahead, we'll get a check on natural gas prices this winter as the storms begin to pick up. The CEO of Williams is going to join us. The company handles 1/3 of the nation's natural gas supply.
Plus, the communication services sector hitting a fresh 52-week high right now. Meta and Alphabet powering those gains. We're back in just a moment.
couple hours into trading, very tight ranges. We're hovering pretty much near break-even levels for the year to date on the S&P. Let's get post to post with Bob Bassani. Bob?
Modest gains on the S&P today, but we do have some very interesting news that's going on. We've got a couple of dividend gainers here. Lennar had a great year. Remember last year, up like 25%, huge run towards the end of the year. The problem is their dividend of 37.5 cents looked pretty measly, below 1% as the stock was rising. So now they've raised it to 50 cents. So that's $2 a year. And you can see here, that's about a 1.3% dividend yield here. That's one of the biggest gainers, believe it or not, on the S&P. Pretty modest today, but 2.5%, one of the biggest gainers that are out there. There's a bunch of mean reversion trades that have sort of stopped working. This always happens. So remember the cruise lines, Norwegian and Carnival, they just had a great year. They were up, Carnival was up like 80% last year. The first 2 days, it dropped like, 10%. It went down to like $16 because that's a mean reversion trade. You sell the stuff that's done really well and buy the stuff that's done really lousy. And now it's bounced back again here. So these mean reversion trades don't last very long. The fundamentals eventually take over, and it's come back along with Norwegian Cruise Lines. Same with some other stocks. Home Depot had a little of this too. At the end of last year, they had that big run. Remember, every day I kept putting it up here. It went from like 280 to 350 in November and December. It was up like 25%. And then it dropped to like 336, 337 in the first couple of days. Again, people just selling big gainers over the last couple of months. And now it's come back. Again, these mean reversion trades don't last very long, very, very short periods. So we're all waiting for a Bitcoin spot Bitcoin ETF to start trading and be announced. But here we have one. Here's the biggest one that's out there right now. The ProShares Bitcoin Strategy ETF, the biggest one that's a futures ETF that's out there in the Bitcoin space. This has attracted a little over $2 billion in assets, and it started trading in October 2021. So a lot of people trying to figure out what impact or what kind of money might a spot Bitcoin ETF bring in. This was quite a sensation when it started a little over 2 years ago. We'll see what happens. We're expecting some kind of announcement today. Sarah, back to you.
Which is better, a Bitcoin spot ETF or futures ETF?
Well, they both can interact differently with each other, and investors can use them in different ways, just like you use other kinds of spots and future stocks, for example, in different ways. I think that people are largely going to be very, very happy to have a simple Bitcoin ETF structure, just like what happened with gold. I'm using gold as a parallel. In 2004, gold ETFs started, and people who kept gold physically in their basement largely abandoned that. A lot of them, they still do. You obviously can keep them in your basement, but there's a safe, secure way to own it. Bitcoin ETFs had the same problems. They had problems with custody. They had problems with people forgetting their passwords and things like that. And I think that's going to solve a lot of the problems that are out there. Again, I'm still not convinced Bitcoin is a strong use case overall. Philosophically, it's a good question. If people want to do it, this is much safer investment vehicle to use than the current vehicles that are being used.
Got it, Bob. Thank you. Okay. Bob Bassani. Let's turn to energy. Natural gas prices have spiked over the last 2 weeks as colder weather sets in across the U.S., helping claw back some of the losses from the past year and a warmer than expected start to the winter. You can see the chart there, down more than 15% since early 2023. Our next guest handles roughly a third of all natural gas in the U.S., joins us now with his outlook. Let's bring in Williams CEO Alan Armstrong. It's good to talk to you, Alan. Thanks for joining us.
Thank you, Sarah. Glad to be here this morning.
What are your expectations for prices this year?
Well, we've seen a huge spike in 22. We saw prices go down last year by a decline of about 60%. And we've the prices have moved down below the price of the cost of marginal production. So the higher cost production, and we're starting to see that supply taper off now, and at the same time we're starting to see demand pick up against the fundamentals. In other words, on a weather normalized basis, we're seeing demand start to pick up pretty strong. In fact, last year we saw natural power demand go up by about 6%. So in other words, natural gas fired power demand went up by about 6%. And we're seeing LNG growth. We'll see a little bit of LNG growth here in 24, and then a big pickup on LNG demand growth in 25 as a lot of the new facilities come on. So, the producers right now are looking forward to 25. You can see quite a bit of contango in the market, with prices on the strip picking up by about 25% from 2024 to 25. So producers are kind of holding their breath right now through this period of low prices, but looking forward to the pickup in demand that's coming in 25, largely associated with both power generation and with LNG export.
So with those new facilities in 2025 coming online, clearly that helps. What does global demand look like over the coming years for U.S. LNG?
Yeah, right now it's obviously a market that's short, and you can see that from the prices and certainly from the large differentials in price that exist between U.S. Wholesale prices versus international prices. And so that is an unmet demand. And obviously, as we produce more supplies here in the U.S., we will hopefully see that moderate a little bit, and we'll see U.S. prices pick up a little bit. So we expect those two to come together a little more. But right now, the pricing, international pricing, certainly says that there's more demand for U.S. natural gas.
Do you think there are going to be regions of the country where we start to talk about shortages and extreme price moves to the upside?
Yeah, and the challenge is really this. It's not that we don't have enough supplies. We have plenty of natural gas supplies. In fact, very low-cost natural gas supplies here in the U.S. The challenge is the infrastructure. Since 2010, we've seen natural gas demand, total natural gas demand, pick up by 60% from 2010, but we've seen pipeline infrastructure only get built out by a 30% growth, and storage, which is really critical if you think about the need to back up intermittent renewals and the need to be able to pick up when LNG exports pick up. We've only seen storage increase by 12%. So those are two critical infrastructure components that are way lagging behind the natural gas demand growth and the supply growth. And as a result of that, you see these regional price spikes, and we're going to continue to see a lot of them. We saw gas in the Rocky Mountains last week, even though wholesale gas in the Henry Hub was well below $3. We saw gas hitting $6 for the Western markets last week, purely on the backs of lack of infrastructure available here in the U.S., and that relates to our permitting woes that you hear so much about here in the U.S.
What sort of policy decisions should we be watching over the coming years? And do you expect them to happen at a national level, say in the presidential cycle, or is it more local permitting issues that impact you the most?
Well, it's a great question, Sarah, because it is actually both. We were struggling to build pipeline capacity into New England, which is now having to burn fuel oil, which is 2.3 times more emissions being emitted, and obviously twice as much at least twice as much in terms of cost, sometimes 3 times as much. And so, that was during the Trump administration, even that those pipelines got broke. So it's not just a federal level issue, it is also local. But I do think that, the American public needs to start really holding people accountable that are stopping pipeline construction, because it is both increasing our emissions here in the U.S. and it's increasing the cost to the consumer in a dramatic fashion.
And really quickly,
just the
you've
opposite.
been kind of active on the deal
What you
front,
hear.
Alan, bolt-on M&A. Is this still a ripe environment for that? Are you still looking in the storage area?
Yeah, storage is a way underdeveloped resource and infrastructure from our perspective, and so we have gone after that. We picked up the Hartree storage here right at the end of the year, and that will make us the largest storage provider to the LNG markets. And we've seen that as a key strategic issue for quite some time, so we're really excited about that acquisition. And we bought some storage around the Dallas area, Dallas, Texas area last year about this time, because we saw the critical need for storage in that market associated with backing up renewable power in the Texas market.
Alan Armstrong, really good to get an update on the business and the market. Thanks for joining us.
Great, thank you, Sarah.
Still to come this morning, the CIO of Raymond James is going to join us. He'll break down why he still expects a recession this year and his bull case for small caps when we're back in a moment.
Missed any of our money-moving interviews, analyst breakdowns, or market analysis? Subscribe to our podcast and never miss any of the CEOs, politicians, and economists who matter most for your portfolio. Look for us wherever you get your podcasts or follow us on X at Money Movers CNBC.
So AQST, I did a little video on this one, called a pullback for it. We've got a low support that needs to hold at 232. Now this is an epileptic company, so I'm just watching it. I'm not trading it yet. I got to learn. It'd be ideal to take it down around 209, 223. But we did pull back to my first support that I set at 247. It's in stage 3, which is, we've had the run up, so you got to, something like this is good to take a fibby. And that 50% pullback on the Fibonacci, and I mean, that's the only way to trade these 5-day breakouts. It's the 5-day rule, of course. And we pulled right back to that 50%, right at 240 this morning. Just right to the penny. Soon they're going to forget about Boeing and it's going to pop. It's only going to take one good headline.
Welcome back. Markets a little muted today as the street awaits the key inflation data tomorrow, CPI, PPI on Friday. How will that new data shape the outlook for the Fed and for investors who right now are still pricing in about a 70% chance the Fed starts cutting rates in March? And with the S&P, Dow, and NDX all within a stone's throw of all-time highs, should investors start looking to things like small caps, which have yet to see as dramatic of recovery? As with us here at Post 9 this morning is Raymond James CIO Larry Adam. Larry, it's great to have you.
Thank you for having me.
Welcome. So you do think there are recession risks, but you do think it'll be mild compared to prior cycles?
I do. I think we still have a recession starting in the second quarter, ending in the third quarter. Very short. When you look at the amount of growth that's going to be subtracted, be less than 0.5%. In fact, I think we're closer to having a soft landing than we are actually to having an average recession. So I think we're going to have one. The data is starting to show that. Employment conditions are starting to, soften a little bit. Some of the service data is starting to weaken. Restaurants, hotels, even airfares.
370.30 is
airfares are down 5%. Why are they down? Because demand is starting to slow.
Shoulder line on the head and shoulders.
I think what's really critical is that if employment goes to zero, if you and I all spend the same over the next year, that's a recession, right? Because after inflation, we're buying less. So we're not looking for a really significant recession to unfold.
Right. On corporate earnings, you are in the sub 240 camp, though, right? Yeah.
Well, we think corporate earnings this year will be at 225 for the S&P 500. Currently, consensus at 245. Keep in mind that consensus usually falls around 4% during the year, so that gets you down to 235. The difference between 235 and 225 for us is the fact that we see a mild recession, revenues will be challenged, and I don't think you're going to see an expansion of margins. I think they'll stay stable, slightly contract.
So if you expect a recession and weaker than consensus earnings, why then would you like small caps?
So I think when you look at small caps, they have been at such a discount right now. So I look for things that will unleash that value. And historically, when the Fed starts to cut, that's when you see small caps outperform. When you look at where we are in the cycle, coming out of a recession, likely the second half of this year, that's when you see small caps outperform. And I think one thing that's really critical, and I know you've seen this before, but if you add up all of the stocks in the Russell 2000, it actually equates to like a Microsoft or an Apple, which means it doesn't take a lot of money flowing there to actually get those stocks to get some momentum.
Yeah, indeed. I think it's $3 trillion for the Russell and whatever it is for the Mag 7, right? It's
amazing.
Crazy.
Yeah.
You like AI and tech. You like industrials on the reshoring. You like healthcare. Are those things not overbought, you think, in the medium term?
No, I think let's just focus on technology as an example. Everybody thinks that it's expensive. Two things on that. If you go back over the last 2 years, the Nasdaq's actually down 4%. Earnings are up 8%. So by that definition, valuations are actually more attractive. When you look at the PE right now, sure, it looks expensive, but I think that fails to take into account that systematically, technology tends to outperform quarter after quarter after quarter. You start to factor in those beats over time, I don't think it's as expensive as people think it is.
My favorite part of your note is the rotisserie economy, because we've heard the waiting for Godot recession, but what do you mean? Rotisserie.
So rotisserie in the sense of why I think it's going to be mild is because there are some areas that have been on fire. Think travel and leisure, right? I think that starts to roll over because you're seeing it in the data. I think some of the interest rate sensitive parts of the economy, think about the housing market, think about appliances, manufacturing. I think we're at the cusp of seeing that actually bottom, and I think that'll start to resurge coming in the second half of this year.
But what about the lagged impact of rate hikes? We got a lot of them in a short period of time. Where does that show up?
I think that's one of the reasons why we think you're going to see a recession, because the consumer, for the most part, hasn't really felt higher interest rates because they had all that excess savings, right? They
Raymond
really
James
could spend a little more. But now that they actually have to go to banks and actually pay interest, I think that's one of the reasons why we're seeing that
Meta's pulled
softness.
back
You're
to
seeing some
support right
pushback
here off the
on behalf of
21.
consumers, and I think that's why we see that mild recession.
Yeah, that's why loan growth will be such a big story on Friday.
Absolutely.
The banks. Larry, thanks. Good to see you.
Good to see you. Thank you.
When
If
we
it
come
doesn't
back,
hold
the
that, I'll
software
take it down here to
doom loop, what recent
368.
CEO changes at Twilio and Match mean, as well as layoffs at Unity, about the overall, what they tell us about the overall industry. We're back in a moment.
Meta social metaverse. What's that? Got a 50-50 day on my watch list. Well, not really. 40-60 maybe.
We're seeing a wave of layoffs to start 2024, especially in software at Unity and Twitch, along with some CEO changes at Twilio and Match. What does it mean for the sector's long-term growth outlook? Deirdre Bosa has that for us in today's Tech Check. I wouldn't say it's broad in terms of the layoffs, Deirdre, but it does tell us some things.
Yeah, and it's more evidence that the state of software is complicated. It always has been. On one hand, there's signs of a comeback, like recovering revenue growth and multiples. AI, of course, the new tagline, but that is from peak levels. There's a broader question here, and that is, has software permanently re-rated instead of a comeback? Are we in a new normal? CEO replacements and layoffs at these once software darlings, you mentioned them, Twilio and Unity in particular, that is complicating the recovery story. And a few longer term charts that we're going to show you, they tell us how far the sector has fallen. The conventional Wall Street wisdom is that the 2022 software slump, it was driven by the Fed and interest rates. There are, however, deep fundamental issues at play here within the sector as well. This is a chart that shows you the revenue growth rate for a basket of software names, including Adobe, Microsoft, Datadog, Snowflake, and others. You can see that it peaked in 2021 at around 50%, and it isn't expected to break 20% in the foreseeable future. So this would be the new normal. BofA sums up the challenges in the sector as such. It's prone to hype, overvaluation, promotional management teams, non-GAAP / incomparable between company metrics, high stock-based comp, and is home to cringe-worthy conference calls. We've all been on a few of those. I would also add here that there's been the commoditization of the once hottest, buzziest software products like Zoom and Slack, and this idea that mega caps, they can do it cheaper at scale, and they're good enough. On the positive side, though, the software reset, or the SaaSacre, as I've heard some in the Valley call it, that could provide new opportunities. Software could yet be the sector with the most interesting M&A prospects and new listings. The HPE Juniper Networks deal that you guys covered, that's partly about software and about two legacy tech companies combining to create a better AI proposition. The Journal reports that a $35 billion deal between Synopsys and Ansys could be next. And keep in mind that when the IPO market reopens, we are likely to get another wave of investable software names, this time with AI features and business models. So don't count it out, but this new normal could be an opportunity just at a far lower level than what we've seen over the last few years.
Yeah, even as you're talking, Dee, Fortune got a copy of this leaked Salesforce memo in which they are pausing all hiring in technology and product divisions. That includes Slack. It's going to be interesting to see how they grow without adding to headcount, even if they don't retrench further.
Right, and I think that's all in line with these expectations coming down, and that's why, some on the street believe that this is a really interesting sector after a few years of being sort of down in the dumps, of these growth rates really coming back down. So there's also always, of course, that AI underpinning. We may not get to the monetization of that for some years yet, but that could create sort of a new wave. But for now, it feels like we're kind of resting at these levels, 20% growth rate versus the 50% that we got used to in the few years during the pandemic.
Yes, we remember what it felt like to come down from those levels. Dee, thanks. Deirdre Bosa on Tech Check today. Meantime, market's clearly on a holding pattern ahead of CPI tomorrow. VIX, we should mention, remains below 13. That's in line with the lowest levels of the year so far.
Watching the 10-year, it's about 4%. 4% is a level to watch for today's 10-year auction. We're also going to get a speech by the New York Fed president at 3:15 today. But as you say, the event of the week will be CPI, which could set the tone for trading. If it gets a little too hot, would put the Fed, I think, and the markets in an awkward position where they're all excited about rate cuts. Although what is too hot right now, we've seen quite a strong disinflationary theme. And then bank earnings on Friday, which will also be important with a little more bullishness heading in this time than we've seen in the past.
Yeah, in terms of price action, although I noticed downgrades today of Schwab, and we did get a negative
Citigroup,
catalyst
yeah.
watch of Robinhood on some of this Bitcoin enthusiasm. So we'll keep an eye on it. The next 48 hours are going to be definitely eventful. Let's get to the judge and the half back at Post 9.
He's right. Eventful.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour. Countdown to tomorrow's CPI, the latest inflation read, which could very well decide where this market goes in the weeks ahead, not to mention earnings in less than 48 hours. We'll debate all of it with the investment committee. Joining me for the hour today, Joe Terranova, Shannon Sakosha, Kerry Firestone, Brian Belsky. Everybody's at Post 9 today. Check the markets. The three majors are in the green. Not doing great, but nonetheless, they are all in the green. Russell's a bit negative. You heard Sarah talk about the 10-year at 4%. But it's going to get real in the next couple of days. As we know, we continue to highlight committee moves, and that's where I'm going to begin yet again. I think that's where the real highlights are of what you guys are doing, buying and selling. And Kerry, you had enough with PayPal. You sold PayPal. Now, we highlighted a call yesterday, okay, which took the price target from 118 to 66.
Yeah.
Was that your last straw? Like you saw that call, was like, I'm out, I'm just done with this thing?
We sold it last week. So I was here last week and I suggested that this was really a do or die time period where we were assessing what PayPal's quarter was going to look like, what they might be saying about 2024. And it had to do with whether they were losing market share, they were going to be able to grow their revenues as much as expected. If they didn't, then the stock that people think is cheap would not really be a cheap stock. And that was not something that we wanted to go into 2024 holding.
Yeah, we're looking at the stock here. I'm trying to think of what it's done over the last few months when a lot of those kinds of stocks have gone up a lot and hasn't really done all that much, right? It's only up 6%.
Yeah, I mean, there's just better places for us to have our money invested. And, you know, we were an owner of PayPal for so many years that most of our accounts had a gain in PayPal, as hard as that is to believe.
What are you looking at then? And so you take the cash here, and then what sort of attractive to you in the market where it might go?
Well, I think we're looking in parts of technology where there haven't been the big moves. There obviously has been an awful lot of uptrends in tech over the past 12 months, but there are some pockets where that's not entirely true. Also, healthcare, we've talked about that. It's part of the market that really is underperformed. I think there's more M&A activity. There's perhaps more drug discovery. So those are two parts of the market and sectors we like.
Okay, so we move past that move, and we have some others coming out throughout the show, obviously. But Brian Belsky, welcome back. Happy New Year. Good to see you.
Happy New Year. Thanks for having us.
Interesting start to the year, say the least. You know, after this massive burst we had to end 2023, how do things look to you?
I think the same. I mean, the last 4 to 6 weeks of the year really started to bring credibility back to owning equities in North America in particular, and the broadening out theme really began to happen. The first week in January, you know, a lot of people still on vacation, volume was light. The adults kind of came back on Monday the 8th, and now we started to really see where people wanted to be positioned. And I think, you know, going into, obviously this is an important week, as you highlighted, with respect to what we're going to see in inflation and clearly on financial earnings. I think that's really going to cut things off for the year and kind of set the pace. I think for banks and financials.
AMD's got a symmetrical flag.
So we feel really, really good
getting
about
ready to squeeze.
Yeah. You don't
NVIDIA's
think
at
that
the 200
Santa Claus rally
on the 1
failing,
minute,
so to speak, right? It's
right
supposed
now.
to carry on into
NVIDIA.
the very first part of the new year, so it
We got a
fails.
double
Market
bottom,
gets
higher
a little
low on
rocky.
Apple.
You know, we had one day this week where we, had this
And
burst,
Meta.
but otherwise it's been choppy. Why?
You know, it's interesting.
So
we
far holding up.
we have short-term memories, we have long-term memories. Here's the short-term memories. Last year, at this time, remember, we had this massive rotation into tech. And the reason why we had massive rotation into tech is because of the January effect. So the worst performing stocks in 2022 were the best performing stocks in the first 3 months of 2023. And so I think we're still remembering that. Now we're disappointed that we're not seeing the same type of strength, we meaning maybe short-term investors, with respect to the market. But I think that's kind of misguided. That's why, from a really taking 2 steps back and thematically looking at what's really happening in equities, that's why we think, and we said in our year ahead piece, that 2024 is going to be year 2 of normalization, a 3 to 5 year period where you have normalized high single digit to low double digit performance, high single digit to low double digit earnings growth for the market, average valuation in some sort of a trading range in 10-year treasuries. I think we're in the very beginning stages of that.
Average valuation? Because aren't we above average valuation right now?
We are, but so at $250 earnings, it's a great point. At $250 earnings, and we might be low on that, I think you're going to see multiple contraction this year as earnings start to outpace where the market is. I think that's the call where most people are missing that.
All right, Shan, what about you? Chris Harvey today at Wells is cautious before the deluge. Talking about earnings. Cautious entering peak earnings season given, number one, the expected quote-unquote management of guidance, perhaps driven by weaker pricing volume trends, and two, the negative post-earnings return for the 21 quote-unquote off-season SPX firms that have reported. I mean, there are some companies that have reported, like I'm thinking FedEx and Nike. Those don't exactly make you feel great about earnings season, do they?
Yeah, I mean, the tail end of earnings season, Scott, was clearly not as strong as we would like to see, particularly coincident with the rally that we experienced in November and December in the market. I think that the issue here is that if you go back over the course of 2023, for each of the earnings season, we saw earnings estimates kind of pick up as earnings season went on. So if you graph that, you really do see that as we went through earnings season for the last 3 quarters, we experienced estimates moving higher as analysts were digesting data and thinking that perhaps the expectations from a macro perspective were understated for 2023. This is a particularly important earnings season because there are a lot of expectations that are baked in now for this soft landing or really no landing in many industries. And so I think the concern about potential conservatism in guides is probably warranted. However, I do think that this is where you can start to see some of that dispersion, that differentiation on a more micro level based on the fact that we're all looking at the potential for this conservatism. How does management guide to that? How do they complete the narrative as we move into this first part of the year, and how contingent will that be on some of the macro factors that have really driven the market return over the last 12 months?
All right, so we're going to get to some stuff about financials coming up and the look ahead there and some of the predictions, but comm services new 52-week high today. NASDAQ continuing its bounce back. We're looking at like 3 days in a row. Apple's red. So what's your view of this market here?
Apples are red.
We're 7 trading days in. And you have to begin to ask yourself the question, okay, how long do you give it for the consensus to be right? How long do you give it? How long do you sit? Because last year I waited till April. This year I'm not waiting till April.
You're going to wait till year to date. You're going to give it 8 days? Or you're going to make up your mind after 7?
Well, you tell me. How do you respect what's going on in the marketplace right now? Do you respect the dominance of algorithms right now, in which the S&P equal weight, which was supposed to outperform, it's underperforming right now by 75 basis points. How about small caps? They're down 3% so far year to date. Mega caps, we were supposed to forget about mega caps. Guess what? You have a Mag 5. You know what they are. Exclude Tesla, exclude Apple. Don't run too far away from mega caps. And oh, Scott, by the way, how's your energy equities doing? Because everyone loves them.
Not mine.
Fundamentally.
They're yours.
Oh, energy is going to be the sector in 2024.
Because he's got like 10 of them.
That's right. I do. I own it. 2.7% energy equities are the worst sector so far year to date. Why are they not being bought? Natural gas is up 20%. Spot price of oil is up 1%. How long do you give?
So what are you telling me? That
what
2024 is going to be 2023 all over again? We're going
That's
to have
a risk, isn't it?
We're going to have mega caps outperform everything else?
That's a big risk for portfolio managers. So no one is going to be able to sit here and say on January 10th, well, at the end of the year, I believe that this sector or this equity size class is going to be the one that outperforms. As the year evolves, you reshape your risk according to what the market's doing. And what I'm telling you is January 31st, JOT ETF will rebalance. I am in a period right now where I cannot make any individual changes to personal holdings of equities. I could do some options. I could do the QQQ, the SPY. But I'll tell you what.
So you could just get worked up and angry about it.
I'll tell you what. On January 31st, if this is the formation we have right now, I personally own Microsoft. That's not enough in the mega caps. I am personally going to have to buy some of the other mega caps, and it'll be consistent with what we do in the ETF.
Yeah, but what's going to be the pivot, though? What's going to be the pivot between the pivot for you to say, okay, it's time. Because last year, the market
We're already looking at the outperformance.
Well, I know this massive amount of PTSD last year, right? And then nobody trusted the rally. Like, this is just a BS rally. Nobody, well, you did because you're really smart. But the majority of institutional investors missed the rally until March, and that's when they got into tech. They didn't buy tech until March.
In April.
But it's just not. It's not just those 5, though. I mean, you are seeing some rotation into something.
These guys get me. They're saying they didn't get into it until March, and we called it out in September, the month to remember. And it dumbfounds me how stupid these people are sometimes. We were at the 200 SMA, and they didn't get in until March, January, February, March. They didn't get in until that third soldier. Which would make sense if they'd got in down here off this Head and Shoulders. But I'm always like try to get in first. Went the 3 black crows, boom. September the 26th is when I wrote that song. Right there.
To market weight from over.
Now they're pumping it at all-time highs, and I'm leery of it. I'm just leery of it. I'm thinking just the opposite of them. And we could be breaking out. I mean, I wanted a bigger pullback. $20, $15 ago. So if we break 47666, I'm going to ride the boat up to the upside. We have to break 47666, the devil's number. I'm just dumbfounded.
NVIDIA's up over a week.
12%?
14.
Okay. So, but on a PE basis, and we don't own it, but on a PE basis, it's not that expensive.
And then all the year of 2022, they said, buy the dip, buy the dip, buy the dip all year long. And I was saying, no, short, short, short.
Particularly expensive. Like Salesforce on a PE basis now for next year is not that expensive.
Sure.
It's a little bit higher than a market multiple. So that's why people like Joe are saying, whoa, maybe we better buy them.
Because Joe is pointing out, making a good point about last year, where consensus was just dead wrong coming into 2023, raising the question as to whether consensus is dead wrong in the view of 24. Savita Subramanian, Bank of America, says Magnificent Seven expected to drive Q4 growth. So you're going to get your big earnings growth coming from those stocks, which makes it really difficult to look elsewhere. And yes, she's talking about NVIDIA, Amazon, Meta, Alphabet, Microsoft, and Apple, the biggest drivers of Q4 EPS growth.
And NVIDIA up 12% over the last 5 days. Where's the SMH? Is it the entire semiconductor industry that's rallying? No, it's NVIDIA. For whatever the reason might be, clearly investors, quants, algos, they want to own NVIDIA, and they don't have the same degree about the rest of the semiconductor industry, the same degree of excitement. And I think that's saying something about where ultimately the real growth is. The confidence in growth is with NVIDIA, not with the entirety of the semiconductor industry.
Listen, we published a piece yesterday talking about defending our overweight technology, which, oh, by the way, has been widely panned, and we love it when people come after us on sector picks. And
they're not always right. I mean, what do you mean?
Exactly. And so
what happened to your financials
so
thing?
you just have to,
I'm just keeping you honest, man.
I get it, man. I get it.
Keeping you honest.
But on technology,
you like to criticize the criticizers.
I do.
All right, I'm just keeping you honest.
I love it, and we were humbled by the financials not working, but we still love them. Broken clock. Anyway, On tech, valuation, by the way, is the worst thing you should look at in tech. It has no predictive power. We proved it in a chart that we put in our report.
Well,
by
we
the
see
way,
it.
too, when you take a look at other parts of financial statements, including balance sheets, cash flow, and income statements, technology is not stretched, okay? When you take a look at two-year performance, two-year average performance, you can't look at yearly because last year was such an anomaly, just like 22 is an anomaly. 80% of the time, when you see this type of performance in technology, it outperforms the next year.
Your point's well taken. Look, Facebook had Meta had its worst year ever in 22, and the best year ever in 23.
Correct. And so I think what's happening is Shannon talked about dispersion. We've been screaming about dispersion increasing across the three major points of how we look at building an asset, meaning equities, industry sectors. Performance, earnings, valuation, they're all increasing. Meaning you can't just buy technology, or you just can't make broader market calls. The stock market is a market of stocks. And oh, by the way, technology, there's so many different bits and pieces of technology, you have to be a stock picker in technology. It's not as easy as it was.
The other sector that you just said how much you like it, still financials, right? They're going to come out of the gates on Friday with their earnings. Now, these stocks have ripped since their October lows, all of them, okay? Does that change the calculus for coming into earnings season, that the stocks have done so well, so the earnings, and well, the outlooks better be great?
I think the believable feature of financials is still kind of raw on the regional bank side of things. I don't think people are really believing that because of what's happening in commercial real estate.
That's fair, but I'm talking about like the Cities, Bank of America, BlackRock, Morgan Stanley, Goldman. We're talking 30+% gains.
Exactly. So, but think about this: if you go stock by stock, Citigroup, which we rolled out all of our JP Morgan positions and put into Citigroup December 1st, that's massively outperformed. I don't think you need to own both JP Morgan and Bank of America in similar sizes. So I think you own JP Morgan for dividends, but I think in a tactical portfolio, if you own Bank of America, Citigroup, Morgan Stanley, and Goldman, those should be your core positions in financials. And oh, by the way, their numbers are going to beat. They're going to beat their numbers because they've over-reserved, and they're going to increase their dividends, and their balance sheets are strong.
Yeah, I mean, so that was the point I was going to make. I mean, I think the shift in terms of financials, and even, to a lesser extent in the regional banks, because I think that, one of the things we look at is just, what drives earnings for financials. And a lot of it is driven by provisioning or lack thereof for loan losses. And so if the expectation is that the economy is going to be potentially better than we anticipated, then there should be less delinquencies, charge-offs from a loan perspective. And that those provisions may be able to be unwound and could be additive from an earnings perspective. On the regional bank side, I think the emphasis on commercial real estate is real and warranted. However, I think that they're called regional banks for a reason. And so I think as an investor, from a micro perspective, from a fundamental perspective, looking at that from a geographic perspective and the makeup of that loan book is where you could see some divergence in financials. The last thing is, Scott, I know you want me to move.
Please.
But from a
I'm glad when you do my work for me.
From a capital markets perspective, second half of the year certainly seems like there could be a pickup on the M&A side, not necessarily on the IPO side.
Steepening yield curve helps too.
It does. The most compelling argument you can make for money center banks, I think, at this point is the expectations are low. Earnings expectations for Friday, when you begin to see some of these money center banks report, they're incredibly low. Net interest margin pressure is going to be evident. We've already heard from Citi and other banks talk about trading revenue that is going to be under pressure. I think that Citi has done enough work, to Brian's point, early in the year, in which if you get a little bit of a pullback off of earnings, there'll be strong buying demand for that one name. I like Citi. I also own JP Morgan. Boy, JP Morgan is the complete opposite of the rest of the money center banks, where the expectations are remarkably high.
Yes, they
You
are.
need a lot of catalysts to move the needle.
220
for
for my prediction on JP Morgan
really?
this
I mean,
year.
what do you need?
I think you need them to show some earnings growth. And they really have a low PE because people don't believe that there's going to be any real pickup in their business. And whether it's on the banking side, M&A side, capital markets, it's just.
Don't you think that is going to pick up? I mean, loan
I don't
growth,
know.
M&A.
A lot of things happen outside of the banking world now. There's a huge now private banking, shadow banking sector that is growing and enormous and attracting a lot of money to it.
Sure, but
so,
in a economic environment that is better than expected, rates coming down.
Yeah.
I hear you on private credit and that level of lending, but isn't after a couple years of true uncertainty, can't you finally see
Yes.
a bit of a rainbow?
Yeah, so I guess the way I would characterize our thinking about financials, we're overweight financials, and we don't tend to own value-type banks, so that's not for us. But we own Blackstone. That's a financial. American Express is a financial. Schwab is the closest thing we come to a big bank, and so we own them because there's more growth.
All right. So we're watching Boeing today, too, which is in the green for the first time in a few days. And we have a big deal coming up at 1 o'clock today. That is when Phil LeBeau has the interview with the CEO, an exclusive. Phil joins us now. What do you think Calhoun's message to you is going to be? And maybe more importantly, Phil, to investors. What is he going to try and say to you today?
Similar to what we heard in the employee town hall yesterday, which is we've got to do better. There is no excuse for these types of mistakes that have happened, although we don't know exactly what caused that door, that plug to blow out on the Alaska Airlines plane. Dave Calhoun says it doesn't matter.
I don't like either
Ultimately, Boeing manufactured this plane. It has to do better. And I think that's what we're going to hear. We'll talk a little bit more about what we're going to be discussing with Dave Calhoun in a bit, Scott. But let me bring you up to speed in terms of what's happening with the grounding of the
that's the only
MAX
headline they
9s
need
that
for
are
this
out
thing
there.
to bounce.
Remember,
And they'll take
171
it
of them
on
are
grain of
grounded
salt.
around the world. The bulk of them are flown by Alaska and United Airlines. The inspection rules have not been finalized yet. Remember on Monday when we reported that the FAA said, yep, you're good to go? They've decided they're walking that back now. So they are still in discussions with both Boeing as well as the NTSB and sort of making sure that when these inspections are done, then the grounding can be lifted. The potential impact for Boeing on these groundings, let's say it lasts 2 weeks. Sheila Kahula gamed out a 2-week impact on Boeing in terms of payments to airlines, maybe $36 million. Not a huge hit there. But the bigger question is the reputational risk. The FAA, sensing how important this is, walking back that they do not want to be seen as just green lighting these planes to get back in the air, especially after loose parts were found, said operators must also complete corrective action requirements based on findings from the inspection prior to bringing any aircraft back into service. That was issued yesterday, 2 days ago. Remember, that's when Alaska and United both said they had several instances of finding loose bolts or loose parts on the MAX 9s that they've been checking out. Don't forget, we're going to be talking with Dave Calhoun. That's coming up in about 40 minutes, Scott. Lots to talk to about not only this situation, and we know how Boeing has a safety team in place. They're going to get to the bottom of what happened in this situation. But the broader question is accountability and a culture of quality control. And how does Boeing reassure investors that when it says we're at 38 MAXs per month right now, Scott, and we're going up to 50 by 2025, 2026, that it's going to be a smooth progression? That it's not going to be 3 months, oh, wait, we've got a grounding, we've got an issue, we've got a problem with one of our suppliers, okay, now we have another issue. That's been the problem here, Scott. Boeing has been unable to smoothly ramp up production, and I think Dave Calhoun realizes, they've got to do better, and that's the message we're going to hear from him.
Yeah, the other issue, which, doesn't have the most immediate impact, Phil, on the stock price, he has to reassure flyers, too.
And we're so close to resistance.
Back to those days with the MAX where, you're going in and you're looking at the type of equipment you're flying.
They say they got to do better.
If you're making a reservation, if you do have choice of airline, now we know the hub system eliminates that in many markets. But you know what I'm getting at? Because after the initial incidents with the MAX, you had that. What kind of plane am I flying today? Well, I don't want to fly that one, so maybe I'm going to look elsewhere.
Yeah, but that's a short-lived impact, Scott. That's not to diminish how people feel, and that's not to diminish this situation with Alaska Airlines. But I'm telling you, time and again, having covered this industry for several decades now, I always get this question from people. If there's an accident, will people stop flying a Boeing, an Airbus, whatever it may be? And time and again, what you hear is there may be some immediate, real close, short-term
another government bailout.
Nervousness amongst flyers. But it's not something that lasts for a long time. Doesn't mean you can dismiss it if you're Boeing or Airbus, but this is not something where people are going to say, I'm not flying that particular route because it's a max
gotta
size.
ride the
Or
momentum
the number
of
of
these
people who do that,
guys.
Scott, is very,
And
very low.
they're all hyping it up.
It is, the second time we're talking about major issues here. We'll see. Phil, we're looking forward to your interview. We'll
we
see in
got
about
a
35
spinning
minutes or
top
so with Dave Calhoun.
on a
That's Phil
weekly,
LeBeau.
which is
so you
good
own this stock.
reversal
I see
candle
this
to the
coming down
upside.
to two things. It is one step forward versus two steps back.
I'm going to say
versus
239.83 is my resistance.
People who own the stock and say, these are issues, they're from a stock standpoint, let's just stock standpoint, okay? That's the issue that keeps you in the stock, like Stephanie Link. Jim.
I'm going to have my lunch.
In 10 different benchmarks. In a value benchmark, and you're looking at a 1% position in 50 stocks, you want to bet on the value that continues to get better, because we've had a lot of 2-minute minors, to talk in hockey terms, but this is a 5-minute major. And so they're going to be in the penalty box for a while, and this is going to be all about credibility. Humility on the CEO. The effort was good. It was a good start. Now we need to see credibility in terms of.
I don't think they can blame this guy yet.
Well, what does that come down to in terms of cash flow expectations? Because that's what it's all about in 2024.
Right.
Is the $6 billion consensus going to need to come down to $5 billion or $4 billion? That's beyond what people expect right now.
The point is probably not.
Right.
Probably not, because as we've seen some of the data come out over the last couple of days, it's like, okay, if you are United, for example, they fly the MAX. What are you going to cancel your orders? And then what are you going to do? Wait till 2030 to get a new plane from Airbus?
And therefore, the thesis that Stephanie Link and Brian are playing is ultimately looking specifically at the stock going to be the correct one.
All right, straight ahead, we're trading more stocks on the move today. Lennar boosting its buyback. Joe owns that. We'll get his reaction. Plus, we have a big battle going over American Express. One firm says buy, another says sell, which means Carrie and Joe, they're both in it. They're going to debate it next.
So we got NVIDIA flagging out for a squeeze here. And Meta, I'm watching Meta too. We're squeezing. We got the 9. I'm at 21, the 9, and the 50.
50% off.
50% off.
We're back to take a look at some of today's stock movers. All right. We have ownership in a lot of names today. So Salesforce today named the top pick at Oppenheimer.
Really?
Gary, why don't you take that one first? They believe the company can grow earnings by more than 20% in fiscal 25.
Yeah, I think that's true. I mean, they
CRM.
missed last year where the stock was up 100%. So glad that they're joining the party now. Thank you. I think what we saw with Salesforce is a weakness
Boom!
in capital spending on technology that persisted in 2022, started to change in 23. They got religion about cutting
Nailed it.
costs. They cut headcount, marketing, a lot of the sort of G&A that people say you got to do it in order to improve margins. They did that. Now they're going to see sales growth. We're in double digits.
I love this strategy.
Mid-teens. And I think that's possible. And yes, I think that Salesforce can continue to go higher.
Brian, the target, stock's 263. They say 300 is their target. You own that too.
We do, and for us guys,
Get in, get out.
Diversifying because we've got bigger
Within a minute.
positions in Oracle and Microsoft, but we liked what we've seen in Salesforce in terms of the reorg, and we had been in it for a while, so we enjoyed last year.
Joey, you own this in your Joe T.
How we do? Salesforce.
All right, cool. Let's go to the Home Depot.
I absolutely,
you do have something to say.
I agree with the 20% revenue growth. I agree with that expectation. The stock clearly is targeting November of 21's high at 311, and the headcount, the focus on reducing headcount has really been what's driven the stock to move higher, the cost efficiency.
I got it. You need a little firmer prompt. I hear you. Okay, we'll work on that. Home Depot. You don't own this, so I'm not coming to you.
Okay, good.
Wedbush upgrades it to outperform from market perform. Carrie, you own Home Depot. Price target to 380 from 330. Much better year, they say, for home improvement spending is coming.
Yeah, well, you can only defer maintenance on a house for so many years. After 2020 and 2021, when everyone put a new deck on their home, and Home Depot was a big recipient of, COVID money, it had a tough year last year because people didn't have anything to fix. So now they start fixing. There was an inventory correction for the company. Same store sales were weaker than expected, and now they realize that they've had to control that inventory. They're doing it. Supply inventories are better. The channels are providing better supply costs for them, and we think that they can beat expectations.
Okay, Lennar. They've boosted their share buyback by $5 billion. Joe, you own this in the Joe T. Yes, I know you do. So the stock's up 34% or so in the last month, and in the last 3 months. So what's your take here, Joe, on Lennar going forward?
So
how'd I do?
So you're calling for the run play, and I was ready for the run play. Before, I was ready for the run play, and you just threw me a little screen pass, so I wasn't ready.
Really?
I was thinking Lennar before, but let's talk specifically about what we've got here. Lennar, all these home building stocks, think about where sentiment is towards them. No one wants to own home builders right now. Everyone has a negative view in terms of the significant price appreciation, the challenge that the consumer can have, and what does a company like Lennar do? A company like Lennar goes out, and the capital allocation strategy is really put up against that negative sentiment to say to those
freebie.
Okay, if you want to be bearish, we'll show you what we could do with the cash generation. Quarterly dividend. Quarterly dividend comes in above 37 cents at 50 cents. That's above what the street expected. The buyback is robust at $5 billion. You stay with the home builders.
Can't handle the audible. That's the moral of that story. All right, Schwab. Citi downgrades to neutral from buy. The target cut to 70 from 75. So potential headline risk from SEC market structure rules number 1. Customers more likely to seek out higher yield accounts. That's an interesting one as rates come down.
Yeah.
What do you think?
Well, I mean, it feels like a non-call here. I mean, the stock's been strong, as all the financials have been, so it's rallied. And now they're saying, oh, well, you've got risk because you're a financial. It's the same risk that have existed since they started the company. And every bank has these same SEC can change the rule type of risk. This is a Robinhood risk. And
Hood.
So much bigger of an entity. So I don't buy that. I think that the stock is still inexpensive. It's 14 times.
Oh, man, that would have been a good trade today.
It's a financial. Lots of people move their cash to higher interest rates.
Boy.
That's going to continue to happen, and the earnings will go up because
Snake,
the trade deal is almost
break
almost
out, pull
Yeah,
back,
cash sorting
double
has already
bottom,
been the issue. I
boom.
mean, that's stuck sold off already multiple times on cash sorting concerns. So I think this call's a little late. If you're going to make this call, you could have already made it.
Okay. American Express. So Deutsche initiates today as a buy. $235 is the price target. So does Bank of America. They go buy. BMO, though, downgrades to underperform. Fine analyst, I'm sure. To underperform, target goes to 157 from 188. Carrie, you take this first because you own it. It's one of your top picks.
Yeah, we like American Express. You've got affluent people continuing to spend money, and younger affluent people are using American Express cards more than ever. We've got travel, continues unabated. People are still traveling. There's not a recession. There's a lot of reasons to like a stock that sells for 12 times next year's earnings.
Joe, you own it too?
Yeah, it's owned in the ETF. The ownership is really more oriented to the strong price performance. I agree, the balance sheet's good. But where do we fall? Soft landing, firm landing, forget the hard landing. If it's more towards a firm landing, I think you have to acknowledge that American Express will come on under a degree of fundamental pressure.
You think the BMO calls back? I'm just kidding. I'm just kidding.
I think one part of the BMO call is bad.
I'm just
Goldman
kidding.
Sachs.
I was trying
Totally
to set you
disagree
up.
with that.
Let's do one more quick. Lam Research, Citi names at the top pick, replacing AMAT. But you own both of these stocks.
Yes, own both of them. I think Lam Research, in terms of semi-equipment, is clearly the #1 company.
LR
You're looking for a recovery
CX.
in memory. The recovery is actually coming quicker than the street had expected. Lam Research is a quality company, best in breed in semi-equipment.
All right, Courtney Reagan has the headlines for us today. Hey, Courtney.
Hi, Scott. Secretary of State Antony Blinken met with the leader of the Palestinian Authority, Mahmoud Abbas, earlier today on Gaza's future. Blinken spoke with Abbas about the Israel-Hamas war and Gaza's future post-conflict. The Biden administration has said that the Palestinian Authority should govern both the West Bank and Gaza. The administration has also been adamant that Israel recognizes a Palestinian state as the only solution toward peace in the region. More than 20 million people signed up for Obamacare health plans, breaking last year's record. The Biden administration announced today that enhanced subsidies to help pay for the health plans were a big part in the record signups. The full tally of signups could grow as the deadline to sign up is still ahead of us on January 17th. And Mark Zuckerberg is now working in the fields. Sort of. The Meta Platform's founder and CEO posted on Instagram he's raising cows in Hawaii to create some of the best beef in the world. The cow's diet, macadamia nuts, and beer produced on his ranch. Scott, back over to you.
All right, Court, appreciate that. That's Courtney Reagan. Up next, decision day. The SEC has until the end of today to approve or deny the first ever Bitcoin ETFs. We'll find out what you can expect if and when they do start trading. Bob Pisani, he's all over that money for us next.
I can't tell you how good the beef is in Hawaii. I've been in, 5 different countries. The beef here in America has the beef in Hawaii is the best. Why? Because everything's so green and flush there. The grass, the leaves, the trees, just everything. When I moved to Hawaii, it was like walking into a heaven. It was just so vibrant, so green. Everything grew 3-4 times as big. And the beef, God, I miss the taste of that beef. I don't know about the macadamia nuts and the beer, but I think it's the best in the world. So we broke past some major resistance today on Boeing. We got to break the 50 on the 1 hour before we actually do something. We broke it the first day of the knife. I could almost call this a dead cat bounce, but I can't because there's so much volume. Meta wants to break out so bad.
Well, back Bitcoin's lower today. Investors awaiting that decision from the SEC on the first ever Bitcoin ETF. Spot Pisani
Been bullish for quite a while.
Latest. So
Meta.
we'll see what happens today. Has to
Just
happen
waiting
today,
for this yellow,
one way
red
or the other. And I guess you think it will happen after the close.
to buy
Yeah,
put.
there is no reason for them to delay this. All the cards are aligned. All the T's and I's are crossed at this point. So I'm hopeful, and everybody else is. So the investors are waiting for the SEC to approve a whole raft of spot Bitcoin applications, about a dozen, possibly today. Attention is turning to 4 areas: fees and how competitive they're going to be, and it's going to be competitive. How it might trade relative to Bitcoin and to Bitcoin futures. Number 3, how much inflow will these ETFs actually attract? And finally, are institutions going to get into this game? So we've got close to a dozen applicants. The fees have been very competitive. They're changing every day, folks. Several, including Kathy Wood's ARK Invest, Bitwise and Fidelity, and Valkyrie and Invesco Galaxy, they're charging 0%, zero for the first 6 months. Grayscale's at 1.5%, down from 2%.
We're getting ready to squeeze on Meta
right now. One of the big questions is whether a spot Bitcoin ETF will track Bitcoin and Bitcoin futures.
I'm not in
There's
it,
some
yeah.
concerns the spot Bitcoin ETF could trade at a premium to Bitcoin.
Kinda wanna buy
Obviously,
put.
that happens with a strong degree. That could create
Now,
a
what just
backlash
happened
against
there?
the product.
Oh, that was a new
Bitcoin
candle.
ETF futures, experts tell me, have tracked Bitcoin fairly well, but the spot market is still not fully mature, experts tell me. The futures market's been around for a while. It's regulated and relatively mature. We'll see how this plays out. Another issue is whether the Bitcoin ETFs will trade at a premium or discount to their net asset value on a daily basis. Most believe the spreads are going to be very tight. This is a very liquid product, and premiums will be small and get smaller over time. Again, that's something we've got to watch carefully. The other question is how much money are these ETFs going to attract? And it's not clear. We do have some precedent, though. The opening of Bitcoin futures ETFs in October 2021 brought in significant assets. The main Bitcoin futures ETF, that's BITO, now has over $2 billion in it. Reggie Brown at GTS, a guru in this space, estimates all the funds could have $2 to $3 billion in inflows in a month, and 10 to 20 billion this year. That's significant, but it's still relatively small compared to Bitcoin's roughly $900 billion market capitalization.
The candles are so freaking small.
See what happens. I appreciate that. What's your take here?
Several things. Number one, you could look at the GLD that has 56
I'm gonna go
billion
for
in AUM. Some similarities obviously exist, so I think that's a number that's achievable if in fact we see the approval
It's a
for a
Fibonacci,
Bitcoin
or what is
ETF.
that?
Also, if the ETF
Price
is
line
approved
indicator.
and some of the fees that have been discussed, what does that mean for Coinbase? I think that would lead to some pressure for Coinbase. And then just,
What the hell is that?
lastly, thinking about from the aspect of if this is approved, this is really a shiny new toy for the algos. The algos are going
know
to
what that
ultimately love this if it is ultimately approved, and you'll see options, obviously, that will follow. This will be something that you'll have the ability to arb.
You have a take?
No, I don't, because I agree with the gold thing. I love the gold call, but I just would not touch Bitcoin with a 10-foot
that's what it
pole. I
is.
don't-
Damn,
any part
Jim.
of it. I don't think it's a real asset. I think it's a trading instrument. I think there's massive risk there.
All right. Well, we're going to have take a quick break. We'll come back. We'll do more contrarian ideas for 2024. Brian Belsky says bet on this unloved sector. He'll tell you what it is next.
30-minute time frame. I'm working on a new strategy this week. This is called the TTM Squeeze Pro 2 Black Dot. And I'm trying to learn how to use this here. So we had the black dot right here. So I'm thinking of getting a reversal on this. Now they got that face thing coming out. A lot of hype on Meta about but it's very expensive, so it'll only go to the elitist and the upper middle class. Probably people with $120,000 a year income. So I'm going to look at a put for scalp. The calls are a lot more. Oh, let's see, 365. We got divergence on the 30-minute. Okay, let's see what happens. I don't want to go against Meta. I don't know if I should do this.
FEMA. Welcome back. We continue our series on the committee's top contrarian ideas for 2024. It's your turn, Mr. Belsky. What do you have?
Well, how about REITs? Everybody hates REITs. Here's why.
I don't like. I love reefer.
Never coming back. We never come back to the office. Interest rates are going to be high forever. And given the fact of what rates did last year, and everyone's selling high yield. Remember, the month of October, these stocks just got crushed. So guess what? We want to take the other way, right? We want to take the other way. We want to buy REITs and find REITs in very specific stock picking, like Boston Properties. We added to our several portfolios December 1st. It's up 25% since then. We've owned Prologis, PLD, for several years. It's an industrial REIT. And in the small mid-cap space, Cube, 20% of their business is here in New York City. So as we continue to store things, especially in New York with us moving around a little bit, I think that's a really great theme. Now, given the fact that it's 3.5% of the market, Scott, you can actually have a little bit higher tracking area in that and have a 1% position in each one of these stocks and be overweight. That's why we like it.
What's your take here? Because I think it was Anastasia yesterday or the day before.
Okay, I'm in small.
This is where we use the word nervous. It makes me nervous that everyone who's contrarian play has been that they believe real estate will be strong in 2024.
Jenny also.
Jenny also as well. So I actually believe I like the tactical perspective on looking at the REITs. Obviously, things associated with apartment buildings and commercial real estate, there's going to be some difficulty. The tactical element I like, but I'm a little bit skeptical given how many people believe that it's the contrarian play.
From a performance perspective, though, you have to be really careful because the dividend aristocrats got hammered last year, and the reason why is because of high yield, not dividend growth. That's number one. Value got hammered, and what's going to end up happening, we think, is this reversion to the mean. You want to own these other disciplines, and that's why having your portfolio apart in REITs and having that payout ratio is going to help you.
Shan, you like it or not?
Yeah, I mean, I think that there's, lower cost of capital, and I think if you're looking at REITs specifically, Brian makes a great point in that there's not a lot of office when you're looking to buy REITs in the U.S. market, and so that's an overhang that's probably overstated even last year with the higher cost of capital and expected higher defaults.
Let's be clear too, not all REITs are created equal. mall REITs, office REITs, like Jenny's got like medical building REITs, you know, things like that.
I wish you'd quit talking about marijuana.
Yes, your warehouses and things like that.
Right, like a technology. Think about how important technology REITs are going to be going forward in terms of increasing technology. Think of industrials as well. We're going to store all of this stuff. And on the retail side, remember, post the financial crisis, a company called Simon Properties did an amazing job kind of managing all that retail that went away after the financial crisis. So there are times when you need to get into REITs, and I think now is an apropos time.
All right, we will do Mike Santoli's midday word when we come back.
Way to go, Mara, way to go. Way to go, Mara, way to go. We hit my resistance, Mike. One of them. Not the big one yet. We've got another 60 cents to go. The resistance on the Pro.2. Not my resistance. Mine's 27.58. Damn it. Come on, Meta, don't do it. I figure one day that picture will come back and haunt me. Shorting strength.
Safe.
Hi, welcome back. Senior markets commentator Mike Santoli with his midday word. What's on your mind today?
You know, Scott, been spending the last couple of days really kind of combing the market, trying to find fault with the way it's behaving in these 2 weeks where we've been in this pause since we hit the highs. It's kind of tough to find a lot to really complain outright about, although today and yesterday you still had sort of the protection of a couple of mega caps while you have some pullbacks going on below the surface. And I just wonder if the market's sort of keeping some powder dry for whatever reaction we're going to get if we do from CPI. Feels like there's a buildup of rational confidence that inflation's going the right way. See if that upends that view at all. I kind of doubt it. We might be able to look through even a slightly elevated CPI number tomorrow, given what we know else is going on in the economy.
Yeah, I mean, if there's any conviction at all in the last few days, it's only around mega cap. You know, NVIDIA is just a stalwart. Meta's up 4% today. You know, obviously Tesla and Apple continue to have their issues, but that's where the real buying seems to be.
Yeah, and I think the key there is that it's just making the very,
I'm looking at the chart pattern.
Sort of
Upper wedge
from the 2 month rally, just kind of get hidden underneath the S&P 500. I mean, I look at the new high list, S&P 500 new highs. It's those secular growers, but it's also some home builders, some favorite industrials like GE and Trane Technologies and Eaton Corp. You know, so it's not exactly like only one stock is working. Insurance and home builders still in favor. So it's hard to really quibble with how the market's just hanging out here for 2 weeks.
All right, we'll see you on closing bell in a couple hours. That's Mike Santoli, our senior markets commentator. Final trades are next.
I need the volume to slow down a little bit, which it's starting to do. See how it starts to slow down? But I don't know. I was up there a little bit. Damn it. We got 3 tweezer tops on the 5-minute, or 2 of them. We had them here and we had them here. So I don't know. I think I'm going to hold it out just a little bit longer. It's tried to fake me out 2 times now. We got the and we're so close to resistance up here. We got a double top on the resistance level on the SPY.
Sit.com.
Are you following the Halftime Report podcast?
Yes,
what are you
I am.
waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now. $475.57. I look at my 1 minute. I go, you dummy. I'm surprised they're not pumping Apple. We got AMD at the 200 still forming that symmetrical flag. Ooh. Did we get there? Haha. Mara, I love you. Now we're going to see what happens. I'm going to go ahead and scale out some trades here at the top of the Darvis box. So let's talk about the Darvis box. This is a head and shoulders. This is the left shoulder, and this is the right shoulder. So I know that we have a resistance at that shoulder line of this head and shoulders. Also, we have a Darvis box.
So we have 2 confirmations.
I hope you'll join me closing bell today, 3 o'clock Eastern Time. Josh Brown will be with me along with Liz Young. We'll walk you through that last hour of trading, run you right up to the end of business today when we look ahead to CPI.
Now I just got my wish come true here on Meta.
Good to see you again. Thanks
Meta.
for being here on set with us.
Finally got
Thank you so much. Guess
114.
what? It's not a financial. Ha ha ha. I'm going to go with the Google machine. Stock's underperformed the last 3 months, and I think we're going to see some massive rotation over the next 6 months.
So I'm going to type in Darvis box.
I'll give you Adobe. The stock had a good year last year, but it's been at a bit of a pause. There are new AI-generated products, and we think it's going to have a good year.
All right, Shannon, what you got?
Commodities ahead against both geopolitical risk as well as potential growth in China.
Finally, some chick said it.
A hedge against geopolitical risk, cyber. Palo Alto Networks.
Well, they're all saying
ready
it.
to make another new all-time high.
All right, there was another
119, go baby.
On that today. These calls, whether it's CrowdStrike or Palo Alto, it seems like every day.
Absolutely.
The streets weighing in. All right, thank you guys. I'll see you on closing bell. The exchange is now.
We got 2 engulfing candles.
Thank you, Scott. Hi, everyone.
Bang,
I'm Kelly
121
Evans. This is The Exchange. And
on
we
Mira.
begin this hour with
Meta.
the big story since Friday, when a door plug on a 737 MAX 9 operated by Alaska Airlines blew out midair. The pressure so intense that it ripped
So this is why I
open
took the
shut
trade.
off his body and sent it flying out the hole. Luckily, disaster was averted. No casualties
1,
were
2,
involved.
3, 4,
Almost
5 black
200
dots.
737
3
MAX
black
9
dots.
planes were immediately grounded
3
for
black
inspection.
dots.
United Airlines has since found loose bolts on
So as
both
it
legs
started
of
to come
several
down-
of the 737 MAX 9 planes. Alaska has also found more loose hardware on its planes, and an investigation into what exactly went wrong is underway. In a town hall yesterday, Boeing CEO Dave Calhoun told employees that, quote, every detail matters. But if that's so, a lot of questions remain, especially given the past tragedies that ensued with 737 MAX planes, including fatal crashes in 2018 and 2019 that killed a total of 346 people. So let's get some answers. Joining us live from the Boeing 737 MAX factory in Washington State in a CNBC exclusive interview, Boeing CEO Dave Calhoun, along with our Phil LeBeau. Phil?
Thank you, Kelly. Dave, I think the main question a lot of people have, in addition to what the status of the MAX 9 is, what was your reaction when you saw
Okay, we're going to listen to the idiot.
blowout and the video Friday night?
Devastated, emotional.
Don't start crying.
I saw the picture, everybody saw the opening, but what I really saw was the empty seat. And I had spent a week with my kids and grandkids, and so enough said. I imagine every human being who would see that understands the severity and the consequence. So immediately, you get to work. That's what you have to do. I want to just take my hat off and our company's hat off to the Alaska Air team, specifically the crew that trained most of their lives to handle that moment, hoping they never will, but they did. And the crew, alongside the pilots, handled it as well as it can be handled. The plane landed safely and there were no fatalities. And then the leadership team did exactly what it needed to do. It grounded the airplanes, the FAA immediately grounded the airplanes, and the Boeing team supported every step of that process. And now we're in a moment where we have nobody at risk, and our job is to understand literally everything that has happened, everything that surrounds that particular fuselage plug, and fix it, and make sure it can never happen again.
What do you think happened?
Don't ever say that.
Well, what happened is exactly what you saw. A fuselage plug blew out. That's the mistake. It can never happen. We're not allowed that to happen. And I'm not about to speculate, but I will say this. The work that our regulator, in this case the FAA, has been doing to inspect the situation and create a procedure and a protocol for the airlines to go out and inspect each and every one of the airplanes, 100% of them, and make sure certain they're in conformance with our design, which is a proven design. I'm confident that that process will not only prevent accident, but maybe more importantly, the data we collect from each and every one of those inspections, the data we collect, will inform all of the actions that we have to take as a company.
Your people were with the Alaska engineers teams when they took off some of their panels and they started doing some inspections.
Yes.
Tell me what happened when you got the phone call as soon as they took off the panel and they said, we've got some loose bolts here.
Yeah, so, I have an engineer who is an awesome engineer who worked right alongside of the Alaskan Air. They inspected those first few. I asked him to call me the second he was done. And yes, he used that term, loose bolt. Now, remember, a loose bolt in an aviation application is a bolt that's under torqued, or a gap that you can see that is measured in millimeters, not centimeters. It's, nevertheless, it has the same implications. So, I understood that from the first moment.
So you're not surprised to hear other reports from United as well as Alaska doing further inspections?
No, well, I'm always surprised at anything that doesn't conform perfectly. On the other hand, it's a fact, and that's what's going on. And I want to know all those facts, and our team wants to know them all. And we're going to want to know what broke down in our gauntlet of inspections, what broke down in the original work that allowed for that escape to happen.
Dave, Kelly has a question for you. Kelly, go ahead.
Mr. Calhoun, thank you, Phil.
This will probably
My
drop a
question
lot
is,
more
what safeguards have to be
meta,
missing for an
but I got
incident
out.
like this, like what happened on the Alaska airplane, to happen? What lapses either in the manufacturing process or in Alaska's process need to happen for this to have taken?
This is number 5 for Kelly. She's pregnant.
I very much appreciate that question. I should mention the Transportation Secretary, Buttigieg, the FAA Administrator, Whitaker, and I have all had discussions about exactly that set of questions.
Watch Boeing, see what it does here.
Specific actions that we will have to take to make certain it never happens again.
You can't
We'll
say
all be
that.
informed by the data we collect from the inspections. By the data we collect from these inspections.
He can't say that shit.
No airplane will fly. None of the Dash 9s will fly with an unsafe condition. That I can promise. All of the work that we have to do in the background in the quality systems to ensure that on an ongoing basis it never happens again, that work is ahead of us. But we are committed to do it.
Understood. How did an unsafe airplane fly in?
And when he gets done talking, we're going to buy a call.
Because a quality escape occurred.
Can you
Because a
explain what
quality
that
escape
means?
occurred.
What is a quality escape?
I think that's the description of what people are finding in their inspections.
Still, 121.
Anything
That's
that could potentially contribute to an accident.
But
is a
something that
quality
escaped from the manufacturing process? Sorry, go ahead.
Again, Kelly, it's very important that we look at the data that we collect from all of these airplanes, and we are literally going to collect them from all of the airplanes.
235 strike.
Engineers from the FAA, engineers from the NTSB, engineers from Boeing, engineers from our supplier Spirit. We will have all the answers to all of those questions, and I'm happy to come back and report every step of the way to people who want to know.
Kelly's question highlights the bigger question that's out there. People look at the MAX and they say it's been a steady stream of non-conformance issues or other manufacturing issues. Why can't it get the MAX?
Got an inverse head and shoulders right here.
These issues?
Well, let me start with this issue is on a discrete set of airplanes with a very discrete plug. We don't do it on any other airplane. So that is the population of airplanes we're looking at. Non-conformances in our world, as we've been on this path since the beginning of the MAX introduction, and yes, the MCAS incidents, we have asked everybody who touches our processes to volunteer information
Didn't
that
ask me.
might cite a non-conformance. And then we do everything to stop our production process, to verify that those non-conformances are now conforming, and then to resume our production. And it's been very frustrating for our people and for our investors. But we have been very willing every step of the way to do that, and as a result, we are getting ahead and ahead and ahead. We have not had safety related. This one is. This one is. And it's very important that we understand that.
You know Pat Shanahan, CEO of Spirit Aerosystems. You know him well. He was here at Boeing for a number of years. And he was here this weekend. Does he realize the situation in terms of what's happening? And we're not saying that Spirit's responsible for this fuselage flood. We don't know. The investigation still needs to be done there. But does he understand the severity of the situation when it comes to the lack of quality control at Spirit?
Yes. I am confident in Pat. He was here with us. At our invitation, he readily accepted in the war room, listening to all of what we are trying to collect in the production process, taking it back to his team, interrogating their processes alongside of our people. We're right next to him doing it. We're not going to point fingers there because, yes, it escaped their factory, but then it escaped ours too. So we're all in this together. We have to figure this one out. I do have confidence in Pat. I know Pat knows the implications, and I know that Pat knows the seriousness. I also know he knows how to interrogate a manufacturing process.
Does this potentially slow down the certification of the MAX 10
Yes.
and the MAX 7?
That's, they're very much unrelated, and there's no reason for me to want to comment on those things. And the FAA is in control of all of it. So right now, I think my job is to focus on this issue.
You've talked with the CEOs of United and Alaska.
Big mistake.
What have they told you?
It's serious. It's a safety incident, and nobody's going to live with that, period. So we're all going to be certain, all of us, that the airplanes that fly will never fault like this again, have a safety incident like this again. And then secondly, of course, they want to get their planes back in service so that they can...
Okay, now we might be looking at the calls.
I want to be very clear. The need to do that will not
He wants to be very clear.
process to do this the right way. It will not rush that.
You have talked, we've done many interviews over the last several years, and you have talked about improving quality control and improving safety here.
Watch the
Some people
calls
look at
on
this and
Meta.
they'll say, how can they say they're doing a better job when this happens?
Yeah.
What do you say to those people?
Because we build really large, very sophisticated equipment with unbelievable tolerances and precision every step of the way. In the post-MAX crisis, we went to work on it. We have been tackling non-conformances here and there, again, unrelated to safety, but we tackle them one at a time. That's how you build a quality management system. And you engineer the answers. You don't culture the answers. You engineer them. And then the culture goes with it. It's and that's what we've been doing.
Okay, get ready.
Anyway,
He's
this
about
one-
done.
This one is a horrible escape. A horrible escape. And we will tackle this one the same way. We will engineer answers and be certain it can never happen again. And then we will, whatever information we get or glean, we will look
Damn, look at Meta go.
around the MAX, around the Spirit factories, our own factories, our inspection processes, and we'll make sure that we take steps to ensure that it never can happen again.
I know you're in a quiet period, so you cannot talk about guidance in terms of MAX production. But you've got a steady cadence that you're planning to increase the production rate over the next several years.
Yeah.
Can you still hit that?
Yeah, and this is not the time to be talking about what I can or can't hit with respect to deliveries. My job right now is solely focused on let's get this safety issue understood and fixed, and then production will take care of itself.
Dave Calhoun, CEO of Boeing. Kelly, we're going to send it back to you.
All right, Phil, thanks very much. Phil LeBeau with Boeing CEO Dave Calhoun. Let's get some reaction now from a former airline executive and an aviation safety expert. Oscar Munoz joins us now. He's the former president and CEO of United
Okay, I
Airlines.
got him turned down.
Alongside
Now we're
former
going to play a
FAA
call.
and TSB investigator Jeff Guzzetti. Thank you both.
We got an
for being
RSI
here.
crossover.
Oscar, is Mr. Calhoun approaching the situation in the right manner?
I think, having been in these situations before, it's a difficult job and a difficult process, but the concept of ownership, transparency and communication, and then a plan, an operating plan to fix what is clearly has gone wrong, I think are all important points, and I think he touched on all of them. Safety is the most paramount thing in our industry. I think everyone knows that, so there's not a laggard in the group that's going to have an issue with this. So, yeah, I think he touched most of the points for sure.
Jeff, I heard a plan for a plan. I'm not sure I heard any new information about what might have specifically gone wrong here. I believe the term that he used was a manufacturing escape, something like that, which tells me, and he admitted as much, it sounds like they basically have no idea how this really happened.
Kelly, I think it's just the opposite. I think he knows a lot more than he's allowed to say. You got to remember that Boeing is a party to this NTSB investigation, and there cannot be more than one official voice of the investigation, which is the NTSB. So just having him say there was a quality escape is kind of on the edge of what he'd be permitted to say. He did a great job in trying to answer these very tough, probing questions. And so I think he might know a lot more. I know the NTSB knows a lot more. He's on the inside circle. The NTSB needs Boeing's expertise, but he's not the one to be able to, should not be the one that provides these details to the public.
Oscar, in terms of the timeline here, you have pointed
Who is
that
this guy?
you know, the airlines now, Boeing has submitted these guidelines to the FAA. The FAA has yet to approve them.
Ruining my trade.
Some delays here in terms of what the airlines are learning as well as they try to figure out their next moves.
Yeah, no, there was something done over the weekend. I thought that it felt like it was going to be a good week to get a lot of the fixes and repairs in. But that was rescinded, and again, there's more clarity and a broadening of scope that's going. And so as quickly as that can be expedited, in my experience, it's often lots of conversations between the company, the OEM, Boeing, and the FAA folks that govern that. So that process would be really helpful to, you know, I know United has got about 240, 270 flights a day that are affected by this aircraft. And so they're scrambling to find customers flights to different places. But of course, with those grounded, they're not going to be able to. So the sooner we can do that, we can get everybody back and flying.
These also, Jeff, amazingly aren't the only issues here. There were also these sort of pressurization lights going off on the plane, which was flying over land instead of over the water.
I put the wrong
as a
price on there.
concern. How does that relate back to some of these other issues with loose bolts, potentially with hardware manufacturing, and just with this aircraft class more broadly, the questions that people might still have about using them?
Well, Kelly, I think the pressurization issue was addressed by the NTSB at, I think, their last conference. They don't see any evidence that that had anything to do with any relationship with this door. It was an automated pressure warning light.
Isn't that worse?
And so,
if it didn't have anything to do with this door, there was a separate reason the planes were just flying over land instead of water just to be safe?
No. Well, so these types of gripes, what they call in the aviation industry, these malfunctions or warning lights, they happen every day, all the time. Aviation is about managing risk. And so Alaska had a good handle on what these pressurization lights were about. They were probably related to sensor problems and automated systems. It really had nothing to do. And even if they did fail, the pilots had manual control of the cabin pressurization. So I don't think that's related. But to your question about other things, you know, bolts and production problems, that can be looked at.
No, I got out of
as a holistic
the Meta
aspect.
No, I sold it.
With not only the 737 line, but the 787 line and other production lines that Boeing has. If
But
there's
also,
a quality escape,
right? I didn't mean to
there's a
interrupt.
problem there.
Exactly. So, Oscar, the other sort of wrinkle here is that the FAA was already in the midst of grounding and inspecting all 737 MAX airplanes, going back to an issue in late December for possible loose bolts in the rudder control system. That predated what happened here, didn't it, Oscar? So are those issues unrelated as well, or are there just a lot of different ways in which this loose bolt situation is manifesting itself across the series of aircraft in recent weeks?
I think, and Dave and Jeff knows even better, but I think that's the conversation that they're trying to project. There is something inherent in that quality process that has been missed at some point in time.
I think I'm gonna get stopped out here if we don't turn around.
That people use, and maybe it is a tightening of bolts issue. Nobody knows that, and we will know more about that specifically. But with regards to that particular issue that you mentioned, being tied to the bolts in the door, I don't think there's any specific design connection. It may be more of a workmanship from my perspective.
And we just have a latest update from Alaska Airlines itself. They're saying we've made the decision to cancel all flights on 737-9 MAX aircraft through Saturday, January 13th, while we conduct inspections and prepare fully for return to service. And they say that equates to between 110 and 150 flights per day.
I think I'm going to get out of this because I don't like this news coming off this guy.
I think that Boeing is doing all it can. It's participating in the NTSB investigation. I think Oscar is correct that there is a bigger picture.
We got a left shoulder, right shoulder, right shoulder, right shoulder, right shoulder, right. So we got to hold here.
We don't know yet, but I think eventually eventually. We're going to find out. We're going to find out soon.
Oscar, anything you'd add?
Yeah, just as simple to all the viewing public. And Jeff, you see the expertise and oversight that these airline manufacturers and airlines have. Again, the prime importance is keeping everybody safe. And you saw one announcement of canceled flight. I suspect others will follow. So for the flying public, check with your airline, because there is going to be some impact for certainly this week and maybe further.
All right, gentlemen, thank you both very much for your time today. We really do appreciate it. Oscar Munoz and Jeff Guzzetti. We'll continue to monitor that story, of course, bring you any more headlines as they come in. In the meantime, we just had the first 10-year note auction of the year, and Rick Santelli is tracking that action out at the CME. How'd it go, Rick?
Yes, well, it's a reopening. We're adding to an issue from a month ago. The grade, C+, Charlie plus. The yield on 37 billion reopened 10s, 4.024. And C+, well, C+ might be a little bit generous, and I'll tell you why. All the metrics are really solid. If you look at the bid to cover, 2.56. We had one other one, but to find a higher bid to cover than 2.56, you have to go back to February. So pretty solid, but the marks coming off this auction are based on pricing. 4.024 was the yield at the auction, but 4.019 is where the when issued market finished. So we have a higher yield, which means a lower price. Government's the seller. That's never a good thing. Hence the C+. If it wasn't for the pricing issue of a half a basis point tail, it would have probably been a B or a B+ auction. But here's another issue. Spain, the UK,
he gets grades too.
European and UK auctions already for 2024, and they are hot, hot, hot. We had a Spanish auction that had a bid to cover of 9.2 today. The highest bid to cover I can remember on a 10-year was from 2012, and it was about 3.6, just for comparison, which means that Spain had 9.2 times more than they were going to sell to the public in terms of bids. Why do I bring this up? Because we are seeing the globe play rate cut roulette, okay? ECB, the MPC of the UK, our Fed, all investors think right now they're going to be lowering rates. So they're jumping on board the auctions. But here's the rub. 2.1 trillion, 2.1, 12 zeros is what the US, UK, Eurozone, and Japan are most likely to be selling in 2024 in terms of debt. Ponder that number. Kelly, back to you.
Strong global debt auctions, a little bit softer ones here to start the year off so far. Nothing disaster, but the 10-year above 4% in the wake of it. Rick, thank you very much, Rick Santelli. And tomorrow we get the newest CPI figures, which could offer some clues about the timing of the Fed's first rate cut. While the market debates when easing will start, my next guests say it could be fast and furious when it begins, if history is any indication. Joining me now, Michael Schumacher is Global Head of Macro Strategy at Wells Fargo. And
Go get some more coffee and I'll be back. I might take a small loss on this or add a position. We hold this double. This here shoulder line, 228.31. I can't go any lower than
That's
that.
a good possibility, Kelly. So typically when a central bank, whether it's the Fed or the ECB or some other central bank eases, it goes pretty rapidly. Generally speaking, about 200 basis points in a year, so it's a pretty quick move.
Now mind you, I'm a very big bear on Boeing right now, more than a lot of these people. But after listening to these serious guys, especially that one with black hair, I mean, he went off on him. He's not telling the whole truth here. He's probably obligated not to say everything. And that's true of business. That's true with, sometimes it's best to keep your mouth shut and just say a little bit, not too much. You say too much sometimes, it can get you in big trouble. Jack Ott taught me that. He was my lawyer. I got busted for stealing hubcaps when I was 16. And that day after that, I changed. I said, no more bad boy. I hung around. I didn't steal, but I hung around with some kids that did. And it was a big mistake. So now I hang around with people that like to make money, traders like you that I can respect and change my life. Then right after that, I went out, I got my GED, and then I went to college. And then I ended up owning a picture frame shop. So I changed my life within 3 years. I got kicked out of senior high school, my senior year, for bringing an 8-gallon keg into the 3rd floor John. They expelled me.
Stock market's performance, and there are specific stocks, David, that you're a fan of, but if we have to push out rate cuts, does that
Still in my Boeing call, but I think it was probably not a good idea. We're going to squeeze here any moment.
For our clients, right? So every time there is something on the table, we need to analyze it.
You're taking a little too early.
Of it. And I think that's really
They didn't let the setup.
To understand. And
I thought we were going to break the VWAP.
Risk is still on the table, though there's no sign of it in the VIX. There's no sign of it out there. The reality is it's there. So we have to understand that for sure. But I'm not really nervous about the rate cuts coming or not coming. I think if they do come, that's because it's a good scenario in the sense of inflation is coming down. And if they do come because the market does something that causes these rate cuts to come, quantitative easing to come, I think the Fed right now is the driver, and they're still behind moving the market up.
All right, gentlemen, thank you. We appreciate it today. Big morning tomorrow with that print at 8:30 Eastern Time. For now, Michael Schumacher and David Harden. Coming up, after a down start to the year, are stocks still set for their usual set, she said, for their election year boost?
So there's a downward wedge.
So, he'll tell us why and whether the Fed could become one of the biggest campaign issues on the trail. We're back on The Exchange right after this.
This is The Exchange on CNBC.
Looks to me like I want to get out of this trade. That or buy one. I got one contract at 380. It's kind of a practice thing. I said it was risky, so I meant it. I'll be right back. I got a headache. And I'm tired. So I'm going to talk about why I thought Mara was a good trade here before I head and get that coffee. So we got the momentum going into the Bitcoin. And like, I hate to say it, but Sarah said it is a speculative trade until we get the facts. So when something's speculative, it's a little more risky. As of last night, they were hacked. So that's part of the risk. Come in today and, we found out that it was a hack and that it's going to be prosecuted. DOJ is going to get involved.
Welcome back to the exchange. Keeping an eye on stocks here, which are off session highs. Dow's up about 55.
So I'm trading it off of. I waited for the day that the news is supposed to come out, not the day before, because you never know. You never know, especially when something is speculative. But we know that all the fat cats, BlackRock, all the fat cats, the ones that have money, are interested in the trade. No, I'm not saying Bitcoin was hacked. I'm saying it was the website that everybody goes off of. That's what I was told this morning. So it's speculative, and there's a little risk involved when you trade something into news. So when we had the pullback, we had what you call an inverse head and shoulders, and the thing pulled back. And the resistance level was the neck shoulder line. I was willing to take it to the shoulder line of this head and shoulders, but and get out of the trade. Now see, this thing could pull back again, back down to the 200, and still be respected at 25.82, and still be respected, because then you'd have one Tibbets and a freebie on the pullback. You had a triple top break, one Tibbets and a freebie above the 200, so it broke resistance, and I was willing to take that break of resistance, which was the 200 on the 1 hour time frame, and run it up to this shoulder line, left shoulder, right shoulder, and that's the hard resistance. So I hear all the news this morning that they were asking, well, did this breach, which I think could happen again and again and again, not in, and maybe in Bitcoin. It's happened before. Then you got fraud, which we've already been down that road. Will it be another FTX? No. Not with these hedge fund managers on it. Not with BlackRock and all, these people that filled out the application all have the money, and they're serious people. They're not some punk kid that's conning everybody. So as the momentum builds up into the news, it's a good little scalp day trade. And then if the news is positive, you might have a good little breakout to the double top. That's just the way I see it. Somewhere up here right around 31 something. 31.16, 31.15. Plus I was watching the tape most of the day. It's very, very busy. And I drew up the little flag. It's called a pennant flag. Pennant flag is a bullish, bearish flag, which means it's kind of like a blowhorn, but it's just backwards. There's your flagpole. There's your little round thing on top of the flagpole. And then it creates a flag. So I had 3 different chart patterns to go off of. I had a head and shoulders, I had an inverse head and shoulders, and I had the third confirmation of a pennant flag, which made it positive for me to take the trade. 3 different patterns. And then the reason why I took Boeing, I've traded this Boeing, is when CEOs are interviewed, the stock usually likes to drop. But this is serious, like you said, this is real serious. if there were just 20,000 more feet in the air, there could have been some real seriousness. People's eyeballs pulling out of their eyes, arms twisted off. You ever been in a hurricane or a tornado? We had the Joplin tornado here in spring, up in Joplin. I wasn't in that one, but I was in the Memphis tornado that tore a city block probably about 2 miles long. And I've been in 4 tornadoes, and it's horrifying what you hear that happens just in a few minutes compared to like when you're warned in a hurricane, you're able to go hide and get prepared, but a tornado can just drop out of the sky and just grab you. Why did I say that? Oh, because of the Boeing. I'm going to get ready to grab me another one right here, I think. We've got my 1, 2, 3 RSI crossovers. But the divergence not in my favor. Yeah, price action needs to go up. If the price action was going up, we had this divergence going on here, we'd be in for a good trade. Fat cats are coming back. Let's hope so.
Work through what are just difficult social issues across the board.
Yeah, no, Instagram in particular has been the focus here. For now, Eamon, thank you very much for bringing this to us. Our Eamon Jabbers with the latest. Coming up, we've had many mixed messages about the consumer post-pandemic, and it's about to get even murkier thanks to deflation. But our team is crunching the numbers so you don't have to, and we've got results on what's really going on with the data next.
What's in Meta's at? I got out of them, but well, they're still looking good. They're at 119. I don't think I really got into trading chart patterns probably for about 3 or 4 years now, and I realized that once I started learning how to do the snake and the pullback, then I realized how important chart patterns were. I was always a trend line trader. And the last 3 years have been the most profitable for me. Let's go through my watch list before I'm still in my calls here, or call the 230 strike at 380 on Boeing. We're going to go volume high. Mara on top with 80 million. We traded that one. Tesla. New car in Europe. Nile still down. Nvidia. Nailed that one. Nailed that to the T. I waited 7 months to call that out. 6 months. And I kept saying, don't buy yet. It ain't gonna break the, we ain't gonna do it.
Of course is.
Then
Welcome back to the
we did it.
exchange. We have new data on consumer spending habits with a new problem that could make it harder to figure out just how strong the consumer really is. And it's a sign of the times. Steve Leisman here with that story. Steve?
Hey, Kelly, the CNBC National Retail Federation Retail Monitor for December. We use actual credit card data from Affinity Solutions that shows retailers chalking up some pretty decent gains in the final month of the holiday season. But the true state of spending may now be clouded by a new factor, deflation. I'll get to that in a second. Retail sales, ex-auto and gas in the retail monitor, up 0.4%, down from the strong November, which was up 0.8%. Core retail, where we take out restaurants as well, struggled a bit, up just 0.2% compared to 0.7% in November. The headline up 3.1% for the year, the core up 2.4%. Some give back from the strong November was inevitable, and economists expect the economy to cool overall in the fourth quarter after the outsized growth we had in the third. But retail has been hampered by a slowdown in the housing industry. All three of the biggest negative categories in December, electronics and appliances, building supplies, and also furniture, they're all housing related. But categories more linked to holiday shopping did better, including general merchandise and non-store retailers. That's internet sales. It was also a good month for restaurants and bars, up 1.5%. Deflation, a factor in there. Some of the categories with the biggest declines in spending also saw the sharpest price declines. That's in November. Combining November and December finds holiday sales were pretty good, up 3.7% year over year. But tomorrow's CPI report is going to give an indication of what that inflation, what that was on an inflation adjusted basis. Kelly, we've been subtracting inflation from the top line for months and months now. Now we got to add it back in when it's deflation.
Incredible to already be at this point, Steve. Thank you very much, our Steve Leisman. You know who has the pulse of the consumer better than almost anyone? My next guest. At least when it comes to the younger generations who drive those long-lasting trends. And she can weigh in on everything from footwear to beauty to dating and, yes, the famous Stanley Cup. So what's in and out for 2024? Let's ask Casey Lewis. She's the founder of Trend Newsletter After School. Casey, it's great to have you here. Welcome.
Thank you so much for having me.
Let me just start there. Do I start with dating? Do I start with the Stanley Cup? Okay, let me just pick up on where Steve left off. What do you think is going on with the consumer overall? Are they in good shape, bad shape? What's your sense?
Based on the amount of stuff they got for Christmas, according to their TikTok Christmas hauls, the economy is doing pretty good. They got a lot of stuff.
I agree, and I was able to kind of realize that not much has changed. People were still at the malls shopping at brands that I grew up with, and I feel like all is well with the world. Some places where we are seeing more change. I want to talk about dating in particular. We keep hearing, and from yourself, from others, that people aren't using these dating apps and websites like they once did, and we're seeing some activist activity with Match this week, and they own Tinder and so forth. What can you tell us about that?
So I've been talking to a lot of Gen Zers about this lately. I'm a millennial. I met my husband on Tinder back when it was still good. They're telling me that the algorithms have gotten much worse. It's just impossible to, they're coming up against bots, and of course all these dating apps are now trying to monetize, so they're keeping the sort of like elite people hidden from the vast majority of the users. And I think that young people are just sick of it. I don't think that they are anti-dating app as a concept. I think they're anti-dating apps that exist in the market right now.
That's not a line I've heard before, but it makes total sense. Not to go down a total rabbit hole, but Ben Thompson.
And I'm sure we've all seen the headlines about, is LinkedIn the new dating site? Are TikTok DMs the new dating site? I don't think that any of that is necessarily true, but I think it speaks to how desperate these people are to find partners, because Tinder and Bumble aren't doing it for them.
All right, Casey, quickly on retail, because this is one of the biggies, especially post-Christmas. Lulu's still big. People, I guess, can keep buying that stock. What about Uggs? That's a Deckers company, ticker DECK. And any new disruptors? What about Crocs?
So Crocs did not come up, I must say, in very many Christmas hauls, but I think that's more seasonal, a seasonality thing. Uggs, their stronghold on young people is wild. Last year, it was all about the Ugg Taz. This year, it's all about the Ugg mini platform. I think the next big Ugg is going to be the tall Ugg, just because it's a very Y2K trend.
Florence, weren't you in?
That's my prediction.
You still in
Let's
Crocs?
see if it happens. But young people are just, they can't get enough of these nostalgic early 2000s trends. And we've seen it with low-rise jeans. We've seen it with butterfly clips. Like, what else? What's next? It's the tall Ugg.
No, it's Casey. There's hope for me. I don't think the camera angle would be very flattering if I should. I'm wearing them right now, the really tall one. See, they came back in style. Okay, we talked to an analyst last week about the Stanley Cup, who thinks that, because Yeti's publicly traded, obviously, and says this could be a real risk. Can Yeti make, if Tall Uggs can make a comeback, can Yeti make a comeback, or what's the next big drink thing?
So it is my belief that the Stanley Cup cannot maintain this sort of popularity. I mean, you're seeing millennial moms in the suburbs fighting over the last limited edition one at Target. You're seeing tween girls literally cry over opening Stanley Cups at Christmas. There's just no way. The
I don't get it.
adopters have moved on to something else. Something else is pronounced, I believe, Awala. It's the sort of like new it bottle, but I really believe that Stanley is more comparable to a Beanie Baby at this point. It's
all right.
A status item. It's a flex. It's something that people are collecting.
Maybe Yeti can breathe a sigh of relief. Casey, a quick final one for you, because beauty is so big. We've all been hearing about this. Any beauty companies you think are kind of, old news or ones to watch?
I might have to lose.
So I think beauty, lip.
Figure we'd have our bounce by now on Boeing.
Lip balm, lip oil. Everyone is buying lip products. Not so much lipstick, but I do think it speaks to the general lipstick effect. People want these small luxuries. Summer Fridays, Rhode. There's tons of big brands in this space. It's a very competitive market.
I like Ulta.
We're seeing emerging category leaders, and I think in 2024 we're going to see even more entries into this space.
Amazing. Casey, this has been fun. Let's do it more often. I appreciate it.
Let's do it. Thank you so much.
Educating all of us. Casey Lewis, after school. Subscribe to her newsletter. Meanwhile, we're seeing a wave of tech layoffs to start 2024. Twitch and Unity among the latest, while Twilio and Match, as just mentioned, are shaking up their C-suites among activist showdowns. What do all of these changes have in common? Let's ask Deirdre Bosa for today's Tech Check. Deirdre?
Hey, Kelly, there was another headline this morning, too. Salesforce is pausing all hiring in tech and product divisions, including Slack. And really, there were these hopes that the so-called Sassacre had bottomed, but recent developments like layoffs and management changes, they suggest that instead of a recovery, we might actually be seeing a new normal in software. The conventional Wall Street wisdom is that the 2022 software slump, it was driven by the Fed and interest rates. There are, however, deep fundamental issues at play within the sector at large. And I want to show you this chart. It shows the revenue growth rate for a basket of software names, including Adobe, Microsoft, Datadog, Snowflake, and a bunch of others. You can see that it peaked around 2021 at 50%, and it's not expected to break 20% in the foreseeable future in the next few years. So this all suggests that the re-rating of software could be more permanent, and that the mega caps, this is a trend that we followed for a while, are doing it now cheaper.
Shop had a new high today.
Good enough. Maybe it's not best of breed, but it's good enough.
5-day run.
Companies are trying to save dollars. That sometimes works just as well. On the positive side, though, the software reset, it may be providing new opportunities in M&A and the HPE Juniper Networks deal. That was part software, and it's about two legacy tech companies combining to create a better AI proposition. The Journal reports that a $35 billion deal between Synopsys and Ansys could be next. And when the IPO market reopens, we are likely to get another wave of investable software names. This time, though, with AI features and business model, but it feels like the software sort of peak that we saw a few years ago, that may be gone.
That's really interesting, especially the collide with some larger trends coming out of the AI space.
Yeah.
Deirdre, thanks. We appreciate it. Deirdre Bosa. Coming up, low employment and 2% inflation. Those are the two Fed priorities, but will rate cuts in an election year jeopardize the Fed's political independence? The delicate dance ahead for Powell and Company is next.
Let me look at Ford. I'm still in Boeing here. Might get even. Ford. Ford. Tesla Cybertruck gets so much media flack because all eyes are on it, says the journalist. The F-150 snow struggles got same attention. Oh, the F-150 had snow. Would explore if the F-150 snow struggles have got attention. What's this? I thought it was just the Cybertruck. Wow. The winter battery performance, and I figured that with EVs, on the Ford F-150 is not doing very well. I wonder if they could put a membrane around them batteries.
Athletics.com.
Welcome back to The Exchange. We're now 6 days out from the Iowa caucus, 9 days from a government shutdown deadline, and fewer than 300 from the general election. And while my next guest points out stocks in election years with the sitting president outperform open election years by 13 percentage points, 2024 is still off to a rough start. Here to discuss is Dan Clifton. He's Strategas Head of Policy Research. Dan, I don't know what happens when you mix election year with January barometer. What kind, I don't know if those two indicators can coexist.
Yeah, I don't know if they can coexist either, or even, an election year with earnings starting to slow. Those are things that we have to consider. But Kelly, I think this is very important. The S&P 500 has not declined in a presidential re-election year since 1940.
Yep.
So you're talking about 13 consecutive presidential election years in a row. And as you alluded to in your opening, there's a wide outperformance between re-election years and open election years. And what that tells us is that presidents have a lot of levers available to them to be able to influence the economy because, hey, they like getting reelected.
Sure.
And this president clearly wants to get reelected. You're likely going to see a lot of those tools get used this year.
And the tool that they used is, can anybody write it down in the room? China. No. It was the stimulus package. They're going to roll out a bunch of stuff that hasn't been spent yet in that so-called recovery, whatever $6 trillion that they've blown. That's going to keep, they haven't talked about it, but he just mentioned it. And he's right. He's 100% right. I've been through every one of them.
July and August.
Since
and then
Reagan.
To the races in September, and the market worries about something else. When the opponent loses, or when the opponent wins, you tend to get a big sell-off in September or October, as there's more uncertainty about a new president coming into office. What's going to be that person's tax policies or trade policies? But those tend to be temporary, and you do still get an increasing stock market on average, even when a challenger wins the election. So some of these are kind of more dips than anything else. But largely,
except during the
it is
Obama
about-
era.
It is about kind of navigating this, and as we get deeper into the election, it's going to have a bigger impact on sectors than the overall S&P 500.
And you're always so good at diving into that. So I don't know if my last question should be about those sectors, about the fact that you say the market often sells off around Super Tuesday, March 5th. Maybe that's something to keep an eye on. And the third prong of this would be, do we need to pay attention to this potential government shutdown, I guess, next Friday?
Nope.
Absolutely. So we're talking about a partial government shutdown next Friday, and I don't think it's going to have a big macro effect when we actually go through that partial government shutdown. But you can see the noise is really ramping up from Washington. You're going to have the Iowa caucuses on Monday and then a potential government shutdown on Friday. The market's going to have to digest a lot of these, what I would call political noise, and it's really ramping up, something that we didn't see in 2023. And why this is important is that once you start getting into the election, how the Fed is moving forward on monetary policy, how the Treasury is financing the deficit, those are going to be important factors about whether we're going to be able to digest a lot of this political news. But if you start to get liquidity being drained from the financial markets while you have those political news, there could be some rough roads.
Okay, I got to get out.
We teased the Fed. How does the Fed fit into all of this? And do we play the kind of second or third level chess where we say, well, they would cut, but they don't want to look like they're politically compromised, so they're going to be less likely and that sort of thing?
You know, Kelly, I tend to believe that the Fed will do what they have to do for the economy. And the real Fed funds rate is really starting to go up here because inflation's growing at 3. The Fed funds rate's at 5. The longer they go on without cutting, that means monetary policy is tightening. And they're confident that inflation is coming down. So I would anticipate that you are going to see some rate cuts in election year. We usually see rate cuts in election year. But I think the big variable that's changing here is the talk about ending quantitative tightening in 2024. As the reverse repos start to get drained and T-bills can't be used as much, the Fed is basically going to open up the capacity for the Treasury to issue more long-term debt. And the way to do that is by getting rid of quantitative tightening. So I would anticipate the baton being passed from the Treasury Secretary to the Fed Chairman, ensuring that financial conditions are still pretty loose here so that we don't have a recession in 2020.
That's super interesting, and obviously Lori Logan talked about that over the weekend, Dan, about her concerns that we need to wind down QE because of what she's hearing from banks and so forth. But so you think they might, in other words, if they're not saying they're going to restart quantitative easing, but if they just have to keep the balance sheet the same size, that make them a buyer of treasuries, that sort of helps with the debt, doesn't it?
It absolutely does. That's the big issue. We just got the December data last night for the budget deficit. Kelly, we're running a $2.1 trillion budget deficit with a 4% unemployment rate. The unemployment rate should be 8 at the level of the deficit that we're running right now. And so to be able to continually do that is going to be difficult. And you're going to need some of this sequencing between Treasury and the Fed. I tend to believe that recessions are caused by 3 factors: an inverted yield curve, a high real Fed funds rate, and low liquidity. Right now, we have an inverted yield curve. The Fed funds rate is starting to go up. So preserving that liquidity is really the key to being able to preserve that softish landing that everybody seems to be hoping for right now.
You heard it here first. That's how I always feel when we do our interviews, Dan. You do a great job of getting ahead of these things. Thanks for your time.
Thank you, Kelly.
Dan Clifton from Strategas, a Baird company. That's it for the exchange. Next on Power Lunch, we're going to talk about nat gas prices, which are snapping a 6-day win streak, but they're still on the high side. An energy investor tells us what's next for the sector and the names to buy now. Tyler's getting ready. I'll see you on the other side of this break.
Got a nice little hammer there. Let's see if we get the reversal. See, this is not the proper way to trade the snake on the 5-minute in a way, because we didn't break out of that channel. Now we did break out here and we pulled back, but we didn't hold the double bottom. So I've got a trend line, but we did break out. We got the snake breakout, pull back, and I've been in this trade way before this. So I'm still going to stay in here for a second, but right now we're very bearish. But this could be like a J hook. We didn't get a tweezer bottom. We got a nice little hammer, sledgehammer, and that's not good. I gotta take an aspirin. Boeing's giving me a headache. I'm going against my will. I'll tell you why I'm going against my will here. I'm getting psychologically psyched out for this. I was reading through some of these here writings on the F-150. It don't sound like they do very well in the wintertime at all. I've read it. It's not the first time I've heard it. I charged 80% of my truck and always plugging in at home. Just barely enough room in the garage for the Lightning. I'll never have to worry about range regardless of how cold it gets.
And welcome to Power Lunch alongside Kelly Evans. I'm Tyler.
I never recommend the Lightning for long distance driving.
A shareholder and a brand expert about what Dave Calhoun said and what he needs to do now to reassure customers and investors.
Plus, natural gas has been jumping up 10% to start the year as the United States becomes the biggest exporter of liquefied natural gas. We're looking at
Did you hear that,
ways to
Florence?
invest in this space. We'll also talk about the potential consumer hit. But first, let's get a check on the market. So Dow's up 77 points, about good for about 0.2%, while the S&P gains 17, and the Nasdaq is the leader today in a reversal of the trend we've seen so far year to date, adding about 0.6%. Also, in spite of Apple being hit with another downgrade, this time at Redburn Atlantic, they're cutting the stock to neutral from buy. Apple down 6% in the past month.
And from high tech to low tech, shares of WD-40, everybody's got a can of that, are soaring after reporting strong earnings and sales. And the CEO says he is negotiating with big retailers on price increases, and that would improve the company's margins. We begin, though, with the big interview in the last hour on CNBC, an exclusive with Boeing's CEO Dave Calhoun. Let's bring in Phil LeBeau now. Phil, what was your biggest takeaway from the conversation?
They realized the severity of the situation and the need to find out what happened. That may take some time, but to more importantly make sure it doesn't happen again. And part of that involves going back through the processes of manufacturing not only that specific plane for Alaska Airlines, but all of the 737 MAXs that the company builds, especially the MAX 9s, which are in question right now. So part of that.
This guy, we'll listen to what he's got to say, but I'm going to tell you something about this guy here.
Aero Systems was in town. Pat Shanahan, they have put together an internal safety.
He was wrong. And he didn't realize how severe it was. I mean, are you an idiot?
For all of the MAX 9s, and they're coordinating their efforts with the NTSB and the FAA. Here's Dave Calhoun talking with us last hour.
We're in a moment where we have nobody at risk, and our job is to understand literally everything that has happened, everything that surrounds that particular fuselage plug, and fix it, and make sure it can never happen again.
If I was CEO of this company, and he's afraid to say it, and I think like that guy said, he was hiding some of the stuff that he needed to say, it's just not the plug. They need to inspect the whole fleet and look for anything, not just the plug, but the whole fleet and everything on the plane. And then he would be right. Then he could say, but he did not. He said just the plug. And I don't think that was the correct thing to say.
Could be some movement on that relatively quickly. I say relatively quickly, maybe a few days. But for now, those planes remain grounded. Getting them back in the air is a key priority, not only for Boeing, but also for Alaska and United and the other airlines.
So
Guys,
Phil,
back to you.
So Phil, as I look at this, Boeing is obviously ultimately responsible for its jet, and they are taking responsibility for its jet. But it was Spirit Airlines that was responsible for the building of this fuselage.
Spirit Aero Systems, Tyler.
Spirit
That's
Aero
correct.
Systems. What did I say? Did I say Airlines?
Spirit Aero Systems.
I'm sorry.
You did, but go ahead.
I'm corrected. Spirit Aero Systems. They were the ones who manufactured the fuselage, including the door apparatus that was there, I assume.
Correct.
That was not assembled by Boeing. So isn't it Spirit Aero Systems' responsibility if there was indeed a manufacturing problem with that door insert?
Depends on what caused it, Tyler. And I'm not trying to dance around the answer here. We don't know if it was a manufacturing issue. We don't know if it was a production issue in terms of as it was going through the process before it was delivered to Alaska Airlines. So that's really the key. You need to know exactly what caused the plug to be ripped out of the airplane. Pat Shanahan, CEO of Spirit Aerosystems, spent many, many years here at Boeing. He knows Boeing well, Boeing knows him well, and he knows what Spirit needs to do.
Too much talk about this.
Answering all the
It
questions
ain't gonna bounce it. They keep talking about it.
This particular aircraft, as well as other questions about quality control at Spirit.
All right, forgive me again for mislabeling that
Yeah,
company.
you dummy.
Phil LeBeau, thank you.
Don't ever do that again.
For more reaction to what Boeing CEO Dave Calhoun said in his response to the incident and to the Alaska Air incident so far, let's get to a panel including Dean Crutchfield, CEO of Crutchfield Plus Partners, and Tony Bancroft is a portfolio manager at Gabelli Funds. Boeing is his third largest holding. Let me start with you, Tony, if I might. How material is this incident, so far as we know it today, to the Boeing stock price?
Thanks, Tyler. I think financially speaking, I think overall it's immaterial. How we look at it, probably on a per week basis, is probably going to be somewhere around $20 million a week on a concession basis.
And this is in liability that Boeing would have to pay to the airlines for the loss of use.
Yes, concessions wise. And then of course there's going to be probably inspection costs, which are essentially de minimis. So I think as long as this doesn't go play out, for months, talking multiple months, it's really going to be an immaterial impact to the financial.
So you still have confidence in your holding in Boeing, in its ability to...
You boom.
For sure. In the long term, I think Boeing's, first of all, I think it's a great company. I think they make great planes. They make safe
Nailed
planes.
Mara right
And,
to the penny.
All the secular and structural tailwinds.
Magnificent.
The
May I have a
industry
grade,
has.
please?
There's a lot going the right way.
Are you listening? Or is your wife cooking you some chicken soup? But I would rather give it to Mike. It's really Mike's call. So let's give Mike a big A+. Let's make him feel good.
Thank you very much. That's really nice. Thank you.
You're welcome. Well, where in the hell were you? Jimmy called it out. I need a new grader. China. Come on, Boeing. I need 40 more bucks to get even. Okay, nope. A lot of black dots going on here. Uh-oh. Oh, I was going to get an aspirin. Hope I don't got my days mixed up.
What have you, if they're not an EV maker, why is Boeing worth so much less now than it was 5 years ago?
So the stock, the company really trades on free cash flow as far as, and that really is driven by production rates. So they're still pretty far below what they were, producing pre the first mishap they were at most 52 planes, 737 Maxes a month, and now they're somewhere in the high 30s.
But is that enough to account for the company being worth $240 billion 4 years ago and only $140 billion today?
I mean, it's a big, the Max is a huge cash flow generator. They're talking, going to be obviously free cash flow positive this year, and talking, 10 billion plus. I wish they were negative for the longest time, just because of the incremental.
So do you think this aircraft and the problems with it have directly contributed?
Okay, we're
to
up
kind
to
of
200 right here.
hole? It's almost a liquidity hole and evaluation.
3 black crows.
If they can get things
out
back
of a
on
bull
track,
flag.
the evaluation could, the market cap, the whole worth of the company could really
For so much, it's a big operating leverage story, right? So when the factory's got a lot of overhead and there's not a lot of production, you're not getting any revenue, and you can't spread the costs across that. And then it works the other way. The pump works the other way. When production rates start getting back to historic rates, it becomes very profitable. And I think the long-term picture is we're going to see that, and it's essentially unconstrained demand, and that's why we hold it as one of our largest holdings in our DCAT ETF fund.
Dean, so I guess I'm sensing that you would give the company an A or an A plus in this case on how they've handled this, and so you would not see this incident as financially, really measurably detrimental to Boeing.
Get an A plus.
Well,
Who is this guy?
It's going to be the other commenters' points. They're obviously taking a hit, but they've got 40,000 aircraft to build, so they've got a book that's deep with orders. So there's a confidence in that delivery, but it's more about reputation and brand. So there's two strategies that Calhoun has ahead of him. One is obviously the brand, which you need to rebuild public trust. And number two is how do you build regulatory trust? Well, that's clearly linked to TQM. And their TQM is clearly wrong here, including quality control. It's a massive issue for them that they're obviously focused on. So those are their two approaches. I guarantee you that one of the most powerful ways for them to signal change, Calhoun said it, this must never happen again. So you need to show that, you need to do that, communicate it, but you also need to signal that. And your brand is the best vehicle to do it. So my bet is that they will be looking at launching an entirely new rebrand within 12 months.
A rebrand of the company, not of the aircraft that is at issue here.
A whole company, the aircraft, but the whole company, a rebrand of Boeing. And it's not just about a shiny new logo. We're talking about a major brand overhaul. It's a bit like cracking open your ribs and removing some organs, which does leave a scar. But they need to do that, and they are going to be doing that. So their best vehicles is, yes, TQM, bang it, say it loudly, what are you doing with that? But also, what are you going to do with your brand? But to do a major rebrand with Boeing, with the branding, the implementation, advertising, PR, marketing, employee comms, you could be looking at a price of over $70 million in 12 months.
So we had 3 black crows with a hammer.
Like a very vivid metaphor there.
Off the 200 SMA.
What do you think of that? Do they need to rebrand?
We got to break the
company
9
in that way? You feel?
and go to the 50.
Yeah, obviously, Mr. Crutchfield's the expert on that, but I'd say on the operational and quality control side,
and then you get out of the trade.
When I flew F-18s in the Marine Corps,
Yeah.
we always would say that every pilot everyone in the squadron is a safety officer. Everyone deals with quality control, and it's a marathon. It's paramount, and I'm 100% confident that CEO Calhoun is fully aware of that, and I'm sure this is going to be his lasting legacy to get this thing on track. And
I flew F-18s in the Marine Corps.
Wow. Do you still fly?
No, I don't. No, well, a lot of golf now. Not too many kids.
Yeah. Well, thank you very much for being with us today and sharing your insights. Tony Bancroft and Dean Crutchfield, thank you as well. Good to see you both.
Coming up, a major breach to the SEC. As you've probably heard by now, the regulator's Twitter or X account was compromised, nearly leading to serious repercussions for the crypto industry. We'll get all the details next. Plus, we've already seen some bad news break one key market name in the case of Boeing. Which could we expect to break out in the weeks ahead? We will get technical support when Power Lunch returns.
Oh, shit. What's going on here? Jim. God damn it. Dadgummit, I mean. Oh. Oh, you dummy. That's what happens when you take your eye off the ball. Just for a minute. Not yet, that I know of. Oh, I don't think they leaked the CPI out. Key inflation data. Explosive Thursday, the SPY consolidate. That's just crazy. I got to pay attention when I'm
50% off.
Welcome back. The Securities and Exchange Commission itself is reeling from a major breach. The regulator was forced to retract a false social media post which claimed they had approved the Bitcoin ETF for trading last night. Eamon Jabbers has more for us. Eamon?
Kelly, well, we got some information about the hack of the SEC's Twitter, now X account last night from a posting by X's security team. Remember that in the 4 p.m. hour yesterday, the SEC's official account published a statement suggesting that a Bitcoin ETF had, as you say, been approved. That triggered Bitcoin prices, but within moments, the SEC said it was not true and their account had been compromised. Now, overnight, X posted a statement saying the compromise was not due to any breach of X's systems, but rather due to an unidentified individual obtaining control over a phone number associated with the SEC Gov account through a third party. X also said that the SEC account did not have two-factor authentication enabled at the time of the hack. Now, that's a standard extra layer of
J.G. Wentworth, cash now?
It's your money. Use it when you need it.
J.G. Wentworth is right. It's my money and I need it now.
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 If you have a structured settlement and you need cash now, J.G. Wentworth can help.
Dial James Howard, 800-553-5353.
Bills that have piled up as a result of an injury or an inability to...
I know the phone's going to start ringing any moment.
Had.
Yeah, well, I mean, to be fair, I don't think anybody at the SEC ever sits around saying "screw you guys" to anybody. That's officially.
Yes, they do. They screwed my friend Zach.
You know, there's a real question about whether this cage rattling that happened yesterday is going to delay the Bitcoin ETF, spot ETF, which everybody has been expecting to come any moment now. The question is, why would it, though, right? I mean, if you were the SEC, you've kind of made the decision, you've run the traps on it, you're ready to go. Why really would a
I'm
Twitter
about ready to
mishap
get filthy
like
rich.
Impact your decision?
Now, you know, I'm very bearish on Boeing, but we've consolidated. Now I'm even. So we had the big crash, and this is 1 2 bits, and third day. So this is my 3-day rule. And I felt like I could finally trade this thing. And right now I'm even, after all that sweat and tear. I need my money and I need it now. I'd be happy to get 20 bucks. But we're at the 200. So that is a resistance level. And I got to make a business decision. I'll sell it. That was very unprofessional, James. Don't ever do that again. So let's go through my watch list. It is now time for the fat cats. Well, it's actually later than the fat cat time. Let's see what the percentage loser is. AMC is definitely turned bearish. Citibank is down, so let's find a support for Citibank into earnings. Let me find a chart here. I don't know where these are. Which one is it? Is it that one? Dadgummit. Almost there. And actually I should raise it up. We hit it. Dadgummit. Right there. See it? Right to the penny. This is day 3. We got Thursday and Friday before the earnings come out. BAC, we did break below support. Hey, look, guy said he'd buy BAC on a pullback. And then you got JP Morgan, which is going to break out. And we did pull back to support the 200 EMA. This is day 4, so it'll probably reverse. Oh, here's
with our 10-year auction today. There's an intraday chart.
10-year auction, Sue.
See volatility, but we continue to move higher, even though it was an average, not much of a below-average auction. But if you look at a 2-day, you get a lot more clues. The 2-day shows that for a good chunk of the early trade, we're under yesterday's lows across the entire Treasury curve. But that reversed, and all yields are actually now higher on the day. And maybe the biggest story is how hot all the European debt is right now, and how all the patterns of 10-year are very, very similar. Let's look at a 6-month chart of 10s in the U.S. Now hold that image. Now let's go to the German Bund, the standard of the Eurozone. Now let's go to the Spanish 10s, and now let's go to the UK 10s. You see how all those patterns are almost identical on the way down. Now on the way up to some of those historic high yields of the fall, the path might have been a bit different. But then all of a sudden, what we see is central banks, ours leading the way, are supposedly going to be aggressively easing this year. And that has fueled an appetite, despite the fact that we're probably going to be over $2 trillion in sovereign debt issuance this year between the U.S. and Europe and maybe Japan. So it's a very interesting development going on as we continue to monitor. Why is this important? Because if the calculations are wrong and inflation pops up a little bit in the future, or our central bank isn't as aggressive as many suspect, we could really see the rug pulled out from under some of this investor craze in Europe going on. The Spanish auction had a bid to cover 3 times stronger than our average bid to cover for U.S. 10s. Kelly, back to you.
All right, Rick, thank you. Busy day here, Rick Santelli. Let's get to Bertha Coombs now for the CNBC News Update. Bertha.
Kelly, President Biden and House Speaker Mike Johnson held a phone call today to discuss border security. According to Johnson's office, the speaker asked the president to use his executive authority to secure the southern border. The phone call comes as some House Republicans threaten a government shutdown if Biden and congressional Democrats do not agree on tougher border policies. And as southeastern Connecticut City ordered hundreds of people to evacuate and declared a local state of emergency following a partial dam break today.
Hello, this is Retail Traders. May I help you? Jack, you think I'm going to shut that border down? You're full of it. I got a whole new plan here. We're creating a new welfare system that's going to vote Democrat. So don't be pressing me on these goddamn walls. What are you getting in my way, man? I ain't going to close no border. In fact, I'm going to open up the sea. I'm going to open up the Canadian border. And you people in Oregon, you're going to have a fluctuation of a whole bunch of the things in Ecuador. You know, the cartel, they're taking order down here, and they're busting, going through all this. Leave me alone, Jack. Well, Mr. Biden? My name ain't Biden. It's Jack. Break it. We're going to break the 200 here on Boeing. Now, you people on YouTube as my witness, I'm going against my spirits. Like it. It's called the 3-day rule. Sometimes after earnings, when you have a knife, count to 3 and you can trade with me. But this is not a very, there we go. We're at 385. I can almost pay for my trade now.
Welcome back to Power Lunch. Natural gas might be giving up some gains today, but it's still up 17% in just the past month. And it comes as the U.S. is now the biggest world exporter of LNG. Pippa Stevens here too.
OMG.
Yeah, OMG for LNG, because last year the U.S. actually overtook Australia and Qatar to become the largest global LNG exporter. In 2023, exports rose to 86.15 million metric tons, according to data from Kepler. That was up 13% from 2022's levels and made up about 21% of global LNG exports. The majority, about 65%, is going to Europe after the EU moved away from Russian gas. Asia and Latin America received 27% and 7% of U.S. LNG, respectively. Now, there are currently 7 LNG plants in the U.S., with more under construction. The EIA forecasts that total exports from North America will double by 2027, which has led some to say that we will simply have too much. Still, there are a host of companies looking to take advantage of this growing market. That's everything from the upstream gas producers like Chesapeake and EQT to the companies that own the pipelines that transport the gas to LNG plants, including Williams and Kinder Morgan. And then finally, the companies, of course, themselves that own the liquefaction plant like Cheniere and Sempra. And this is really kind of astonishing because we only started exporting in 2016. So we rose to the top spot in a very fast amount of time.
Crazy. 7 years. I remember when they had to turn the LNG plants around.
Exactly, that was Cheniere. Yep, yeah. Exactly.
China.
Initially it was going to be an import facility, and then they changed it around to exports.
Wild. All right, Pippa, stay with us as we follow also a potential mega merger in the nat gas space that could come together as soon as this week. Chesapeake and Southwestern are reportedly close to a deal, would create a $17 billion company, and it would make them the largest nat gas producer, overtaking EQT.
CHK. Man, look at that thing fly.
Trends more broadly. Got to talk to Bill.
Wow.
He's CEO and head trader at Skylar Capital Management. Bill, welcome to you. I guess first of all, let me just kind of almost put this from the consumer point of view. Anything to worry about here in terms of prices?
Well, when there's a cold shot, in natural gas we have a lot of shale drilling now, which tends to have more freeze-offs, these newer wells. And so when it's extremely cold, we tend to lose supply. But the system is generally robust.
Oh, I didn't know.
Stocks are full.
They must have had a split or something.
Storage is salt dome storage, that readily available storage is available. So we'll definitely meet the demand unless we have kind of these Uri events or these like pigs that used to come down. We don't see that. We see
I always thought it was a lot cheaper than that.
Intermittent period, like maybe a week, but everybody should be fine.
Northeast, are they going to be fine? How are we going to fix this?
North, west, north.
It's going to take a lot more
west, northwest.
incentive or maybe even regulation to get the producers to winterize. They just don't see the value in putting in the equipment for the one-off freeze. Generally, higher prices are good for them for the production that they do have, and so I think it's a matter of aligning incentives with the producers and getting the production. But by and large, there's so much production in the Northeast and so much storage that you generally don't have a problem, and it's very much a tail event type thing.
You know, unlike the oil market,
we missed a good trade here.
Been very regionally focused.
Earnings are like
is there any worry that with
9x
the surge in LNG that does open up U.S. Henry Hub prices to either higher prices or even just more volatility given all this new avenue for demand?
Yeah, definitely looking forward. I mean, right now, whatever we can export, we're at capacity. So essentially, it doesn't really matter what's going on internationally. It's just gas goes. They drill the gas, they ship it out. There's no room for exporting more LNG. We're about to double our export capacity, which means that the U.S.
Come on, man, can't you wear a better shirt than that?
International
Bill.
prices might crash because we're shipping so much gas out. That remains to be seen, but we're about to be part of the global volatility, not just domestic volatility.
What do you think of the possible merger of Southwestern and Chesapeake?
I think it's brilliant. If you look at the distribution of their assets, they're both big in the Marcellus in the Northeast and the Haynesville. And the Haynesville those two areas are regions of growth. The Haynesville is one of the areas where you want to be growing if you're looking forward towards LNG exports. If you look at their rig counts, their frac crews, they're very similar. And so you can have rig efficiency and drilling efficiency, but you can also have operational efficiency. So a merger makes a lot of sense for these two companies.
Where is Haynesville? I'm not familiar.
So that's in Louisiana. There's Haynesville, Texas, and Haynesville, Louisiana. It's very close to Henry Hub, very close to the export facilities and the pipeline infrastructure to get the gas out. And so, becoming a behemoth, getting those efficiencies in operations with crews, debt, etc., is really a smart play.
Is there anything that would stand in its way, Bill? Anything regulatorily or anything like that?
I mean, wow, you're asking me to play politics, and I don't understand some of the regulators, and I suppose
I'll make it simple. They don't want any deals to happen. So
yeah, they don't.
Especially in the natural gas space, where you could be talking about higher bills for consumers. You know, it seems like they might come a calling.
Yeah, well, I think it's counterintuitive. I don't think they're predatory. I think that as they become more efficient and they lower the cost of production, that results in lower prices. We're about to get linked up to the world, and world prices are much higher with the export.
Hey, Bill, I got a secret. America has drilled more oil now than ever. Don't tell the liberals that.
People that are used to paying $10, $20 per MMBtu for gas, when we have kind of the cheapest gas on the planet, except Qatar and Trinidad. And so, you know, that is not going to be a result of this merger. This merger is actually going to create economies of scale that allow them to produce cheaper. And so I hope regulators don't get in the way, but, you know.
Yeah. And on that regulatory front, we did get reports that the Biden administration might start cracking down on some of these LNG permits, the permits for the facilities. The White House did say they have no comment on those reports, but obviously the environmental groups
I'm looking at it right now.
Surge in LNG and adding even more terminals.
Did you get in?
Do you expect LNG to become a battleground of sorts topic during the 2024 election?
Well, I think that we have enough facilities already permitted or under construction that significantly expand our lead as the #1 producer. I think newer facilities, let's face it, the ones that are building, they don't want more competition. So they're also against it behind the scenes. The environmentalists don't like it. They would like a faster transition to renewables. And so you have a lot of people that are not necessarily as welcoming. And it's a lot easier for them to lean on regulators.
We're at the VWAP.
Another to say, this isn't necessary. Why do we have to have another LNG export plant? It remains to be seen what the administration will do and what their view is, but the current administration tends to lean to less infrastructure if it's associated with oil and gas.
Indeed. Bill, thank you so much. We appreciate your time today. Good to have you. And Pippa, thank you as well.
I'm going to show a secret here on the RSI crossover.
Ace the interview. CNBC Make It launching courses for job seekers looking to boost their...
So we got the RSI. We pulled back right here. Now if this thing gets down here for the second time, and we keep it a little bit above this line right now, it's called the second dip, and you want to keep a higher low. January 12th, strike 550, 315 at 2 calls. That's called a falling wedge off the VWAP. Got to be careful here, though. Watch the tape in the level 2. Is that what he said? Could I have that in writing, please? Because it ain't done it. We're retesting the wedge support. Oh no, stop right there. If it doesn't hold here, I'm going to get out. Hike. Time for a chip and salsa. Oh, having a round table session here. Is that Miss Smiley? No.
A little nervous again and needs to make sure that they have their ducks in a row.
Yeah, so 2 years
Nope,
ago, it was
not
a lot
Miss Smiley.
easier to get a job than
Dead
it is
gummit.
now. But the job market has been pretty resilient. There's still more open jobs, and there are people searching for jobs. So it is still a good time to find a job. And the pandemic has made people realize that they can look for the things they want as opposed to necessarily having to settle for just whatever job is offered.
Miss Smiley wasn't too smiley this morning.
A third of people who are considering quitting their jobs, they're looking for more meaningful work, better pay, and for more say over how they do their work.
How much of the job interview process now is online via Zoom or Teams as opposed to in person? And are there different tactic strategies that you would find out about in this course for the online interview as opposed to the in-person interview? In other words, is it different qualitatively?
You know what? It is a little bit different. The things that you're saying, the things that you're talking about are the same, but the way that you set yourself up, the way that you come into the interview, you know, in the course we talk about being prepared for an in-person interview that looks like making sure you're on time by looking at how long it's going to take to get there. For virtual interview, it's making sure your internet connection works, and making sure your background looks okay.
How many people have had this happen to them? Making sure your Zoom is updated. How many,
Yes.
I don't know if you go on, you're 2 minutes late already to it. Well, maybe not for an interview. Okay, you're 5 minutes early, but all of a sudden your computer, it's doing the automatic reload. Little things like that.
Exactly. So making sure that everything's up to date, that you're not going to have people walking in and out of the background, making sure you're
Kelly.
sort of like...
So what's interesting to me is here, if you were doing an online interview, a lot of people are not terribly comfortable with the idea of being on camera. And they'll look up in the sky, and they won't be looking around, or they're down. And so I suppose you could do that in a job interview face-to-face as well. But there are certain skills that you would need.
What are you hiding there, buddy?
Camera interview, they're different.
Yeah, definitely. And the course actually goes into that about how to set up your camera, making sure it's at eye level, you know, and even talking about if you feel really uncomfortable on video, making a video of yourself talking about some of those like common interview questions so that you can go over it, see where you're stumbling, see where you're not looking straight at the camera, that sort of thing.
The other difference
You got a
between the
doji?
in-person interview and the online interview, you got to wear pants to the in-person.
And a dragonfly doji.
Wear pants to any interview.
In case the camera slips.
No skinny ones.
Just in case. Yeah. What are you wearing? Yeah. Okay. Anna, thank you so much. What is the course again? CNBCMakeIt.com.
CNBCMakeIt.com/courses.
And you'll find everything you need to know about acing your next job interview.
I think you can do it right now, too. Still ahead, we'll get some technical support with our chartist to highlight 3 stocks he has the potential to pop higher. Power Lunch is back in 2.
Been a long time. Got a last couple trades I've had to wait and play out. Break it. You still in, Linzoid? They what? She said, yeah. Gotta know when to hold them. Uh-oh, he started singing again. It's hard to break a habit. Real hard to break a habit. It takes 28 times to break a habit. It takes 28 times to make a habit. We got the 200 coming up to be our first resistance. I have one more. They said this stuff was mild. It don't taste too mild to me.
Else today.
All right, welcome back to Power Lunch, everybody. Time now for some technical support. We've got 3 stocks making some technical moves that we want to bring into focus. Our chartist today is Jay Woods, Freedom Capital Markets Chief Global Strategist. Jay, welcome back. Good to have you with us. Happy New Year. Let's go to NVIDIA. Shares up about 2%. You say this stock is one that is in a breakout.
Oh, this is a technician's dream. Let's look at it over the last year. We had a great big gap on a breakout earnings, and then we trended higher.
Would somebody bring out the national anthem? I think they actually posted in a chart. This is unbelievable.
What has it done? It has gone sideways. It's done nothing for almost 8 months. And then finally, this week, it broke out. If you think about how the market rallied and that broadening happened the last 2 months of the year, NVIDIA didn't do it. NVIDIA kind of went sideways. It just broke above 500 with some serious gusto. This stock has a leg to go much higher. 550, you could stall 560, but
he doesn't get it.
The path for NVIDIA is fantastic. You had in the Consumer Electronics Show, and then positive earnings.
I'll tell you why I'd say it consolidated.
20-30%.
He didn't bring it up, but I will. You see his gap?
Let's go to JP Morgan, top U.S.
I'll tell you about gap.
We'll release fourth quarter financials.
Okay, we're at 355.
Important to know that it is an earnings play.
We're at the
and I don't
200.
play these things in earnings, but
It's time to make a business decision. What are we going to do? I'm going to sell.
All-time highs before its earnings.
They're talking about
We had a
NVIDIA.
nice little sell-off here. 2022, 2023, we made the roundabout. Little cup and handle. We like cup and handles.
God, this
And
guy's
then a
talking
breakout.
charts.
This is set up, if it does pull back during earnings, to buy the stock, to add to the name. You want to see this 160 level act as support if it continues to pull back. It would be a great entry point, and then set up from a risk-reward point of view. If it doesn't hold, if it fails to hold that 50-day moving average right in here, get out and look at it again. But this has been the cream of the crop, and now it has a tailwind of the Fed easing. This setup is perfect. I love it going into earnings. If you get a pullback, time to buy.
Time to buy more. All right, let's go to United Health. It too set to report on Friday its earnings. Highest weighted in the Dow because of its price, also the most expensive. It's price weighted. Jay, what are you watching on this?
Yeah, and a fun fact with its earnings, it's never missed. So they're going to beat, but here's what you want to see. Kind of reminds me of the first stock we looked at, NVIDIA. At least from a price pattern, we had a nice long uptrend. This is 3-year base. This is 3-year chart with a 2-year base. The stock has been going nowhere, stalling at 550 consistently. But what has happened now, let's just back this out recently. We're making higher lows. We want to see those higher lows. That's constructive. We have been testing 550. We keep knocking on that door.
Yeah, you can see that, man. That's really vivid. There's a low, there's a low, there's a low.
Yeah.
But here's a higher one.
Yeah, it's kind of a hot mess, but it's been a nice trading stock for those that like to trade in these channels. But what I see now is it has potential to pop.
Well,
so I
this
would
guy
chase this
doesn't know what he's talking about.
outside of above 550 going into
Oh, that's
earnings.
NVIDIA.
And then you know your risk reward. Your setup is if it doesn't hold this 550 level, comes back in, get out. It was worth the shot. But the upward momentum is there if it follows through. And guess what the leading sector is so far this year?
Yeah, healthcare. Yeah.
So
Jay
let's
Woods.
see if UNH can continue.
Jay Woods, a hot mess. Not you, but
He's right.
UNH. Good to have you here, man. Jay Woods.
Thank you both. Coming up, AI is taking over CES. The cutting-edge technology has fingerprints all over one of the world's biggest trade shows. We will go live to Vegas for the latest and a live report when this hot mess returns.
Okay. Whoops.
For the latest.
United Health. This is called, like you said, it's been consolidating in a Darvis. He didn't say Darvis box, but it's been consolidating for 1.5 years to 1 3/4 years, almost 2 years. So when you're looking at a Darvis box and want to look for resistance and looking for the breakout, he was 100% right. Here, let's do this. But I'm going to question him on another trade here. So this is a big, long Darvis box. In every Darvis box, there's a pivot point. In every chart, there's a pivot point. And the pivot point's right about in here. See where it come down right there? And watch this. We'll take that previous high, move that across, bring this down. Right in the middle, you got resistance, support, resistance, resistance, resistance. Now he's talking about the higher lows. So when you leave out of a Darvis box, kind of like what you did here, this would have been a triple top. And it didn't break out. So it failed that time. The higher lows failed. It created a little flag. Now here, you're looking at a different story. You got your higher lows and you got your higher highs. So 1, 2, 3, and it'll come up here 1, 2, 3. And if it doesn't break this resistance at 5, 5, 8, 10, we'll continue trading in this range. Now this is a $100 range. So right now we're bullish. But the pivot point would have been the test area. Once we broke it, boom, it started creating a new one with the higher lows and the higher highs. That's the Darvis box. And then he talked about NVIDIA. Now he failed to say, if you look at the yearly time frame, you have a gap. You have a huge, not small, $100 gap. $100. That's huge. That's bigly. So it's got to consolidate that $100. That's why we went sideways for almost 8 months, and they were calling this thing out to go to 650 back here, and I said, it ain't going to happen. It ain't going to happen. It's not going to happen. And then you got a new year. Just like having a new week. You have a real bad week, and then we come in here and the market bounces. It's like erasing last week's chalkboard, and starting fresh. 5-day rule, 4-day rule sell-off. We had the holiday on Monday. So you got a Darvis box all the way across. If he would have mentioned the reason for the consolidation, it was because of this huge gap up, which was $100, $78. And I knew when something gaps up that high, it's overbought. So we called the range on it right around 400. And every time I said it hit 400, you had 4 nice bounces up to about $500. Then you got your higher lows again. So that's a 8-month Darvis box. Then you can see the higher lows, and you got the triple top, 1 bis, 2 bis, and a freebie, and then finally the new year came, and it was a brand new year, and they finally got their wish because we've consolidated 8 months off that huge gap up. Learn how to take them gap trades. And then the last one's JP Morgan. Now, JP Morgan was an easy bottom call. I called the banks perfect. This was a candlestick pattern. I was lucky to call it right then. So we had an inside harmonic candle right here. And when I saw that big old downturn and then that candle show up right there, that was probably one of the bullish patterns you could ever see. And it was just day after 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 day. Now we're consolidating into earnings. This is the best bank out there, number one. Top bank, number one, JP Dimon. Jamie Dimon. Everybody looks at Jamie Dimon like he's the best banker out there. He's worth hundreds of millions of dollars just in stock options. To me, I think we're overbought. But we needed to consolidate something in here. This was right after the interest rates, right after Powell gave the okay. We bounced off the 200, and we called that. You go back into 324. Well, we called this for sure. I don't remember calling the banks down here, but I probably did. But if you look at all of them right then, this was back on 1030. When you type in C, right back on 1030. You type in Bank of America. I was screaming, these things are cheap. $10.30. $10.30. We had an expansion, or we had a snake. I don't know what kind of pattern that is. That's the, I don't know what I'd call that. I'd definitely call it a triple top break. But I don't know, I just never found a pattern name for that. If anybody can tell me what it is, type it in YouTube or I just can't figure out what kind of pattern that is. I see them a lot, but I just don't know what it is. It's like an upside down, I don't know. It's definitely a pivot point. But this has been so hyped. Now they've got not Citibank, but JP Morgan. Here, I want to see if anybody can tell me what kind of pattern this is. I'll ask on you. Anybody in the room know? No, it's not a blowhorn. It's got the horizontal line. Oh, here's old chubby Joshy.
Week high or an all-time high.
Hey, this was your contrarian call on halftime as we
and it's still
rolled those out from the committee. It's time to look a little bit elsewhere, even though there are concerns on the macro globally of, you know, Europe in recession, or certain economies in Europe in recession. China, you just mentioned, which has had, you know, 1 step forward and 2 steps back in their recovery.
The narrative is the narrative, but then look at price. Why is the FTSE, why is the United Kingdom breaking out to record highs? Why is the CAC 40? Why is the DAX? And I'm not showing off that I know the names of these exchanges. They're really moving higher pretty much across the board. Again, other than China, the Nikkei's at 33-year high.
Why is this? Don't fight central banks. Isn't that the answer?
Well, no, these are all, but it's where they came from. These stocks have done nothing in so long.
Yeah, but that's got to be part of the story too, is the idea that you've made the turn, so to speak, and now you've had 9 holes in a...
This is why I like Josh. He looks at stocks that are cheap. And you don't buy, except for Uber.
Under this false assumption, again, that rate cuts were necessary, and if moderate rates are good, lower rates are better, and if lower rates
But
are
he's
good,
made that
take
back.
them to zero, and if zero is great, go negative. That's actually not the case. It turns out, in Europe, they get more bullish when there's a nominally positive rate. When there's an actual interest rate,
This guy's really been throwing a fit here lately.
the economic situation, and I think that's being reflected in all of these country markets around the world. Even Japan has a nominally positive bond yield. It's a miracle. So again, back to my original premise. Yes, rate cuts maybe will be helpful if they're not emergency rate cuts. They're just not the fulcrum of the story. They're not the most important thing.
That's
the
right.
most important thing is that the S&P 500 companies are phenomenal at passing along higher costs to the consumer, and as a result, we have found earnings growth in a place where originally the consensus predicted a recession. It's a nice place to be.
All right, let's bring in Liz Young of SoFi, the head
I
of
need
investment
to take a
strategy.
drink of water. That's what I do.
You were on a roll.
Liz, what do you got?
You breathe, and we'll let Liz talk. All right, what do you make of what this guy has to say?
Well, I guess I'll start at the beginning. I don't know how much time we have here. I'll start at the beginning.
We got time.
Obviously, we had this big year-end rally. It sort of conked out. It didn't necessarily turn in the other direction. It conked out. So then investors have questions to ask themselves. You guys talked about the NASDAQ. Does that have more strength to come? I look at things like cyclicality. What kind of signals is the market sending about cyclicality? And we've got a couple charts back there in the control room, if you can pull them up, looking at things like transports versus utilities and things like discretionary versus staples. What you saw from the end of October through about the end of December is that cyclicality was alive and well, and the market really believed that things were going well from a cyclical perspective. Right when the rally conked out, you saw those cyclical sectors roll over, and suddenly the message is not as clear. And then there's another chart we can show of copper versus gold. This is a pretty clear signal as well. You see cyclicality expanding, it rolls over, things are not as clear. So here we are, sitting very near all-time highs in the S&P, which we've knocked on a few times.
We are, by the way, 47.96, okay? Yep. 47.96 is the all-time closing high on the S&P. We're not that far away at all.
Can't get across it. That's the thing. And the market is sitting there wondering, should we be higher than we were back in January of 2022? So far, we don't have a clear answer on that. The Russell 2000 is another indicator of this. If you take a Russell 2000 chart out a year, so a trailing one-year basis, you see it get to about the same level 3 or 4 times, about 2000, 2050, and it fails every single time.
Josh says
right around where we are right now.
Right, we said it's like earnings.
When the hell
is
we're
going to
sticking
be
like this?
that catalyst,
Yeah.
assuming that they get off to a good start. Do you agree with that when the banks start reporting on Friday?
Well, what's interesting is that all of the cyclical indicators that I just talked about are showing weakness, except for the banks. The banks have held in there. So I think this bank earnings season is going to be a tell for whether or not
we broke my resistance.
That we are in fact going to do okay in the first and second quarter.
You don't sound that bullish, though. Am I wrong?
I mean, I still don't think that this ends any differently than it has in the past. I still think we need a contraction, and the
A
sequence
recession,
of,
you mean?
I'm going to call it a contraction. I mean, it might be a recession. I think people get scared of the word recession as if you were calling for some kind of catastrophe, right? Recessions are healthy. I'll call it a contraction, a pullback, a cooling. I still think that that has to happen, and the sequence of events so far is intact in the sense that the market falls first, then you have an earnings recession, then you have an economic cooling. We
Earnings
haven't
recession.
seen the economic cooling yet that I think is still to come this year. The big question is, how far down does it go? Does it surprise the market and go down further than right now what is priced in?
This is maybe the great wait that never happens. I mean,
I'm in the opposite. I mean, I hate to disagree so much with Liz, so now I'm actually getting nervous. I'm in the absolute other side. I think the danger is we overheat, and the Fed has to reintroduce tightening. That's what I honestly think that's where we're headed. So it doesn't mean that we don't end up in the same place that you're saying.
Yep.
It's just maybe for a different reason. For example, a lot of the people who have been bearish, they would have thought by now the banks would be reporting these big losses and they'd be building their loan loss reserves. We're going to find out in 2 days if that's this quarter, and I don't think it is.
No.
Nobody has made any noises about it, leading up to these reports.
Like I said, and wait for these idiots, last year, the first day of earnings is going to dictate the banks. Is going to dictate the breakout. And we're only 2 days away from it. And we're at all-time high on the SPX. The Fed doesn't mean crap right now. And they hiked in the Fed they've already hiked it in 6 rate cuts. So they were wrong about that. They realize it. And we needed just a little pullback, and it was tax purposes, I think, mainly. And we needed a week. We just needed a small pullback, and that's probably all we need.
See it nano, but if that becomes a trend, and the Fed not only stops talking about rate cuts, but maybe even introduces the idea of, every meeting's a live meeting, and we could actually tighten if we need to. Like, if that rhetoric starts again, that's not priced in the market. You will absolutely be down 5%.
They're saying that. They don't even have to reintroduce it. They already try to say that, just nobody listens.
Nobody believes it.
oh, hang on real quick, you guys. I'm sorry to cut you off here. I'll get back to Liz, I promise.
How rude.
Speaking of the Fed, we do have some breaking headlines now from New York Fed President John Williams, who is speaking as we speak. Steve,
Get ready, Mike.
Our senior economics reporter has the comments for us. Steve?
Yeah, Scott, New York Fed President John Williams saying he expects the Fed to maintain a restrictive policy stance, quote, for some time. He says the Fed can reduce this policy restraint when they're confident inflation is moving back to the 2% target. On quantitative tightening, the unwinding of the Fed's balance sheet, he says the Fed is not yet close to the point where it should begin reducing QT. He sees inflation slowing to 2.25%, reaching target in 2025.
Damn
He's
charts.
optimistic there on the inflation front, and he does see two-sided risks on inflation, both the risk of it remaining stubborn, as Josh was just saying, versus the risk of a weaker than expected economy. He says the inflation situation has, quote, improved significantly, and is beginning to see significant progress in the core services inflation, as well as the core services ex-housing, which he says has slowed considerably. That's the metric that is watched carefully by Fed Chair Jay Powell. He says indicators of inflation expectations have been quite encouraging, and wage inflation has also come into better balance. If you're seeing a trend here, I'll get back to it in just a second. Still has a ways to go. He says to get inflation back to target.
4780 put.
Current unemployment rate prevailing over the long run. That is the current 3.7% unemployment rate, which is quite striking, though he does see going up to 4% this year. The labor market, he says, is going to better balance, and job growth has slowed considerably. He expects growth of just 1.25% this year, and the unemployment rate to rise to 4%.
Go, baby, go.
I'll leave it there, but what's remarkable to me about these remarks is he's saying all the things that he's looking at are going in their direction in terms of inflation, the job market, the economy slowing, but he's not giving you anything in terms of the Fed's outlook for cutting rates this year. He even sees reaching target by 2025, just 2.25% inflation this year, but doesn't really say anything about reducing rates.
He talks about the need to, he used the word, I believe you said, confirm that inflation is moving down to target. So what does that mean in Fed speaker speak? How many more CPI reports, for example, do these folks need to see until they can be confident that it is confirmed that inflation is moving towards target?
Yeah, the word I think is confident, Scott. I think is the word that he has used, and others as well. And I don't know. I mean, we'll see. I think it's interesting. Josh introduces some risk to tomorrow's CPI report. I don't think that's wrong in that the market has priced itself very one-sided for inflation to be coming down in a straight line. We know the data don't behave that way. I do think there's some possibility of a downside surprise tomorrow because I'm thinking that finally the housing component starts to come down.
I'm just shorting it on the Fed news.
Especially because we've got some new data that shows
Okay.
rents have been declining.
We're at support,
as well.
exit
So
idea.
We'll see if that's incorporated to the CPI.
I'm gonna scale out.
There's risk of an upside surprise somewhere along the way, and I think the only answer I can give you, Scott, is that it's got to take several months of the inflation being down, coming
It might
down,
drop more.
heading towards target, where they can say, you know what?
Come on.
If we were to cut rates here, we would not be making a mistake and have to make what I think they believe is a worse outcome, which is to have to reverse course and hike again.
All right, well, we've got a few CPIs before March, right? I mean, we're going to get the reads that maybe tell the story that moves the needle to the point where, you know, it plays the record that people want to hear. Steve, thank you very much. That's Steve Leisman, our senior economics reporter, joining us with that breaking news on John Williams, New York Fed president. Liz Young, forgive me for cutting you off earlier.
All good.
What do you want to react to that? Do you want to finish what you're talking about before?
I mean, we were talking about the Fed, so let's just stay there. I don't think that we're going to get all the cuts that people have expected.
Exactly.
This year. And a lot of that is the reason why. There hasn't been weak economic data yet. So I think the risk here is more so that we're going to declare premature victory. Maybe
Be careful,
investors
Mike.
are going to declare premature victory and say, okay, we have secured a soft landing. We have beaten
We could
inflation.
probably hit the 200.
The Fed isn't quite on board yet, but we believe that they will get there because the market will force them into it, right? And then we get to a point where maybe the shelter component of CPI is coming down, but mortgage rates are also coming down, and everybody that's been sitting on the sidelines waiting to buy a house while the housing market has been frozen jumps back in, and then suddenly that shelter CPI component is going to go back up, right? And then we overheat, to Josh's points, which is why I think we're actually saying the same thing. And
Damn it,
the secret
270,
of events
310.
where we haven't gotten the economic cooling yet, the contraction, the lagged effects that haven't
Button.
shown their ugly head entirely. That's where you don't want to declare victory before that plays itself.
I feel like the risk, though, is that the nervous sit on their hands for too long, you know, obsessed with, well, the lag effects and how many cuts
Okay.
there will be. When
I've
the
had
most
enough of
important
you.
thing is that the Fed's done hiking. That's the sort of the baseline. idea is that
Unbelievable.
They're done hiking. All right, so they don't cut 6, but their next move is likely. I think we can make a bet.
You're right.
It's probably a cut.
You're right. This is horseshoes and hand grenades. This is not precision. We're trying to get close, right? Directionally, we're trying to understand what's going on, not how many cuts. How many? I mean, it's.
Haven't we decided directionally where things are going?
I think, and
Josh?
so that's why the danger is if they reverse, because to Liz's point, to Steve's point, everyone is on one side of the boat, and that might be the right side of the boat, by the way. It's important to keep in mind the crowd's not always wrong. It's just that the crowd is wrong at the turn. We don't know where the
Why is this
direction
platform freezing up on me this
directionally,
right
I
now
think we
when
know
it
what's
shouldn't
going
be?
on.
I think the
Look,
government
I don't again.
sucks.
I talked to a guy. I talked to a guy 2 weeks ago. He's been on the sidelines since last January, and the reason is commercial real estate. Like he's worried about office real estate being. So I said, let me ask you a question. What do you do for a living? Oh, I'm a commercial real estate agent. You know what I mean? Like you're way too close to that, and you
This
think
is
that's
pathetic.
the whole story. That's the whole thing. No, that's one thing. Here are all these other things that you're unaware of because myopically you're waiting for SL Green to miss a bond payment. It's really important that we don't get too myopic.
That'd been $3,500 bucks.
Focused on one or two data points, and we just do a weight of evidence approach, close enough, directionally close enough.
Yeah, that's what I'm talking about. Liz, last word to you.
I think one of the most interesting things to watch in the first quarter of this year is if rates do come down on the short end of the curve as we get closer and closer to possible cuts, money is probably going to start flowing out of money market funds because they're no longer going to look quite.
So the reason why that was, I jumped on that real fast. Oh my. Is because just the headline. The market has been priced in at 6 rate cuts. 6. Which was overdone. That's what they say. I say it was irrational exuberance into the end of the year. And they've been very bullish, very bullish. I mean, it's hard to fight the bulls. So you get a a headline that says, well, don't count your chickens before they hatch. So they counted 6 rate cuts. And I said, maybe 1 or 2, 3 maybe. Depends on how we got to have results. It's speculation. Look at that, man. Right to the 200. 550, 6, this would have been a good trade. Now we might bounce off the 200 here, so get your calls ready. If this goes 6, there it is, 610. Almost 620. That'd have been $5,000 in 5 minutes. So look at the calls now. The 4785s off the 200. It just sucks that this platform is acting so damn goofy. Almost went to my phone. So we got the SPX 4785s at $1 off the 200 SMA with a tweezer bottom. Resistance, once you hit the 9 and you're new to trading, get out. There you go. Just like that. 2 minutes, $800. Tweezer bottom off the 200. And I'm glad he interrupted them too. Let that dude get his headline in. Jimmy's back in the old days again. Sneaky snake trading strategy, where I talk about chart patterns and moving averages and being in the now. Using the moving average as a resistance. So when to get in at a tweezer bottom, and you know when to get out early by hitting that 9 EMA. You wait all day here, and you could have made almost $6 grand in 9 minutes, 8 minutes. With $2,000. See it coming down, right? Your 9's a resistance level. It's a hard resistance when you're scalping. And you had a tweezer top. This is called an inverse head and shoulders. So if it holds this shoulder line, we'll come up and break the 9. And that really hurt my feelings when that platform froze up on me. It's just going, ugh. Come on, hurry up. See? It's acting like a freaking... I know I hit the T. No, I didn't. Yeah, I did too. I hit 2 T's. It took 10 seconds to put that other T in there. I think I don't know if a monitor would cause that kind of issue or not. It's very tempting to go out and buy a brand new monitor. A big one to put it right up here on top. And then I'd just have these 3 below it. She's trying to take your job from you? Oh my gosh. Puts on who? Are you serious? Oh, $6, yeah. I'm almost wanting to sing. We're going to see, we're going to hold the shoulder line. Boing. God, can you imagine I take... I get out at 190. I always cut myself short. I knew it was going to the 200. Deep breathing.
Cash now?
It's your money. Use it when you need it.
J.G. Wentworth is right. It's my money and I need it now.
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 If you have a structured settlement and you need cash now,
please send it to Washboardjim at 1-800-888-8778.
or an inability to work, call
If you have the inability to work, just sit down and watch Washboard Jim.
All of your questions answered.
I'll have all your questions answered.
There's no obligation.
No obligation.
My money, and I need it now.
It's your money. Use it when you need it.
Call 866-386-3102. 866-386-3102.
Thank you very much.
You were negative throughout much of last year, and here we are again. I'm trying to figure out why.
Well, to be fair, we were
God.
throughout much of the last
Put him up on a
years.
pedestal.
So net, it's not as bad as it might look. But you're right. We did not see, as many strategists didn't see last year coming, right? The recession that wasn't. And that held us into a more conservative position and didn't reap the benefits of especially that fourth quarter run up in stocks. But
Jimmy said it was all hogwash because we already had the recession. They redefined it.
Of economic and geopolitical, issues that we're still facing. But I guess we'd argue that whether or not there's a soft landing or a hard landing / recession, which is the current debate, that we see that as...
When I'm paying $5 for a head of lettuce, when I'm paying $22 for 2.5 pounds of hamburger, 3 pounds of hamburger, if I want a frickin' tomato, I got to pay $2.50 for a good-sized tomato. My grocery bill almost tripled.
What happens when the Fed is either engaged or not?
Fair enough, but to be fair, look back a little longer period. I've been in the business a little longer than 15 years, and if you go back, let's say to 1960, and you look at all of the
and rent's too damn high.
8 of them.
My rent went up $222 in 3 years.
1/3 of them, or 4 times, we hit a soft landing, and the 8 times that we did.
Gasoline went up $2 a gallon.
Very much like this recent scenario where rates rose fast and furious.
And these people, they don't buy food. They go out and eat. They don't put gas in their tank because they got a limo driving them around. They call Uber. Mike's good at that, aren't you, rich man Mike? I bet you called Uber today.
Yeah, stock market.
Hey, if we can envision this Goldilocks, immaculate disinflation scenario, which we don't buy into wholly because it's still a fairy tale, but
I'm headline driven, and I think that's what made that trade so good. And it's just a short, a few minutes, and you're done. You're in, you're out. And then the market reacts later to it, like a 3-day rule. And then they come and they yak about it. No, well, like they're doing right now. And then they bring this guy on.
For round numbers, let's say rates.
And all of them were talking recession.
12%
all year long.
12% capital appreciation on fixed income securities.
And we already had it.
Diversified bond portfolio plus the coupon. You're talking about 15, 17% in fixed income. A much safer play than the equity market. So that's why we're leaning that way at the margin.
But do you not believe the data? This is a serious question. Because the last reports that have come out would suggest we actually are in what you say is a fantasy, that being Goldilocks, that growth is going to hang in there, and inflation has already come down at a much faster clip than the Fed itself had expected. Many strategists, maybe yourself included, would be in that boat as well. So this Goldilocks scenario seems to be why stocks rallied from the end of October to the end of the year and are still, as I suggested at the top of our program today, not all that far away from.
The reason it rallied like it did is because all these goons were calling for a recession all year long. They were nervous, and the market was still in good shape, and we had the little pullback. And then once the Fed came out and said that he stopped, which I gave 3 weeks warning to get ready to run this market up. I can understand the squeeze. It's called a squeeze, a psychological squeeze. And then they overpriced it. They're never right. These guys are never right. Never. Usually behind the curve. They say the market predicts in advance, but they're always behind the curve. And they're questioning. Right now, they're questioning over and over themselves the same what was so easy to understand last year. You know, I think sometimes they need just someone from the street to tell them this because they're so complacent.
And so it's hard for us to believe that the labor market is going to remain resilient through all of this.
Just go. What's your reaction? Oh, forgive me. Finish your thought, Rich, please.
No, it's labor markets, jobs, Scott, generally the last shoe to drop, right, in an economic cycle. And so I doubt that this cycle is
none of these guys
so abnormal that we won't see some glitch in jobs.
What makes this so funny? None of them. And it was so easy to see it. Not a one of them did not see this double top, all-time high. They didn't see it. They didn't call it. None of them. They didn't call the. They were behind the curve when we hit the 200 on the weekly, which was too obvious. And I'm on the path. I'm not agreeing with Josh. It went, I agree with Josh. The momentum, he's catching up on the momentum, and I'm agreeing with that lady that we do need to consolidate a little bit. But now we've got earnings coming in, and now they're predicting that earnings ain't going to be that good. I think they're wrong. Again, that earnings are going to be better than expected. It just takes a little bit, just a 60-40 or a 55-45 earnings are positive and will continue the run into the election year. Big money doesn't care about the stimulus. They've saved a lot of that stimulus, and they're going to be calling out stimulus this, stimulus. They're going to try to bribe the votes with the stimulus because they've saved a lot of it. There's still $1 trillion or more out there that needs to be put down on the platter. The Recovery Act, or whatever they called it. $6 trillion printed in 3 years. I've seen the same thing happen during Obama. They were printing $89 billion a month for 3 years. $89 billion. And it's not, it's trickled down economics. The money's printed, they hand it over to the CEOs, and then it trickles down to the employees. And the CEOs pocket a big chunk of it. Did you hear about Biden, how he described his Bidenomics? He says his daddy, he was talking about trickle down economics. He said, well, it never trickled down on the kitchen table from his daddy. And that his plan will benefit the poor, the middle class, and the rich. it'll benefit the rich more than it'll benefit the middle class and the poor. They're given $7,500 just in EV credits for an EV car. And that, I don't know any poor people, I don't know any middle class people that are out buying electric cars. I just know people that have money, they'll go off. We don't need that credit, but it's going straight to the rich. So it's just, you just got to kind of understand that, and then you can, maybe I'm talking smack, but I don't know anybody that can afford a $60,000 car, personally. Maybe you all might. Yeah, that would have been a nice trade right there. It was still good, but shoot. Ain't it funny how it froze up all of a sudden? Very impressive.
50% off.
We're 15 out from the bell. Let's get back to Pippa Stevens now. Pippa?
Hey, Scott, Gilead Sciences is under pressure after a California state appeals court ruled that the drug maker can face negligence claims over delays in the development of HIV medicines. Those shares down around 1.75%. And Intuitive Surgical is at its highest level in over 2 years after the robotic surgery manufacturer issued strong preliminary results for its fourth quarter. The company saw procedures using its devices rise more than 20% year over year during the period,
ISRG.
and expects an increase of 13 to 16% in 2024. Those shares up about 10.2%. Scott?
All right, good stuff, Pippa. Thank you, Pippa Stevens. Coming up, CrowdStrike climbing to its highest level in more than 2 years, while Wall Street is turning even more bullish today. When Closing Bell comes right back.
Gosh. CrowdStrike. There you go. Triple top. So what happens at a triple top? We're going to buy a put. I'm going to swing this put tomorrow. Take the body of that candle and rub it up against the body of that. Oh gosh, we're going to take it right there. 267.52. So look at the put. I'm going to swing the put here. I could be wrong, but I'm going to call this triple top out. $285.50. January 19. Well, let's just make it a day trade. 280 put. Three white soldiers. I can afford this loss if I get one. I'll just get one. $280.
NBC.
Straight ahead housing on a hot streak. A number of big names in that sector hitting record highs today. We're going to reveal the stocks and what's behind the recent surge when we take you inside the market zone.
What's that? That lithium stock is terrible. Oh my. No way. Are you telling me I could have made 10 grand on that trade? Ricky, you got your mic on. Thank you, buddy. LTHM. Man. It's funny how the market gets it wrong all the time. See, it's speculation. They say the market predicts everything, and they're full of it. I mean, this market, the way the market moves, and they've been wrong year after year after year. Sometimes I find it best to be the devil's advocate on almost everything they say.
All right, we're now in the closing bell market zone. CBC senior markets commentator Mike Santoli here to break down the crucial moments of the trading day. Josh Brown is back to share how he is playing CrowdStrike and Toast. Both are on the move today thanks to...
Especially if you're at all-time highs. Now, I'm going to suggest to anybody, I don't know if anybody in here, but I find it best for me, and I've been trading 20 years, to trade one stock at a time. This market's so volatile, you'll get caught up. Just one stock at a time. You'll save yourself tons of money. And if it doesn't work, you get out and go to a new one. Or you'll find yourself caught up. You can't predict, unless we're at a low. But when you're at a resistance high, it makes no sense to try to beat the odds. I can't say it more enough. I mean, down here, I say buy, 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 buy. I mean, load it up, go long. When you're at a resistance all-time high, all-time, and you got candles that look like this, when you got 3 candles that look like this, it's called a triple top. And they're pumping this market to break this triple top. And the triple top, type it in and read what it tells you. Triple top, what is it? How's it work? A triple top, a technical chart pattern signaling that the asset is no longer rallying and that lower prices are on its way. I did a painting for this girl. I'm going to show you what I did here. If I can find it. I did this painting. I call it the triple top. I'm going to point it to you out over here on YouTube. I call it the triple top. It's a lady standing on a peak with 3 balloons, and you got a triple top over here. She's daydreaming to get over to that triple top, but she's got to cross this ocean to get there. In that ocean, there's sharks, piranhas, whales, leeches, stingrays, jellyfish that can sting you while that triple top starts to consolidate. So she keeps wishing that she can get over to that triple top, and she loses a balloon. And she's daydreaming that she wants to get to that triple top and break it, but she can't get there. So that's what I call my triple top. That painting's for sale if anybody wants to buy it.
Like that's why this is hard. It's not easy. It's
Love you sticking around. Thank you for sticking around for both of those. Diana Olick, speaking of chasing, home builders new highs.
Yeah, but I'm going to start with Home Depot, home improvement. The stock really took off today.
We can consolidate this triple top 3-year high for all year and never break it. We're going to know for sure Friday if we're going to break that triple top. Friday is the only day. Friday, I don't care about the rest of the earnings. Friday, when them banks come out, CPI, I think it's Friday, ain't it? Or the PPI.
How's housing's doing nothing. Mortgage rates are elevated, and these stocks been ripping.
Horton, Pulte, and NVR all at highs today. Now, the overall group is sort of flagged a little bit, but it's just up so much. It's just kind of working with house money. Exactly.
So that's it. Sometimes it pays here to sit around and occupy yourself. You don't have to trade everything. Just wait for the right. There's a trade to be made every day. And if you're patient enough, instead of what I do, you know, in and out, and every day there's a trade to be made. It's usually a headline or something, but every day there's a trade to be made, but you have to sit here 8 hours a day to watch and wait for it. So today, if I would have been a little bit smarter, I knew it was going to the 200. I could have had probably it would have been a 11,000, and I made this $800 one trade right here. And here's your setup right here. Look at this. That's called a dragonfly. That one candle, this is on the 1 minute time frame. You're not going to see it on a 5 minute. What you see on a 5 minute is a tweezer bottom. So let's clean this up. Now, I've had people not want to trade with me because I use a 1 minute time frame. They just don't want to take the time to study it. So here you got a 5 minute, which I'm learning to trade now. Tweezer bottom. Then on a 1 minute, spot on. That would have worked. And who knows if I would even took that trade right then. So I could have probably got in it a little bit later, be honest with you. Or I would have got in, I would have got in here. If I'd have caught that body, that'd have been a tweezer bottom on the 1 minute too. But I would definitely, that would have caught my eye. A dragonfly candles, that's a doji. Type in dragonfly, or type in candlestick pattern, but I'm kind of sad. If I'd have got that 11,000 today, I would have went out and bought me a frickin' Cybertruck. So when I'm looking to learn, you got to look for that candle that breaks out of that channel, that doji. Dragonfly doji. So you got the snake, and she consolidates to the right. She breaks out of the channel, and that dragonfly. Dragonfly doji candlestick. The candlestick pattern that signals a positive price reversal. Dragonfly. Snake, breakout, pull back, dragonfly. Boom, long leg doji continuation. Spinning top doji. Another hammer. That's called a gravestone. At the top, that's a reversal pattern. Now, if this was down here at the bottom, it would be an upside tick. So you've got to run, you get a gravestone candlestick, boom, she pulls back. Just the opposite of a dragonfly. Here's a good example. You got the dragonfly, boom, gravestone, boom. That'll change your world if you just learn 4 candlesticks. Or even 3. Gravestone doji, long leg doji, and a dragonfly. So type in bullish, candlestick, candle pattern. Get you some kind of tool to put up on your desk, a map right in front of your monitor, and look for them reversal candlesticks. This is what got me bullish on the Harmony when I got JP Morgan. This is a bullish engulfing candle. These are coming out of the snake. You got the snake, 3 black crows with a doji. Tweezer bottom. It's called a morning star. Well, that's it. I'm going to go ahead and get on out of here. But learning these candlesticks will change your whole world if you want to buy the bottom of a stock. And it don't have to be on the 1 minute time frame. It can be on the daily. I can't stand it when it's over there like that. We've got a hammer and a doji from 200 to 207. We've got snake with a dragonfly, runs all the way to 220. Got a snake with a hammer and a doji. Boom. Snake with a dragonfly. And that's on the daily. Weekly, we got a tweezer bottom. Tweezer bottom. We got a hammer. Boom. Boom. Tesla. These are like swing trading. We got the 200 EMA with a hammer. A hammer. We had big 2 engulfing candles. Then we got a hammer, hammer, boom. We got pull back here. We got a double top. Pulls back. We got a dragonfly. Boom. Hammer. Boom. Dragonfly. Boom. after a sell-off. That's weekly. Let's look at Pfizer. Now we got Pfizer reversing. PFE. Or what? Pfizer. P. Yeah, I can't think of it. PFE's right. So we got Inside Harmony. And they've been talking about how cheap this stock is right now. So we got a hammer with an Inside Harmony. Boom. The thing's going to take off. We have a snake. We have a dragonfly or gravestone. And the next candle came in, bounced off the 300, I think this is, the 200 EMA with a tweezer bottom with a spinning top. We've got a tweezer bottom. Boom. Now this here I would have maybe spotted as a reversal or a consolidation, but I probably wouldn't have put the put on it until it broke down below this here body here. And then that old resistance became support. You got a spinning top, consolidated for a few weeks. This Pfizer is probably a bad choice. What's one that? Lemonade, LMND. Spinning top. Boom. Gravestone. Boom. A doji consolidated. FSR. Now FSR is taking a beating. And the reason why FSR is taking a beating is because they're about ready to go bankrupt. So you don't want to trade a stock. You want to look at the fundamentals. Do a little research. So this thing is going to go under $1. Then they're going to get a delisting notice. And then they're going to have a reversal split to try to bring it up above $1. So I wouldn't trade this right now. Just the fact that I know that they're getting very low on cash. Now CrowdStrike, pumping that with NVIDIA. This I already talked about NVIDIA. The chart, Darvis box, for about 7 to 8 months. So I'm gonna get on out of here. Quit talking about stocks. Wish everybody a great day. Go back and watch some of them. Every video that I do, every short video is a learning lesson. It's all about chart patterns, moving averages, and being in the now. And I'm fried too. That last trade kind of got me down. I mean, it's real good money for that, but I mean, it could have been very good money. Thousands. In minutes. So I'm learning a new strategy here too. It's called the TTM Pro 2 with black dots. I don't know how much I'm going to like it. But we'll find out.